Hello, hi guys. This is CA Balakrishna from lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. So, I have compiled all the case scenario based MCQs for CA Inter Audit. So, all past examination case scenario based MCQs, all RTPs, MTPs, and study material, whatever ICAI sources of case scenario based MCQs are there, all that I have compiled for CA Inter Audit into single PDF. So, this is that PDF which you are seeing it. And not only just compiling all these case scenario based MCQs, I have also made a video discussing all these case scenario based MCQs. There are around 80 plus case scenario based MCQs. I have discussed all that case scenario based MCQs in a single video which you are going to watch now. And before watching this video, I'll guide you how to get best benefit out of this particular video. First of all, this PDF which you are seeing over here, this contains all the case scenario based MCQs of study material, and RTPs till May 2026, MTPs till May 2026, and past examination questions till Jan 2026. Sir, what if we are writing our examination in 2027, 2028? Then how? I will tell you. I will be updating this PDF for every attempt. First of all, you can get this PDF free of cost from my Telegram channel. So you can go to my Telegram channel, Audit by CA Balakrishna, and from that Telegram channel, you can download this complete case scenario based MCQs free of cost. And if you are writing your examination in further attempts later on, I will be updating this PDF for upcoming attempts also. Whenever new case scenario based MCQs are issued by ICAI, I will update them in this PDF, and I will post it in the same Telegram channel. So from this Telegram channel, you can get updated PDF version of this particular document. Got it? So that is where you need to get this particular document. And coming to this discussion video of case scenario based MCQs, what we will be doing is, we will not be reading a complete case scenario. Lot of time will be wasted if we do that. So what we will do is, we will come from MCQ side. We will first of all read the question, and for that question there will be some MCQs which can be answered without reading case scenario. Such a type of MCQs will be directly answering. And after reading MCQ, if we feel that some content in the case scenario has to be discussed, then we go to the case scenario and we will discuss that particular content and solve the MCQs. That is how we will be going forward in this particular video. Okay. And one more thing, I told you that there are 80 plus case scenarios, right? So for each and every case scenario, I will be giving a timestamp also. So by clicking that timestamp, you can go to the relevant case scenario and you can watch that particular explanation. Okay. Yes. Next, you can find this particular video on my YouTube channel. There is a playlist. If you go to the playlist tab, under playlist there will be a playlist by name CA Inter Audit Marathon and other resources. Like this, you will find a playlist. So in future, if any additional case scenarios have been added, I will record the video and I will place in this playlist only. Understanding? So if you see, this playlist contains not only discussion of case scenario based MCQs, the concept marathon videos. I have already recorded complete concept explanation of CA Inter Audit through summary chart books. So through that summary chart books, I have discussed the concept. That marathon videos you will find in this playlist only. And that summary chart book, it is a very beautiful chart book. Once if you watch that video, you will get to know how useful that summary chart book will be. And all the question and answers, there are 400 plus questions. 400 plus question and answers in the question bank. I have covered all study material, past examination, RTP, MTP, all I have covered, and I have discussed that questions also. That video also I have kept in this playlist only. Now another video is getting added to this playlist, which is discussion of case scenario based MCQ. Got it? So now you have in this playlist with respect to CA Inter Audit concept discussion marathon, question and answer discussion marathon, and also case scenario based MCQ discussion marathon. All these you can find in this single playlist. Got it? And the question bank also I have given free of cost. The question bank PDF soft copy I have shared in my Telegram channel. I have shown just now in the Telegram channel. You can get question bank also. Got it? Yes, sir. So this is about the case scenario based discussion and other resources that you can that you can use from my YouTube channel. Now you can start watching case scenario discussions one by one. All the best. First case scenario. So what we'll be doing is, we will not be reading complete case scenario. What we will do is, we will read the MCQ, and whatever the content is relevant to that MCQ in the case scenario, we will read that and we will solve the MCQ. Got it? So while answering case scenario based MCQ, the trick is, you should not start reading the complete case scenario. First of all, you should read the MCQs, what they are asking in the MCQs, that you have to read. Based on that, you have to identify where you can find it in the case scenario based MCQ. Got it? Yes. So let us start reading the MCQ first. So if you observe here in the index in the index also I have given clearly case scenario based MCQ booklet, how many case scenarios are there and what are their page numbers. Similarly, past exam, ICAI study material, RTPs, MTPs, like that, clear indication I have given in the index, so that it doesn't create any confusion to you. Now MCQ number 1. While verifying inventory as asked by engagement partner, which specific assertion can be best verified by following the specific audit procedure considered appropriate by Mr. Rishabh. So in the case scenario, it seems Mr. Rishabh is performing a particular procedure. By performing that procedure, which assertion can be verified is what they are asking. First of all, we will read the content relevant to that MCQ in the case scenario. If you observe here this point, during the audit, one of the audit team members, Mr. Rishabh, was asked by engagement partner to verify the ownership possession of inventories held by the company. So the management has asked, sorry, engagement partner has asked to verify ownership assertion with respect to inventory. Now to verify such assertion, Mr. Rishabh asked the concerned official of company to make arrangements for attendance of audit team at physical inventory counting. Now by attending at physical inventory counting, can you verify ownership assertion? Is it possible? No, it is not possible. Then by attending at physical inventory verification, which assertion can be addressed? You can address existence and condition of inventory, correct or not? Whether inventory is actually in existence and what is the condition of that inventory, that assertion can be addressed by attending at the physical inventory count, correct or not? So by performing the procedure that Rishabh has chosen, you can verify existence and condition assertion. Option B. Got it? Yes. This is how you have to solve case scenario based MCQs. Next, question number 2. While selecting sample for verification of creditors, which method of sampling has been applied by Miss Soni? Let us see what Miss Soni has done first of all. So this point, for deciding for deciding sample, she took the sampling interval of every 11th creditor balance, and in this way created a sample size of 50 records balance for the purpose of audit. So every 11th item she has selected, it seems. First of all, there are 550 creditors in the population. Population size is 550, and sample size she selected is 50. Sample size is 50. So what is the sampling interval? 550 divided by 50, so it becomes 11. So every 11th item has been selected by her. They are saying that every 11th criteria has been selected. So in which method you will follow this? In the interval sampling, correct or not? Another name for interval sampling is, what is another name for interval sampling? Once think. So options they have given: stratified sampling, haphazard sampling, systematic sampling, simple random sampling. Of these four, what is that method? Interval sampling, you know. Another name for interval sampling is systematic sampling. So correct option is option C. Next, what is the best course of action to be taken by Mr. Rishabh for verifying the assertion with respect to inventory of company as asked by engagement partner? If you see in the case scenario with respect to inventory, what they are saying, Miss Sony, who had a different point of view for such a situation. Basically, in the case scenario for inventory verification, engagement partner has asked to verify ownership. For verifying ownership of inventory, what procedure you can perform? Miss Sony is suggesting that for verifying ownership of inventory, according to her, correct course of action in this regard is that Mr. Rishabh should verify purchase requisition, nothing but purchase order, receiving reports, vendor invoices. See here, purchase requisition means from the production department, request would have gone to purchase department for the purpose of a purchase of inventory. That is known as purchase requisition. Once purchase requisition is sent, purchase department will prepare a purchase order. Understanding? So Miss Sony is saying that Mr. Rishabh should verify all these documentation, receiving reports, vendor invoices, inventory records, payment file, invoices, all these. By verifying all these things, will you get, or can you address the assertion related to ownership? Yes, you can address the assertion related to ownership by verifying invoices, purchase bills, purchase order, all these documents. So can you say that Mr. Rishabh should follow the procedure suggested by Miss Sony? Yes. Let us see the options that are there. Mr. Rishabh should attend physical inventory count as the only audit procedure. No, by attending at physical inventory count, you will address assertion related to existence. Mr. Rishabh should agree with Miss Sony and follow the course of action as suggested by her. Yes, option B is correct. Next, question number 4. With respect to verification of share capital balance of the company, which of the following is most appropriate? Let us read fourth MCQ, right, with respect to verification of share capital. While verifying the share capital, there has been no change in the share capital, it seems. Ms. Sony was of the view that since there has been no change in the share capital of the company, audit team is not required to obtain any evidence with respect to share capital balance. However, Mr. Rishabh opined that they should obtain audit evidence even if there is no change in the company's share capital during the year. Yes, even if there is no change in the share capital during the year, you have to obtain audit evidence. According to him, such evidence can be a written confirmation from accounts manager, it seems. So if there is no change in the share capital, you will obtain written confirmation from accounts manager or company secretary. From company secretary you have to obtain. So what Mr. Rishabh saying is 50% correct, 50% wrong. He is saying that even if there is no change, you have to obtain audit evidence. Yes, that is correct. But audit evidence is written confirmation from the company secretary, not from the accounts manager. Let's see what are the options. Point of view of Miss Sony is correct. No, it's not correct. Point of view of Mr. Rishabh is correct. Only to some extent it is correct. So this is also wrong. Point of view of Mr. Rishabh is partly correct, as the written confirmation should be obtained from the company secretary. So option number C is correct. Next, question number 5. Whether non-acceptance of written representation by Mr. Rishabh is correct. What written representation that is related to? We need to first of all read the content. So, Mr. Rishabh did not accept the representation given by the management, as the same contained a qualifying language to the effect that representations are made to the best of its knowledge and belief, which according to Mr. Rishabh was not reasonable to accept. So in the written representation given by the management, it seems they have used the words to the best of its knowledge and belief. Since they have used this word to the best of their knowledge and belief, Mr. Rishabh is saying that this wording should not be used by the management, so I will not accept this written representation. Is Mr. Rishabh correct? The answer is no, he is not correct. Management can use this kind of qualifying terminology in its written representation, and auditor can accept such written representation provided auditor is satisfied that management has given all the evidences with respect to all the assertions. Understanding? So let us read the options. The non-acceptance of written representation by Mr. Rishabh is not correct. Yes, as the management of company has the sole discretion to decide as to which language is used or what limitations are imposed in the written representation provided to the auditor. No, they are not having sole discretion. Auditor should also be convinced with that. So you cannot say first option is correct. This is only 50% correct. Next, non-acceptance of written representation by Mr. Rishabh is correct. No. Non-acceptance of written representation by Mr. Rishabh is correct. No. Non-acceptance of written representation by Mr. Rishabh is not correct, as it is reasonable for the auditor to accept such a qualifying language if the auditor is satisfied that representations are being by those appropriate responsibilities and knowledge of the matters included in the representation. So the reasoning is, the correct reasoning is given in option D, but in option A the reason that has been given is not correct. So option D is correct answer. If auditor feels that management is saying correct only, then he can accept. Management is not having sole discretion, that means however it wanted it can use the wordings without thinking about the auditor. That is not the correct reasoning. Okay, that is what being said by option A, so it is wrong answer. Next, question number 6. Whether view of Mrs. Soni regarding assembly of a final audit file is correct. Let's see what is her view first of all. So first is MCQ, this is the point. According to Miss Soni, only changes of administrative nature can be made, like deleting superseded documentation, sorting, collating, cross-referencing working papers. Yes, only changes that are of administrative nature can be made to the audit documentation after completing the audit. And changes like recalculation of depreciation, these kind of changes should not be made during such a final assembly process. Yes, the view of Miss Soni is correct. You have to select that particular option which says view of Miss Soni is correct. Yes, so option B, that is case scenario number 1. Moving to case scenario number 2. So first question, whether the view of Mudit regarding obtaining understanding of client business is correct. First of all, let us see what is the view of Mr. Mudit. So they are saying Mudit showed no inclination towards understanding the business and business environment of the company. That means he has not shown any interest in understanding the business and business environment of the company. He was of the view that as a member of the audit team, he needs to obtain understanding about audit procedures to be performed during the course of audit and not about the client's business. Is view of Mr. Mudit correct? No. Being an auditor, you should obtain understanding of business of the entity before starting the audit. So what Mr. Mudit saying here is not correct. So option that says this point needs to be selected. The view of Mr. Mudit is correct? No, not correct. View of Mr. Mudit is not correct because while conducting an audit, the understanding of business and business environment of the client whose audit is to be conducted is very important. So option B is correct option. Next, second MCQ. Which type of confirmation request Rohit decided to send the debtors for verification of balances of trade receivables? Let's read the point. He further decides to request to third party in the request letters to reply positively whether balance in their books tallies with the balance mentioned in the request letters. So here the wordings of the auditor in the confirmation letter are that he is asking the confirming party to reply in both the situations, whether they agree or don't agree. In both the situations you reply me, like that he is saying. So this is a positive confirmation request or negative confirmation request? Of course, positive confirmation request. So option B, positive confirmation request. Next, question number 3. Which sample selection methods has been adopted by Rohit while verifying the loans and advances given by the company? Let's see. Rohit selected sample for checking without following any structured approach. He did not use any structured approach. In which method you will not use any structured approach? Nothing but haphazard sampling. In haphazard sampling, you will not use any structured approach, though he made sure to avoid any conscious biasness or predictability. So, haphazard sampling, yeah, option C. Next, question number 4. While verifying the inventory of the client company, which assertion is being verified by Mudit? Let's see. Further, with respect to inventory of company, Mudit performed the audit procedures to verify that any inventory balance as at the year end does not include any element of next financial year's inventory. Nothing but he is verifying cut-off assertion. Inventory of only current year is included in the current year. Inventory that is purchased in the next year is not included in the current year. So he is verifying cut-off assertion by his procedure. So option A. Next, MCQ 5. With respect to fixed assets, which assertion that does Mudit want to check? Fixed asset. He asked for the title deeds with respect to the building owned by the company and the purchase bills for assets purchased by the company. So by verifying purchase bills, by verifying title deeds, you will check ownership of the asset. Nothing but ownership assertion you are addressing. The same thing you need to answer. Nothing but rights and obligation assertion. Ownership, nothing but the technical name for that is rights and obligation assertion. Option C. So that is case scenario 2. Next, moving to case scenario 3. First MCQ. Is the view of Mr. Sumit with respect to development of audit program correct? Let us read the relevant point. Mr. Sumit was of the view that one single audit program can be developed for all the 4 clients operating in different industries. Can you develop one audit program and use that same audit program for all the clients? No, you have to customize your audit program. So view of Mr. Sumit is not correct. It should be either option B or option D. Let us read. No, the view of Mr. Sumit is not correct, as all the 4 clients operate in different industries and evolving one audit program for all business is not practicable. Yes, this option looks good. Let us also read option D. No, the view of Mr. Sumit is not correct, as development of audit program is not the responsibility of audit team. This is completely wrong. So option B is the correct option. Next, second question. With respect to Saraswati Limited, Miss Reshu was asked by CA Ajay to perform which kind of audit procedures? We have to read the content. So, for second MCQ, with respect to one of the clients, namely Saraswati Limited, a labor intensive company, CA Ajay asked CA Reshu to compare amount of wages paid by the company in the current year and last year. Nothing but a trend analysis. Trend analysis is part of analytical procedure. So here she is performing substantive analytical procedure. Option A. Next, question number 3. Whether understanding of Mr. Saurabh regarding the passing of special resolution is correct. Let us read the content. While verifying the shares issue transaction of one client, namely Lakshman Limited, CA Ratio found that company has issued sweaty equity shares during the year under audit. She asked one of the article assistants, Mr. Shaurab, to further verify whether the relevant provisions of the Companies Act 2013 have been complied by the company in this regard. Also, with respect to Sarthak Limited, there was a reduction of share capital during the year. Mr. Shaurab was asked by the engagement partner to verify compliance of relevant provisions of Companies Act. See, with respect to issue of sweat equity shares and also with respect to reduction of share capital, in both the situations, special resolution is required. So, the view of Mr. Saurabh regarding requirement of special resolution is correct only. So, first two options says partly correct, partly correct. So, these two are wrong. Next option, understanding of Mr. Shaurabh is correct as special resolution is required in case of issue of sweat equity shares by the company and also for reduction of share capital. Yes, option number C is the correct option. Next, question number 4. Is the view of Mr. Sumit correct with respect to using and relying on the work of internal audit team of Rintex Limited? Let's see. Let's read the content related to 4th MCQ. Mr. Sumit was of the view that statutory audit team can use and rely on the work of internal auditors of the company, and as such there is no requirement for the statutory audit team to perform audit procedures again, as internal audit team must have verified the financial transactions of company. Is that correct? He is saying that since internal audit department, internal auditor has already verified financial transactions, statutory auditor need not verify them. He can blindly rely on the work of internal auditor, like that he is saying. And statutory auditor can push the responsibility onto internal auditor. Is that possible? No. You can use the work of internal auditor, but for the opinion that you are giving, you only is responsible. As per SA 610, before deciding to use the work of internal auditor, you have to check certain things, correct or not. You cannot just blindly rely on his work and push responsibility on him. Even though you have used his work, responsibility for your opinion lies on you only. Got it? Yes. So here view of this Sumit is not correct. Option A says yes. No, this is not correct. No, the view of Mr. Sumit is not correct as a statutory audit team cannot use the work. No, statutory audit team can use the work. This is not correct. They are saying statutory auditor cannot completely use the work of internal audit department. That is completely wrong. Next, option C says no. The view of Mr. Sumit is not correct as the statutory auditor has sole responsibility for the audit opinion expressed. So option C is the correct option. Next, question number 5. Which kind of risk is noticed by Mr. Sumit with respect to entries related to traveling expenses entered into the accounting system of Rintex Limited? Let's see. Mr. Sumit noticed that company has implemented a system whereby entries related to expenses incurred during the year can be entered into the accounting system by authorized personnel only. That means they have implemented a control. Okay. However, with respect to traveling expenses, which constituted about 30% of total expenses, entries were made by employees who were not authorized to make such entries. That means control has failed with respect to these travel expenses. So, this risk is called as control risk. Correct or not? Yes. So, option C, control risk. Next, moving to case scenario number 4. Question number 1. The engagement team members are not able to take decision on sending a negative confirmation request to some entities described in case scenario. Which of the following statements is in accordance with the standards on auditing? Let's see. It seems they are not able to send negative confirmation request. See, the team is considering to send negative confirmation request as sole substantive procedure to some business entities representing trade receivables appearing in the financial statements of the company. Company had made sales to these business entities in January 2024. Such business entities are few and have quite large balances. See, in order to send a negative confirmation request, one of the situation that should be present is the population should be of a huge number and small homogeneous amounts. Only then you can send negative confirmation request. But here the situation is completely opposite. Only few number of debtors are few number of debtors are there, but their value is large. In this situation you have to use a positive confirmation request but not a negative confirmation request, correct? The same thing you need to say. So they have given 4 options and asking you to identify the best option. See, it would be appropriate for engagement team to send negative confirmation request or no? In the current scenario it is not appropriate to send negative confirmation request. Next, it would be inappropriate for engagement team to send negative confirmation request to the business entities. Yes, this option is correct only. Let us also read further options and select the best option. Sending a negative confirmation request depends upon auditor's professional judgment and standards on auditing do not spell out any confirmation requirements in this respect or no. If you observe SA 505 specifically provides 4 situations and says that until and unless these 4 things are present, you should not use a negative confirmation request. So auditing standards are saying certain situations, certain points for sending negative confirmation request. So option C is not correct. Business entities are more likely to respond in case of a disagreement. Therefore, sending a negative confirmation request always provides better qualitative audit evidence. Or no, this is also wrong. So option B is the correct option. Next, question number 2. Which of the planned audit procedure pertaining to trade receivable described in the case scenario is or not related to verification of completeness assertion? So they have given 4 procedures and they are asking you to identify which of these procedure is not performed to verify completeness assertion. Okay, first one, verification of invoices issued during the last 7 days of a financial year 23-24 to verify that goods have been dispatched by the company. Yes, this you will use for completeness assertion. This is related to completeness assertion only. Selection of a few invoices from aging report of the month March 2024 for verification of correctness of billed amounts. This is also related to completeness, whether complete debtors have been included or not. For that you are selecting some sample of debtors and checking their amounts values from the invoices. That is also related to completeness. Preparation of schedule of movement of bad debts. This is not related to completeness. You will prepare schedule of movement of bad debts for the purpose of calculation of provision. That means for the purpose of valuation assertion you will use this 3rd procedure but not for completeness assertion. So 3rd procedure you will not use for completeness assertion. Next, review of the process of providing discounts to ensure that it is in accordance with company policy. This is also related to completeness assertion only. So only 3rd procedure is not used for completeness assertion. Let's see, 2 only, 2 and 3, 3 only. Option C. Next, guide team member yes by selecting the correct option with respect to share option outstanding account. This we need not read the case scenario, just by reading the options we can identify. So share option outstanding account, it is required to be classified under current liabilities. Is share option outstanding account current liability? No, it is classified as the reserves and surplus. Understanding? share option outstanding is not current liability, it is a reserves and surplus. Why it is reserves and surplus? See, share option outstanding account, how it gets created? When you are giving, let's say for example, employee stock option plan, you are telling to the employee that if you stay with me for 5 years, I will give you at the end of fifth year an option to purchase my shares at a discounted price. Let's say you are giving a discount of some 100 rupees per share. Like this, there is some 10,000 shares you have given as employee stock option plan. Now 10,000 multiplied by 100, it is 10 lakh rupees divided by 5 years. So you are incurring an expenditure of 10 lakh for this 5 years. Now you have to bifurcate this 10 lakhs for each and every year. So 2 lakhs per year. Now you will charge in your books of accounts 2 lakhs as expenditure for each and every year. So the entry will be like this: ESOP expenditure debit 2 lakhs, and where you will credit it, you will credit it to share option outstanding account 2 lakh. So like this, you will accumulate for 5 years. At the end of 5 year, if he exercises this option, you will transfer this ESOP outstanding account to share capital. Till the time it is transferred to share capital, you will keep it under reserves and surplus. Understanding? So second option says shareholders fund share capital or no, it is required to be classified under shareholder fund under reserves and surplus. Yes, further it is to be classified separately as such under reserves and surplus. So option C is the correct option. Option D again, this capital reserve, no separate disclosure, all this is not the correct reasoning. Option C is the correct reasoning. Next, let me check. Yes. Next, question number 4. Which of the planned audit procedure in relation to inventories described in the case scenario is or not in the nature of analytical procedure? So it seems they have given certain procedures and they are asking you to identify which is not related to analytical procedure. Let's see. Comparison of inventory turnover ratio of current period with previous year, nothing but ratio analysis. Ratio analysis is part of analytical procedure only. Vertical analysis of current period with previous year, this is also analytical procedure only. Comparison of budgetary expectations vis-a-vis actual, this is also analytical procedure only. Performing purchase and sales cutoff test, this is not a analytical procedure. So option 4, procedure number 4. So option D. Next, moving to case scenario 5. Question number 1. Whether audit team is correct in excluding the planned review of petty cash from the audit program. Let's see. In his opinion, in his means in the opinion of auditor, planned review of petty cash was unnecessary due to company's policy of limiting cash transactions. So company is having a policy of limiting, that means reducing cash transaction as much as possible. Thus review procedure was removed from the audit program. If company is very much careful about not doing a cash transaction, then there is no use of verifying petty cash book, because not much transactions will be there in that petty cash book. So the action of the auditor of not reviewing petty cash is correct only, right? Yes, sir. So option A says no, it is not correct. So this is not the correct answer. Yes, as the company's internal control and policy of limiting cash transaction reduce the need for petty cash review in audit program. Yes, option B is correct option. Next, question number 2. Whether decision of auditor to send the confirmation request to creditors of the company as on 20th March is justified. Let's see. To verify balances of trade payables, auditor decided to send the external confirmation request to creditors of the company. These requests were made to verify the balances as on 20th March 2024, a date chosen deliberately to ensure the accuracy and completeness of the liabilities, free from any influence or prior knowledge of management. This approach was taken to maintain integrity of confirmation process. Now, should you send balance confirmation only as on 31st March, or can you select a date that is nearer to the year end? You can select a date that is nearer to the year end. It is not that you have to send as on 31st March only. So you need to give the same reasoning. So whatever the auditor has done is correct only. So the correct answer can be either A or C. B and D you can eliminate completely because they are saying no. Yes, decision of auditor is correct, as auditor is allowed to choose any date reasonably close to the balance sheet date for confirmation, and the select date helps to ensure the accuracy of liabilities without consultation from the management. Okay, we'll also read option C. Yes, decision of auditor is correct, as the auditor is allowed to choose any date which is reasonably close to the balance sheet date for confirmation, and the selected date should be decided in consultation with management. No, whichever date you wanted you can decide. You need not take permission or you need not consult with the management. Option C is wrong, option A is correct. Next, question number 3. Which of the following is not a appropriate procedure to verify the balances for Mrs. Keshav Traders and Mrs. Amrit Distributors? Let's see. So Keshav Traders and Mrs. Amrit Distributors did not respond to confirmation request, it seems. You have sent external confirmation, and for that external confirmation, these two people, Keshav and Amrit, these two people, they haven't responded. If they haven't responded for external confirmation, you need to perform alternate audit procedures, correct? So, of the following alternate audit procedures, which one should not be done by you, or which one should not be selected by you, is what they are asking. See, which of the following is not appropriate procedure to perform? First, breaking down the balance into individual transactions and making sure they actually happened. Yes, this alternate procedure you can perform. Checking payments made after the year end to vendors who did not respond to confirmation request. Yes, you can check the subsequent payments that have been made after 31st March. That will provide you some evidence. Comparing balance to original invoices of the vendors. Yes, you can check the invoice amount and the balance shown in the books of accounts. That alternate procedure also you can perform. Request written representation from management confirming that all payables are accurately recorded and complete. See, you cannot just rely on the management representation, understanding. Along with this, you have to perform any of these above, understanding. So option D alone you cannot perform, understanding. So option D is the correct option for this MCQ. Next, question number 4. In the given case, is there any requirement for separate disclosure of PPE revaluation? Let's see what has happened. Furthermore, auditor noted that in the financial year 23-24, company's property, plant and equipment was revalued, resulting in an increase of 5% in the net carrying value of its machinery from 10 lakhs to 10.5 lakhs. See, if the change is just 5%, you need not make any separate disclosure or separate like separate note is not required in the financial statements. If the change is 10% or more, then separate disclosure is required. So no, separate disclosure is not required as the change in carrying value is less than 10%. Option B is correct. Next, question number 5. What is your perspective on management's view regarding the audit requirement of LLP? See, for LLP, if turnover is less than 40 lakhs and contribution is less than 25 lakhs, in such a situation, if these two conditions are satisfied, audit is not required. You need to identify that only from the given options. LLP is always required to conduct audit if either the turnover exceeds 40 lakhs or the capital contribution exceeds 25 lakhs. So option B is correct option. Next, moving to case scenario 6, MCQ number 1. Is the provision made for AB Industries, which is in the category of doubtful one, Is it appropriate? First of all, we'll see how much is the amount outstanding for AB Industries. So this is AB Industries, which is in doubtful 1 category. Doubtful 1 means for secured portion 25%, unsecured portion 100%, right? So outstanding amount as on 31st March is 10 lakh it seems, and it is fully secured. Since it is fully secured, you need to create a provision of 25%. That means 2.5 lakh has to be created, but they have created 5 lakhs as the provision. So you need to say that the provision has not been created appropriately. So option C, no, as the required provision is 2.5 lakhs, 25% of 10 lakhs should be created. You might think that, sir, actual provision required is 2.5 lakhs, but they have created more than the required provision. That is fine only, you might think, but no, you have to create exact provision. Understanding, it should not be more nor it should be less. Getting it? Even if it is more also, your answer should say that no, correct provision has not been created. Understanding? Yes. So you might confuse with option A or option C. Option A says yes, as it exceeds the required 25% for secured assets. It should not exceed 25%, or it should not be less than 25%. Exactly 25% you have to create. Even if you have created more than 25%, it will be treated that you have created wrong provision. Got it? Yes, sir. So option C is the correct option. Next, question number 2. Considering the housing loan and car loan availed by borrower Shyam, which of the following statements is appropriate? Let us see those two loans here. So a borrower, Mr. Shyam, has availed following two loans from the branch. First loan is a housing loan. EMIs are overdue for 120 days as on 31st March. So housing loan has turned into NPA. Now car loan EMIs are overdue for 60 days as on 31st March 2024. 60 days means less than 90 days only. So it is not NPA, right? This is the general rule. But since both of these loans belongs to Mr. Shyam only, and if any one of the loan becomes NPA, remaining loan should also be treated as NPA. That is the rule. Correct or not? In the concept book, you will learn that NPA classification should be borrower wise but not facility wise. Correct or not? So if any one of the loan taken by the borrower becomes NPA, remaining all other loans which he has taken from the same bank should be treated as NPA. So in this situation, both housing loan and car loan will be treated as NPAs, because house loan has turned into NPA and car loan also belongs to same person. Got it? So you need to select that appropriate option which says that same thing. See, option A says both housing loan and car loan should be classified as NPA in accordance with RBI norms on asset classification. Yes, option A is correct option. Option B says only housing loan should be treated as NPA. No. Only car loan should be treated as NPA. No. Both housing loan and car loan should be classified as standard asset. No. Option A is the correct option. Next, question number 3. Which is the minimum provision required for RS enterprises which is in the state of doubtful 2? If you are in the state of doubtful 2, for secured portion 40%, for unsecured portion 100%, right? Considering the account is fully secured, let us see. RS enterprises is fully secured, 30 lakhs. You need to create 40%, that means 12 lakhs provision you have to create. Correct? Yes, sir. 12 lakhs only, right? Yeah. Option B, 12 lakhs you need to create, but they have created 30 lakhs, which is wrong. That is case scenario number 6. Now moving to case scenario number 7. Measures MCP. Okay, we need to read questions, na? I forgot. Okay. Question number 1. Which of the following best describe CA Mahavir's responsibility for subsequent events as per SA 560? For answering this question, you need not read the case scenario. They are asking responsibility of auditor with respect to SA 560. You can read all the options and select the correct option. Option A says he has no obligation to perform audit procedures, sir. No, he has a certain obligation with respect to subsequent events. Next, option B says he should perform necessary audit procedures to know about events occurring between the date of financial statements and date of auditor's report. Yes, this option looks correct only. Let us also read other options and we'll select the best option. He has no obligation. No, he is having certain obligation. He has to only rely upon written representation of management regarding subsequent events. No, he himself has to perform certain procedures like inquiry with the management, reading minutes, reading latest interim financial statements. These procedures he needs to perform. So option B is the correct option. Next, question number 2. Which is the most appropriate action CA Chandana should take for verifying inventories held at third party premises? So this also you need not read. Case scenario: for inventories that are available at the third party's location, what audit procedures you will perform? You will send external confirmation to the third party, and in some situations you yourself can visit the third party and verify that inventory, right? You need to select the best option from the given options. Option A says request confirmation of the inventory's quantity, condition from third parties, or inspect the inventory at their premises. Yes, option A looks good. Let us also read other options, because you should not conclude the answer by just reading one option. Inspect all inventories at third party premises without requesting confirmation. No, you should also first of all request the confirmation. So option B is wrong. Rely on management's written representation regarding inventory at third party. No, you should not rely on management written representation alone. You have to send external confirmation, and if required, you yourself also should go to that location and check the inventory. Confirm the inventory's value along with the quantity condition from third party. Just sending a confirmation is not sufficient. You should also check after sending confirmation, should I also go and verify the inventory by myself? So of all the options, option A is more appropriate answer, so we'll select option A. Next, question number 3. Which audit procedure CA Prabha performed to verify whether conversion of foreign currency into Indian rupees is proper or not? Now, if entity has earned any foreign income, that foreign currency has to be converted into Indian rupees. There will be exchange rate, correct or not? So management has converted foreign currency into Indian rupees. Now auditor is again verifying the calculation whether it has been properly converted from foreign currency to Indian currency with proper exchange rate or not. This procedure is known as recalculation, because calculation is involved here. So option B, recalculation. See, most of the students, they will be confusing between recalculation and reperformance. In case of recalculation, certain calculations will be involved, like management would have done a calculation, auditor is again recalculating it, like this example of converting foreign currency to Indian currency, or depreciation calculation, provision calculations, these things. Whereas reperformance means no calculation will be involved. Management would have performed a procedure, or management would have performed a control. Auditor is checking that procedure or checking that control by again reperforming it, is known as a reperformance procedure. You can take example of BRS, bank reconciliation statement. BRS is an internal control and it is a procedure which has been performed by management. You might think that, sir, BRS also involve calculation plus minus. No, that is not calculation, that is a internal control, that is a procedure you are performing, which auditor is again verifying it by reperforming that procedure or by reperforming that BRS. So BRS, verification of BRS comes under reperformance procedure. Getting it? You should not confuse between recalculation and reperformance. Got it? Yes, sir. So that is case scenario number 7. Next, moving to case scenario number 8. MCQ number 1. Based on CAJ's approach in designing test of details and test of controls for sales, which of the following statement is most appropriate? Let us see first of all. While auditing A&J Industries Private Limited, CAJ has decided that it would be appropriate to examine 100% of items comprising turnover of 30 crores as reflected in the financial statements. So, CAJ wanted to verify 100% of the items. Okay. For these transactions, he has designed a test of details. Yes, you can design test of details for verifying 100% of the items transactions. That is possible. So, designing test of details for verifying 100% of items, that is proper only. Next, sales function is automated in the company's information system involving repetitive nature of calculations. Further, in respect of design of test of controls, so with respect to sales function, there are certain automated controls. Auditor is designing test of controls pertaining to turnover for 100% of the items. Now tell me, can you design test of controls for 100% of items? Can you test 100% of controls? Not possible. You cannot design test of controls for 100%. Getting it? So here audit procedures with respect to test of details is proper, but with respect to test of controls is not proper. So you need to select that appropriate option. See, you can get it out, sir. Why we will not be able to test the controls 100%? Because see, many reasons. First of all, it might not be economical to test, and in some situations it might not be practicable to test all the controls. Like, let's say for example, 100% of controls testing means this is 1 year, right? 1st April 2025 to 31st March 2026. Now, with respect to area of sales, there are controls. Throughout the year, sales will take place, correct or not? Sales will take place throughout the year. So, on all these sales transaction, a control is operating, let's say. Now, auditor has come on 10th of May 2026 for doing the audit. Okay, 10th of May 2026 for doing the audit. Now, here, let's say 1 lakh sale transactions taken place, 1 lakh number of sale transactions taken place. I'm not speaking about amount. Number of sale transactions are 1 lakh. Now, on each and every transaction, this control has been executed. Okay. Now, can auditor test the control operated on each and every transaction? Not possible. Even if auditor wants to test, it is not economical to the auditor, because control is a automated control. Okay, control is a automated control. Let's say for example, that generating of sale invoice. Okay, now in the sale invoice, the GST rate will be automatically calculated at 18%. If you give the base price, GST rate will be automatically calculated by the system. That is a control. Now, to test this control, will auditor test each and every sale invoice? No. What he can do is, he can just pass a sale transaction, a dummy sale transaction he can pass, and he can check whether system is properly calculating GST at the rate of 18%. So, if the system is properly calculating GST for that dummy transaction, it would have properly calculated for all other transactions also. Because this automated control, if you have designed it once, it will operate in that same fashion always. It will not alter until and unless you yourself go and alter. Getting it? So, auditor testing 100% of the controls is not practicable, not feasible also. Getting it? So here you need to select the appropriate option. First option says Approach for both designing test of details and test of controls is proper. No, for test of controls it is not proper. You should not test 100% of controls. Approach for designing test of details is proper. However, it is unlikely approach for test of controls. Yes, option B. Why it is unlikely approach for test of controls? Because in the case scenario, he wanted to test 100% of the controls, which is not possible and not feasible. Got it? Option B is the correct option. Next, question number 2. Which assertion is CAJ checking while verifying correctness of recording of sales based on invoices, including adjustment of discounts and TDS adjustments for employee benefit expenses respectively? Let us see. CAJ ensures that all sales are correctly recorded in books of accounts and discounts have been properly adjusted based on invoice. That means he is focusing on value of sale transaction. That means you can say accuracy. Since it is a sale transaction, we are calling it as accuracy. If it is a balance sheet item, you will call it as measurement, right? Next, similarly, in respect of verification of employee benefit expenses reflected in the financial statements, he ensured that TDS related adjustments are correctly reconciled and accounted for. This is also again accuracy only, right? So here he is focusing on accuracy assertion. In the question, if you see, you don't find that term accuracy. Another name for accuracy is measurement. So you need to select the option which contains both measurement. So option A, measurement. Next, question number 3. Considering the view of Ankush, which of the following is false? First of all, we'll see the matter related to Ankush. So Ankush is making 3 statements. We need to identify which statement is false. Okay. Assertions or representations made by auditor, or the assertions or the representations made by auditor or management? By management. So option A is this first point is false. Next, assertions are generally explicit and not implicit. Assertions can be implicit also. So second point is also false. Next, verification of assertions helps the auditor in finding out whether financial statements are in accordance with applicable financial reporting framework or not. Yes, this third point is correct only. Now in the question they are asking you to find out wrong points. So 1 and 2 are wrong points, false points. So option A, 1 and 2 are false. Next, going to question number 4. As regards the matter of holding certain inventories on consignee goods, which type of assertion is being verified by the auditor? Let's see. In normal course of business, company also holds a part of goods as consignee. So company is holding goods that belong to other person. While verifying assertion related to inventories, he ensures that inventory held by the company as consignee of goods on behalf of third parties is excluded from the inventory. That means you can say rights and obligation assertion is being addressed here. Correct or not? Yes. So rights and obligation and completeness assertion also being addressed. Why completeness assertion also being addressed? Because only those inventory that belongs to you should be included, that doesn't belong to you should be excluded. That means all the inventory that belong to you should be included, that is complete inventory should be included in the financial statement. So completeness assertion also he is addressing. So option B, completeness and rights and obligation. Next, case scenario 9. Question number 1. Which of the following is correct regarding the difference in types of organizational structures and connected matters? For answering first MCQ, you need not read case scenario. See, you need to select the correct option from these 4 options. First option says LLP gives the benefit of flexibility of limited liability partnership and good governance of company. Yes, that is true. A minimum of 2 individuals are required to form LLP. Yes, that is also true. And at least 2 partners are required to obtain DIN. No, in case of LLP, you will call it as DPIN, direct designated partner identification number. So option A is wrong. You can also eliminate all options which contains DIN. Option C also says DIN. Eliminate. Next, answer should be option B or option D. Let us see. LLP gives the benefit of limited liability of a company and flexibility of partnership. A minimum of 2 individuals are required to form LLPs. At least 2 partners are required to obtain DPIN. Regulatory authority in case of LLPs, Registrar of Companies, ROC. Yes, this option looks correct only. Let us read option D also. LLP gives benefits of limited liability of a company and flexibility of partnership. A minimum of 3 individuals are required. No, only 2 individuals are required. So option D is also wrong. Option B is the correct option. Next, question number 2. In the above case scenario, what guidance would CAS have likely provided to Revant regarding audit of financial statements of LLP? Let us see. Revant, being cost conscious, specifically asks CAS. Basically, in the case scenario, they have incorporated LLP. Client has incorporated LLP and asking CAS regarding requirement of audit of LLP. During the discussion, he shares that they are expecting turnover of 5 crore in the first year of their business, and funds amounting to 50 lakh would be brought by the partner. So contribution is more than 25 lakhs and turnover is also more than 40 lakhs. So audit is applicable to this LLP. That is what you need to suggest. Option A says there is no provision for compulsory auditor. No, that is wrong. There is a provision. Every LLP is compulsory required to get it account audited. No, not every LLP, only certain LLPs. There exists provision under LLP Act 2008 and relevance rule for audit of LLP based upon twin criteria of turnover and contribution thresholds. Yes, this is correct. However, proposed business does not meet the threshold criteria. No, in the given question, proposed business meets the threshold criteria. So option C is also wrong, and of course, option D should be the correct option. Next, question number 3. Which of the following statement is correct regarding Manohar's point of view? Audit trials are useful only for auditors. No, they are useful for business also. So option A is wrong. Audit trials are useful for business as well as auditors. However, maintenance of accounts in software having feature of audit trial is not compulsory for LLP. Yes, this option is true. Using software that contains audit trial feature is compulsory only for companies, not for LLPs. So option B is correct option. Next, which of the following statement is correct regarding Piyush plan? Let us first of all read what is the plan of Piyush. They plan to get their accounts audited after the close of financial year 23-24 from CAS. The finance and accounts function of business is being seen by Piyush. He plans to contact auditor somewhere around August 2024. So 31st March 2024 financial year ends and Piyush wants to contact auditor regarding audit and other compliances in the month of August 2024. Is his approach correct? His approach is not correct. Why? Because auditor has to be appointed for the LLP before the close of financial year. That means by 31st March 2024 you need to appoint the auditor, and within 60 days from the end of financial year you need to file annual return, and by 180 days, that is within 6 months, that is by 30 of 30 September falls afterwards, right? Here it falls. By 30 September, you need to file solvency statement, Form 8 and Form 11. Solvency statement. Now, here in this situation, if Piyush approaches auditor on August 2024, he will not be able to comply with two things. First one is annual return, and another one is appointment of auditor before 31st March. Got it? Yes, sir. Just a second. So auditor is required to be appointed at least 30 days prior to 31st March or no? Auditor is required to be appointed at least 60 days or no? Auditor is required to be appointed at any time before 31st March. Therefore, Piyush plan to approach CAS is not in accordance with relevant rules and regulations. Yes, option C is correct. Next, considering Piyush plan to contact CAS in August 2024 for making necessary regulatory compliances, what would be its consequences for LLP? LLP will not be able to file its annual return within time, because within 60 days of close of financial year you have to file it. So default by LLP in filing of its annual return will happen. Option A is the correct option. Next, moving to case scenario 10. Royal Constructions Limited should value obsolete inventory at, let us see. The auditor noticed that company has obsolete inventory of 1,75,000, which had an estimated realizable value of 50,000, and the company has valued it at cost in its financial statement. Obsolete inventory should be valued at cost or realizable value, whichever is lower. In this situation, 50,000 is lower. So you have to value this obsolete inventory at 50,000. Option A. Next, question number 2. What amount should be included in cost of PPE in the financial statements of Royal Construction Limited? Let's see. During the review of property, plant and equipment, audit team noted that company included 1,05,000 for employee benefits related to acquisition of PPE. Yes, for acquiring PPE, if you have incurred any employee benefit expenses, that can be added to the cost of PPE. Next, 1,25,000 for testing the functionality of equipment. Yes, if you have incurred any amount for testing the functionality, that is installation charges and also trial run charges, all these you can add. So 1,25,000, right? So 1,25,000. Next, offset by 35,000 received from the sale of samples produced during testing. So during a trial run, if any products have been produced, you can sell those products. Any amount received by selling that products should be reduced. How much is received? 35,000. So you need to reduce 35,000, and you can recognize the value of PPE at, if it goes 35,000, 1,95,000. So value of PPE should be 1,95,000. Let us see. Yeah, option A, 1,95,000. Next, what potential threat to independence of Vama and Associates arises from receiving fees of 10 lakh from Royal Construction Limited? Let's see. Vama and Associates derive significant portion of their income from Royal Construction Limited amounting to 10 lakh, which comprises 65% of their total revenue. So, of the total revenue of audit firm, 65% of the revenue comes from only one client. In such a situation, it creates self-interest threat. Correct or not? Self-interest threat will be always in financial terms, I told. So it creates self-interest threat. Option A. Next case scenario number 11. MCQ number 1. Which audit procedure did CA Acom perform at the time of starting the audit work of company? Let's see. Acom, the engagement partner, reviewed gross profit ratio of company for the year under audit. He also compared GP ratio of Energy Synergy Limited with other companies operating in similar industry. Nothing but he has performed ratio analysis. Ratio analysis is part of analytical procedure. This type of MCQ we have seen lot of times. Next, whether view of Mr. Sachin with respect to recognition of cost of PPE, is it correct? Let's see. Mr. Sachin is of the view that cost of PPE comprises its purchase price, yes, including import duties, non-refundable purchase taxes after deducting trade discount. Yes, this is included in PPE value. Any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by management. Yes, this cost should also be included in cost of PPE. Cost of introducing a new product or service, including cost of advertising and promotional activities. No, this should not form part of PPE. This should be charged to P&L as expenditure, marketing expenditure, advertisement expenditure. You need to charge. Administration and other general overheads, this should also be charged to P&L. So these two should not be capitalized. So here view of Mr. Sachin is partly correct. First 2 points he is saying to be included, yes, but next 2 points should not be included. So let's see the options. View of Mr. Sachin is correct? No. View of Mr. Sachin is partially correct, yes. As the purchase price including import duties and non-refundable purchase taxes after deducting trade discount and rebates will not be included. No, will be included. This is wrong option. View of Mr. Sachin is partly correct, as the cost of introducing new product or service and administration and other general overhead cost will not be included in the cost of PPE. So option C is the correct option. Next, which method is followed by Mr. Sachin for evaluating the internal control for sales transaction? We have to see. For evaluation of internal controls, he gave a comprehensive series of questions concerning internal control related to sales to the client and requested the client to get it filled by the concerned executive. So he has framed a questionnaire and asked the client to fill up this questionnaire. You will call it as internal control questionnaire. Option C. So what is the difference between checklist and internal control questionnaire? Checklist also contain questions, internal control questionnaire also contains questions, but checklist will be answered or fulfilled by the audit staff himself, whereas internal control questionnaire will be answered by the client, okay, the employees of the client or management of the client. There is a difference, you should not confuse. In the given situation, auditor has given this questions to be answered by the client management, so you will call it as internal control questionnaire. Next, MCQ 4. Which specific assertion did Mr. Sachin intend to verify while performing various audit procedure for sale transaction? Let's see. While verifying sale transaction, Mr. Sachin carried out various audit procedures specifically to confirm whether recorded sales pertain to the goods ordered by valid customers, duly dispatched and invoiced during the audit period. So occurrence assertion. So he is addressing occurrence assertion, whether goods ordered by valid customers only. So did really the order came to the entity and have they been dispatched? Really did the goods have been dispatched? So he is addressing occurrence assertion. So option A. Next, question number 5. Mr. Sachin concluded that specific risk is present that needs to be addressed and discussed with the management of company. Which kind of risk Mr. Sachin is referring to? We need to see the content. Mr. Sachin noticed that one of the internal controls implemented by company for sale transaction was segregating of duty, that is the person who checks the credit limit, the person who authorizes the sales order, and the person who raises the sales invoices. So the person who collects and records the amounts received from debtors are different. So company has implemented a segregation of duties, segregating all these duties among different people. However, he noticed that this segregation of duty was often not followed in practice. He concluded that lack of proper segregation give rises to specific risk that need to be addressed. So there is a control, but that control might not work properly. You will call that risk as control risk. So Mr. Sachin here, he is referring to control risk, option D. Next, question number 6. Which sample selection method is used by Mr. Sachin to select a sample of trade receivable balance for examination? Let us see. He divided the trade receivable balances into 4 groups as follows: balance in excess of 20 lakhs, balance in range of 12 lakh 50 to 27 lakh 50 to 12 lakh 50, and below 7 lakh 50. So he has divided into stratum. From above groups, Mr. Sachin picked up a different percentage of item to be examined in detail according to professional judgment. So he has applied stratified random sampling. So option C, stratified random sampling. Moving to case scenario 12. So question number 1, which of the following statement is most appropriate as regard the fire incident? Let us read what has happened. A fire took place in one of the premises of company on 1st May 2024, resulting in damages to all inventories lying there amount to 1 crore rupees. The inventories of the affected premises are insured with Quick Bima Limited for 50 lakhs, and the company has also lodged a claim with it, which is still to be settled. So, auditor is doing of financial statement for the financial year 23-24 after 31st March 2024, that is on 1st May 2024, fire accident has occurred and goods worth 1 crore damaged. Now, is this adjusting subsequent event or non-adjusting subsequent event? It is a non-adjusting subsequent event. So you will not adjust the inventory as on 31st March, but you have to disclose about this event through notes, right? So the same point, same option you need to select. First option says auditor should ask management to adjust financial statements. No, no adjustment required. If you observe, option C says auditor should ask management to disclose it in notes to accounts. Yes, option C. Why only disclosure is required? Because this is a non-adjusting subsequent event. Next, question number 2. Identify the correct option regarding materiality of uncorrected misstatements relating to wrong capitalization of a machinery account and overstatement of inventories of work in progress. Let us see. First of all, in this particular entity, auditor has calculated materiality as 5% of profit before tax. So profit before tax is 5 crores. Of 5 crore, 5% means how much? 25 lakhs. So materiality for this entity is 25 lakhs. Now what happened? Company has debited 10 lakh under machinery account, whereas expenditure related to normal wear and tear of high speed automated machinery, the amount has been wrongly capitalized under machinery account. So this 10 lakhs should not be capitalized to machinery account, but they have capitalized. So is that a misstatement? Yes, it is a misstatement. Next, another misstatement. Company has not properly accounted for a necessary element of cost in arriving at work in progress. Further, estimates regarding various stages of production have not been made properly. All such factors have resulted in overstatement of work in progress inventories by 20 lakhs. So work in progress has not been valued properly, because of which 20 lakh misstatement occurred. Now 20 lakh plus a 10 lakhs, if you combine this, it becomes a 30 lakh misstatement. Is 30 lakh misstatement material in this entity? Yes, because the materiality level fixed is 25 lakhs only, but actual misstatements, if you combine, it is 30 lakhs. So auditor should ask the management to correct these misstatements, right? Yes. First option says uncorrected misstatements are not material. Are they not material? They are material because it is crossing 25 lakhs. So option A wrong. Uncorrected misstatements are material in the context of audit of financial statements as a whole, and the effect and their effect on opinion should be considered by the auditor. Yes, option B looks good. We will also read other options and we'll select the best option. Uncorrected misstatements are not material. No. Uncorrected misstatements are material in the context of audit of financial statements as a whole, and auditor should correct these. See, auditor will not correct these. He should inform the management to correct them. If management corrects, that is fine. If management doesn't correct, then auditor should consider the impact of it on his opinion. So option B is most appropriate option. Next, question number 3. Auditor has performed certain audit procedure described in case scenario related to inventories of work in progress. Yes, we have seen just now about work in progress. Such procedures are related to verification of valuation of work in progress, right? With respect to valuation only, auditor has verified this, correct or not? This particular point is addressing about valuation assertion. So option B. Which of the following statement is correct in respect to manner of providing written representations by management? Let's see. So management, it has provided this particular written representation, and in that written representation they are stating like this: we confirm that to the best of our knowledge and belief, having made such inquiries as we consider necessary for the purpose of appropriately informing ourselves. So we have already seen this type of MCQ, whether management can use the wordings to the best of our knowledge and belief in their written representation. The answer is yes, they can use those wordings. There is nothing wrong in that. So from the given options, option A says the extract of written representations provided in case scenario is proper. Yes, it is proper only. Using that words doesn't make the written representation improper. Management can use those words saying that to the best of our knowledge and belief. So option A is the correct option. Next, moving to case scenario number 13. Which of the following statement is likely to be most appropriate regarding required undertaking in accordance with the Companies Act 2013? Let us see. MPM and Associates, a firm of chartered accountants, have received offer letter from PST Bank for carrying out statutory audit of their Chandigarh branch for the financial year 23-24. Okay. The offer letter inter alia requests audit firm to give an undertaking in writing that the firm is not disqualified under section 141 subsection 3 clause D subclause 2. What that 141 subsection 3 clause D subclause 2 says is, as per that clause, see, such a provision relates to the disqualification of a person as auditor of a company if he, his relative or partner is indebted to the company subject to certain prescribed conditions. So this section is saying that if the partner or his relative has indebted to the company, then he should not accept the audit. Why? Because it will create self interest threat. So this particular section is about self interest threat, right? So option A, the referred provision mainly addresses self-interest threat to independence of auditor. Audit firm can give such undertaking after verifying if it complies with such requirements. Yes, option A looks good. We will also read other option. Provision mainly addresses self-review threat. No. Option D also says self-review threat. So this is also no. Option C, we'll read once option C. The referred provision mainly addresses self-interest threat to independence of auditor. However, audit firm can't give such undertaking. No. Audit firm has to mandatorily provide an undertaking to the entity that it complies with the requirements of section 141 subsection 3 clause D subclause 2. In fact, 141 subsection 3 further contains certain qualifications, certain disqualifications. So auditor, he needs to provide a written acknowledgement that he doesn't possess any of those disqualifications. Got it? Yes. So option A is the correct option. Next, moving to second question. The declaration relating to non-communication of information related to affairs of bank is related to adherence to which fundamental principle governing professional ethics. So there is a declaration that has been asked from the auditor to the bank. It seems auditor has to provide a declaration to the bank, and this declaration is like this: we declare that we will not communicate or allow to be communicated to any person not legally entitled thereto any information relating to affairs of the bank. That means this declaration is related to confidentiality. Correct or not? Yes. So option B, confidentiality related declaration. Next, question number 3. MPM and associates are required to report on adverse comments made by stock auditors of borrower branch enjoying cash credit facilities. Which of the following statement is most appropriate in this regard? So auditors of the bank should report in their audit report if any adverse comment has been made by stock auditors. Basically what happens is, bank will give loan to the borrower, correct? Now if it is a cash credit, borrower will give his stock as security to the bank. Now banker, what it will do is, once in every year it will appoint a stock auditor to verify whether the stock of the borrower is proper or not, whether valuation is correct or not, whether stock is in existence or not. To check all these things, banker will appoint a stock auditor. Now this stock auditor, in his stock audit report, if at all he has made any adverse comments, those comments should be reported by statutory auditor of the bank. Understanding, statutory auditor of the bank, in his report he needs to report them. Now the question that they are asking is, which of the following statement is most appropriate in this aspect? Let us see. First option says, stock auditors make comments in their reports on valuation of security and calculation of drawing power. So they are saying, in this stock audit report, stock auditors will make comments on valuation of that particular stock and also calculation of drawing power. The option is correct only. Generally stock auditors, in their stock audit report, they will check these two things, whether valuation is correct and drawing power has been calculated properly or not. Option A looks good. We'll also read other options. Stock auditors make comment in their report on valuation of security only, however they not make any comment on calculation of drawing power. No, they will make comments on both the things. Stock auditor make comments in their report on valuation of security, yes. Documentation made by bank in respect of sanctioned credit facilities, no. Stock auditors will not check the documentation that the bank is maintaining. Okay, stock auditor, he will just check the valuation of stock and the drawing power calculation. So option C is wrong. It is also saying leakage of revenue, that also will not be verified. Stock auditors make comments in their reports on calculation of drawing power only. No. Option A is the correct option. Stock auditor, he will make comments in his report on two aspects. One is valuation of security and also calculation of drawing power. Next, question number 4. Keeping in view the matters of foreign letters of credit described in case scenario, consider the following statements. First of all, what is meant by foreign letter of credit, FLC? So let's say an importer in India wanted to import goods from USA from the exporter. So importer, he needs to pay money and exporter, he will send goods. Now importer is having fear that if he pays the money, what is the guarantee that exporter will send the goods? Exporter is also having fear that if he sends the goods first, what is the guarantee that importer will pay the money? To give confidence to these people, or to solve this problem, what importer will do is, importer will go to the bank in India. You will call this bank as issuing bank, and he will ask the bank, you please issue foreign letter of credit, FLC. That means it is just like a guarantee. Foreign letter of credit is like a guarantee to the exporter. Understanding that importer for sure will pay the money. If importer doesn't pay the money, I will pay you the money. Like that, bank is giving the guarantee. If bank itself is giving the guarantee, will exporter get the confidence? Yes, exporter will get the confidence. Based on that confidence, exporter will send the goods to importer. After that, this exporter will be having foreign letter of credit, na, FLC. He will take this FLC to his bank in the foreign country, and he will encash this FLC with this bank, and this bank will collect money from this particular bank. Understanding, here you will call this bank as advising bank, okay, and this bank as issuing bank, because it is issuing the FLC, and exporter will be the beneficiary because he is the ultimate beneficiary, right? Yes. So there are certain points with respect to foreign letter of credit that are given in the MCQ. Let us see. We need to identify which statement is correct. So foreign letter of credit issued by branch is non-funded loan. Is it correct? Yes, it is non-funded loan, because there is no outflow of money involved in foreign letter of credit. So you will treat it as a non-funded loan. This is true. branch earns interest on issuance of foreign letter of credit which is credited in the interest earned account. No, bank will earn commission on foreign letter of credits. It will not earn interest. If you are giving money, you will earn interest. You are not giving money, you are just giving a guarantee kind of thing, so you will earn commission. So second point is false. Next, bank which receives foreign letter of credit is known as beneficiary bank. No, you will call it as advising bank. So only statement number 1 is correct. Option A. That is the case scenario. Moving to case scenario number 14. Question number 1. With respect to overdraft facility sanctioned to times limited, the account would be termed as out of order in which of the following situations? See, generally account will be treated as out of order if it is continuously crossing sanction limit or drawing power for more than 90 days, or there are no credits in the account for continuously 90 days, or there are credits in the account but the credits are not sufficient to cover the interest that has been charged. In all these three situations, the account will be treated as out of order. Correct. Now if you see in the current situation, the sanctioned limit is 75 lakhs. This is a sanctioned limit, and the drawing power that has been calculated is 50 lakhs. So if account is exceeding either 75 lakhs or 50 lakhs, you will treat it as out of order. That is the first situation. So outstanding balance remains continuously in excess of 75 lakhs. Will you treat it as out of order? Yes, because it is a sanction limit. Account should not cross sanction limit. Next, outstanding balance remains continuously in excess of 50 lakhs. Then also you will treat it as out of order because 50 lakhs is the sanction limit. Next, outstanding balance in the account is less than 75 lakh, but there are no credits or payments deposited into the account continuously for 90 days as on balance sheet date. Will you call it as out of order? Yes. Next, outstanding balance is less than 50 lakhs. If it is less than 50 lakhs, you will not call this as out of order. In the first three situations, you will call the account as out of order. So option A, 1, 2 and 3. Next, question number 2. Which of the treatment by bank on the provisioning and income recognition is correct in case of bank guarantee given by central government and state government? We need to read the case scenario. So these are the two loans. One is given, one is guaranteed by central government, another one is guaranteed by state government. We will see what has happened in these two cases. First case, central government as part of Make in India initiative. However, guarantee was not invoked, and so central government has given guarantee. However, that guarantee was not invoked, and the advance were overdue by more than 95 days. These advances were classified as a standard asset. Since the loan amount is guaranteed by central government, even if it is outstanding for more than 95 days, since the loan is not invoked, since the guarantee is not invoked, it should be treated as a standard asset only. You should not treat it as NPA. Yes, what they have done is correct only. But for income recognition purpose, you have to treat it as NPA and were regarded as NPA for income recognition purpose. Yes, they have done properly only. Classification in the first situation is done properly. Now we'll see the second point. State government as part of a power generation initiative has given guarantee for particular loan. However, the guarantee was not invoked and the advances were overdue by 80 days only. Since advances are not overdue for more than 90 days, you need not treat it as NPA. Correct? Yes. These advances were also classified as a standard asset. Yes, since it has not been outstanding for more than 90 days, it is only outstanding for 80 days, you have to treat it as a standard asset only. That is correct only. And from here, these were regarded as NPA for income recognition purpose. Why will you recognize, why will you treat them as NPA for income recognition purpose? If it has crossed 90 days, then you will treat it as NPA for income recognition purpose also. Here, even if it has not crossed 80 days, they have treated it as NPA for income recognition purpose. So their classification is not correct in the second situation, right? So first situation is correct, second situation is not correct. Only 1 is correct, option C. Next, question number 3. In the given case, drawing power of borrower XYZ Limited should be, let's see. So basically for XYZ Limited, a cash credit has been granted. See, additionally XYZ Limited borrower availing cash credit facility of 110 lakh. This is the sanctioned limit. Security of paid stocks and debtors up to 90 days. Margin is 25% for stock, 40% for debtors. Okay, and these are the figures of stock and debtors. Here I have made the calculation, we will see. Now here we need to calculate a drawing power. Sanction limit is 110 lakhs. Now we need to calculate drawing power. So in the question, in this particular table, they have given these values. First of all, we'll calculate for stock. The value of stock that has been given is 130 lakhs. I have taken 130 lakhs, and damaged stock out of it is 7 lakhs, so I have reduced it. And creditors is also 60 lakhs, I have reduced it. Why you are reducing creditors? Because bank will give loan only for the money that is blocked in the stock. Now if you have purchased stock on credit basis, your money is not blocked, so for creditors amount bank will not give loan, so we are reducing creditor 60. It becomes 63 lakhs after reducing all these three things. And you should also reduce the margin. Margin for stock is 25%. If you reduce margin, 63 minus 15.75, it becomes 47.25 lakhs. This is amount A. Next, debtors also you need to calculate similarly. Debtors value given is 75 lakhs. Debtor outstanding for more than 90 days needs to be reduced, because bank doesn't want it to take risk with these debtors. And margin for debtors is 40%. If you reduce margin, it becomes 39. Now for calculating drawing power, you need to add A plus B. So A is 47.25 and B is 39. If you add, it becomes 86.25 lakhs. So drawing power in this situation is 86.25 lakhs. Here you need to remember that most of the students, the mistake that they will do is, this margin is there na, margin has to be reduced at last. After reducing all the things, you need to reduce margin. Here also margin needs to be reduced at last. Okay, so the option which says 86.25 lakh needs to be selected. So option number A. Next, question number 4. The bank has identified an erosion in the value of security and made provision for doubtful assets. Whether treatment by bank for doubtful asset is correct? Let's see. Erosion has happened in the value of security, it seems. See, outstanding balance in one of the loan account is 25 lakhs. So outstanding balance is 25 lakhs, and the realizable value of the security as assessed by the bank approver is 2.25 lakhs. Now 10% of outstanding balance becomes 2.5 lakhs, right? And value of security is 2.25 lakhs. That means value of security has fallen below 10% of outstanding amount. In such a situation, you have to treat this loan account as loss asset directly. You should not treat it as a doubtful asset. But in the question, they have treated it as, in the case scenario, they have treated it as doubtful asset. So their treatment is wrong. You have to treat it as loss asset. When you will treat it as a doubtful asset, see, if the value of security falls below 50% of previously assessed value of security, in such a situation you will treat it as doubtful. In this situation, what happened is value of security has fallen below 10% of outstanding amount, so you have to treat it as loss asset. So the treatment of doubtful is wrong, is not correct. So option A says it is correct, so this is not the correct option. Option C also says it is correct, so this is not correct. That is not the correct option. Correct answer should be either B or D. Let us read. No, the existence of such security should be ignored, and the asset should straight away be classified as loss asset. It may be either written off or fully provided by the bank. Yes, this option looks good only. Let us read option D also. No, existence of security should be ignored and asset should be straight away classified as loss asset. provisioning should be made for doubtful debts or no, this is wrong. Provisioning also should be made as per the requirement of loss asset only. That means either 100% provision you have to provide or you need to completely write it off. So option B is correct. Next, question number 5. Statutory central auditor of a bank must furnish, in addition to main audit report, various other reports. From the options, choose the audit reports that Mr. Vishwacharya and associates shall furnish. So, apart from the main audit report, bank auditors has to furnish various other reports also to the bank. Now, of the following 5 reports, select the reports which should be furnished by the auditor. We need to select. For this MCQ, we need not read case scenario. Whether long form audit report should be submitted, yes, you have to submit long form audit report. Whether report on compliance with SLR requirements, statutory liquidity ratio, should it be submitted, yes. Report on treasury operations of RBI guidelines, yes, this report also you should give. Report on compliance as per Ghosh and Jilani committee, yes, this also you need to give. Report on adverse credit lending ratio in rural areas. So this type of report is there, but they are confusing you. Here they have used the term lending. The actual name of report is credit deposit ratio. Understanding? Report on adverse credit deposit ratio. They have used report on adverse credit lending ratio. So this type of report you will not give. This type of report is not at all there. So you will give 1, 2, 3 and 4. Option B, only 1, 2, 3 and 4 reports you will give. Next, moving to case scenario 15. So question number 1. The auditors of company are in process of establishing audit strategy. Which of the following is not a relevant factor in establishing overall audit strategy in the given case scenario? See, for this also we need not read the case scenario. However, we'll read it. There is particular point about this, we'll read it. So the company for which you are doing the audit and you are preparing audit strategy, it is having 5 branches which are audited by independent auditors appointed under the Companies Act 2013. Should you consider this while preparing audit strategy? Yes, you have to consider this point, that company is having 5 branches and these 5 branches are audited by different auditors. How I am going to use their work? You need to consider this aspect while preparing audit strategy. Okay. It also has a wholly owned subsidiary company which is audited by another audit firm under the name of JKL and Associates. Should you consider this point of company having wholly owned subsidiary? Yes, you should consider this point also while preparing the audit strategy. Next, engagement team has noticed that a company has maintained several bank accounts and there is a substantial movement in fixed deposits during the year, leading to risk of material misstatement in cash and cash equivalents. It seems there is a risk of material misstatement in the area of cash and cash equivalents. And what type of audit procedure should be performed in area of cash and cash equivalents? That will be considered at the audit planning stage, but not at the audit strategy stage. You will, in audit strategy stage, you will consider overall aspects, not the specific aspects. Understanding? So here, while developing overall audit strategy, you will consider that 5 branches are there for the entity. This point you will consider. You will also consider wholly owned subsidiary is there. You will also consider expected time of holding AGM in accordance with provisions of Companies Act. But this point is there, no, point D. Nature, timing, extent of planned procedure for cash and cash equivalents. This is a specific point. In the area of cash and cash equivalents, what audit procedures you have to perform, that will be considered in the planning, in the audit plan, not in the strategy. Okay, so option D will not be considered by you. Next, for priority limited, which benchmark would the engagement partner most likely to use for setting up materiality? So for this company, what item you will take as materiality, they are asking. See, basically as per SA 320, if the company is profitable company, if it is making profits, then SA 320 suggests that auditor generally takes profit before tax figure as benchmark. Now let us see whether the company in the given case scenario is a profitable company. If it is a profitable company, you will choose profit before tax. If you see revenue is 100 crores, assets are 40 crores, profit before tax is 8 crores. Since the entity is profitable entity, you will choose a percentage of profit before tax as benchmark. Next, question number 3. In the given scenario, assume that engagement partner has decided to increase tolerable misstatement to 10 lakhs. So, engagement partner, he is increasing his tolerable level of misstatement. If he is increasing tolerable level of misstatement, means what? He is okay if there are more misstatements in the financials. That is the meaning of increasing tolerable level of misstatement. Now, if he increases tolerable level of misstatements, what happens to sample size? Sample size can be reduced. You can select less number of items into sample, because it is okay for you even if there are more misstatements left over unidentified. Correct or not? So, as a tolerable level of misstatements increases, sample size reduces. So, it will lead to decrease in sample size. Option A. For solving this, you need not read the case scenario also. Next, question number 4. While performing procedures on designed sample, engagement team identified certain misstatements in selected sample and projected these to entire population of revenues according to the requirement of standards on auditing. Which statement is correct in this record? So, we have to read the statements given below and identify which statement is correct statement. Let us read. Anomalous misstatement is auditor's best estimate of misstatement in population. See, generally what happens? There will be population. In the population, many items will be there. From that population, you will select sample, right? And you will perform audit procedures on sample. Now, you will find some misstatements in sample, correct? You will find certain misstatements in sample. Now, you have found a particular misstatement in the sample which is anomaly. Anomaly means that misstatement is there only in the sample. You will not find such a type of misstatement anywhere in the population. Such a kind of misstatement you will call it as anomaly. Now they are saying that anomalous misstatement is auditor's best estimate of misstatement in population. So whatever the misstatement you have found, whatever the anomalous misstatement you have found in the sample, that will give you an idea of overall misstatements in the population, it seems. Is that correct? No. Anomalous misstatement itself means that this misstatement is there only in the sample. How can that give a complete idea of misstatements that are there in the complete population? So this is wrong statement. Got it? Yes. Next, projected misstatements plus anomalous misstatement, if any, is the best estimate of misstatement in the population. So you have found misstatements in the sample, right? These misstatements you will project to the population, right? So projected misstatements, while projecting the misstatements, you need to ensure that anomaly should not be projected, because anomaly is there only in the sample. It will not be there in the complete population. So you will not project anomaly. So projected misstatements plus anomaly alone. Anomaly is not projected. Only normal misstatements are projected, and anomaly without projection you are taking. So projected misstatements plus anomaly, is that, does that give best estimate of misstatements in population? Yes, that will give you an idea of what misstatements can be there in the population. That can be the best judgment. Yes. See, projection means what? Let's say population size is 1000. From that 1000 you have selected sample of 100. Now in 100 sample you have found 11 misstatements. Of that 11 misstatements, 10 are normal misstatement, one is anomalous misstatement. Now you will project these 10 misstatements to population. That means if in 100 misstatements, sorry, in 100 sample 10 misstatements are there, means in 1000 population how many misstatements will be there? 100 misstatements will be there. Like that you have projected. This is known as projected misstatements. Plus anomalous misstatement is only one. Now 101 misstatements. Does projected misstatements plus the anomalous misstatement, did that give a best idea of how many misstatements can be there in the population? Yes, it has given you best idea. So option B is the correct option, and remaining option C, option D, they are irrelevant points. When projected misstatement exceeds the tolerable misstatement, sample provides a reasonable basis for conclusion about tested population or no. If projected misstatement exceeds the tolerable misstatement, how will that to provide you a conclusion, reasonable conclusion about tested population? Irrelevant point they have given. Option D is also same like that only, irrelevant point. So option B is the correct option. Next case scenario 16. As regards the exchange of engagement letter between trust management and auditor is concerned, which of the following statement is likely to be true? For solving this point, this MCQ also, you need not read case scenario. Basically, this auditor has been appointed as auditor of a trust. When you get appointed as auditor of a trust, auditor will give engagement letter to the trust, right? So with respect to that engagement letter which you are giving to the trust, what point can be found in that engagement letter is what they are asking. So 4 points they have given, you need to select the best point. So see, engagement letter is sent by MNO and associates to Bandhu Charitable Trust. Basically these are the names of audit firm and the charitable entity. Yes, this is correct only. Engagement letter is sent by MNO associates auditor to the Bandhu Charitable Trust. It includes a reference to expected form and content of report to be issued by them, and a statement that there may be circumstances in which such a report may differ from its expected form and content. Yes, this point will be there in the engagement letter. So option A looks good. Let us also read the other options and we'll select best option. Engagement letter is sent by Bandhu Charitable Trust to MNO associates. Or no, client will not send the engagement letter to the auditor. Auditor will send the engagement letter to the client. So option B is wrong. Option C, engagement letter is sent by MNO associates to Bandhu Charitable Trust. It includes reference to expected form and content of a report to be issued by them. However, it does not include statement that such report may differ from its expected form or no. You will also include a statement that whatever the form and content that you are giving in the engagement letter, that is subjected to change. So option C is also wrong. Engagement letter is sent by MNO associates to Bandhu Charitable Trust. It does not include reference to expected form and content. No, completely wrong. So option A is the correct option. Next question number 2. Considering the issues related to vehicles as described in the case study, identify the most appropriate statement. Let's see. While performing audit procedure, it is noticed by auditor that bills of two vehicles are not in the name of trust but in the name of trustees. So in the purchase bill, trustee name is there, it seems. However, payment of this vehicle was made from the bank account of trust. So if you are verifying purchase bills and in that purchase bill some other person's name is there, means this procedure of verifying a purchase bill, you are performing to verify rights and obligation assertion. Correct or not? Yes. So here auditor have identified misstatement concerning existence. No. Auditor has identified misstatement concerning right and obligation. In the purchase bill, name of trustee is there, but payment is made from trust account. So ownership assertion, misstatement with respect to ownership, trust and sorry, the right and obligation is being identified by the auditor here. Next question number 3. What course of action should the auditor take regarding the amount payable to the equipment supplier when management has communicated that sending confirmation request could negatively impact the negotiation process? So basically what happened is, company has purchased a particular machinery from a supplier. The amount was 50 lakhs. A company in its books of accounts, it is showing 50 lakhs as payable to that particular person. Now auditor wants to send external confirmation to that particular vendor, but company is saying that, see auditor, there is some dispute going on between our trust and the vendor. Now if you send this confirmation request to the debtor, he might to that particular vendor, not debtor, vendor, he might use this external confirmation as a proof against us in the court of law. So you please don't send the external confirmation. Like that, management is preventing the auditor from sending external confirmation. In such situation, what will you do? is the MCQ that they are asking. In such a situation, you will check reasonability of the reasons given by the management, genuineness of the reasons given by the management, and you will try to obtain audit evidence by performing alternate audit procedures. So auditor should directly issue adverse opinion. No, you should not directly issue adverse opinion. Auditor should seek audit evidence as to validity and reasonableness of reasons for refusal and perform alternate audit procedures. Option B is the correct option. Moving to case scenario 17. Question number 1. Which among the following assertions are discussed with respect to employee benefit expense? Let us see employee benefit expense. So the team verified the following points with respect to employee benefit expenses. Employee benefit expenses recorded in books were actually incurred means occurrence assertion. Expense in respect of all personnel have been accounted for, that means completeness. Next, expense recognized during the period or pertaining to the current accounting period, that means cut off. So these are the 4 assertions that has been addressed, right? So what are they? Occurrence, completeness, cutoff. Occurrence, cutoff, completeness. So 2, 3 and 4, option B is the correct option. Next, MCQ number 2. Whether disclosure of dividend under liability head during the year 22-23 is appropriate. Let us see what is the point related to dividend. It was noted that dividend to equity shareholders for the year 22-23 was declared on 15th April 2023. So dividend of 22-23 is declared in 2023-24. Now with respect to dividend, when will the liability arises? When it has been declared, only then the liability arises, right? So with respect to this amount, should you recognize liability in the year 22-23 or 23-24? You have to recognize the liability in 23-24, not in 22-23. Even though dividend belongs to 22-23, it has been declared in 23-24 and the liability arises only when it has been declared. So you need to recognize as liability only in the year 23-24. Understanding? Yes, sir. However, you can give disclosure in the year 22-23 that dividend of this much amount has been declared in the next year, like that you can give disclosure. So the correct option, yes, it should be recognized in the same year irrespective of year of declaration. No, in which year it has been declared, in that year only you have to recognize. No, amount should be recognized equally between 2 financial years. No, no, amount should not be recognized as liability. Yes, and it should be disclosed in the notes to accounts. Yes, option C looks good. We will also read option D. No, amount should neither be recognized as liability nor be disclosed. No, it should be disclosed in the financial year 22-23 in the notes, but liability should be recognized in next year. Option C is the correct option. Next, question number 3. Krish pointed out that the method followed to obtain data confirmation in the previous year was not in accordance with SA 505. Okay. Therefore, Mrs. Saha and associates should re-perform the same in correct manner. Select the most appropriate procedure among the following. See, for answering this MCQ, you need not to read case scenario. By reading the option, which option is the correct option, you have to select. So see, as per SA 505, confirmation should be directly obtained by the auditor. Yes, auditor has to directly obtain the confirmation. Further, for all significant account balances as on balance sheet date, confirmation should necessarily be collected, and for small outstanding balances, random sampling could be performed. Yes, this statement looks good. Option A looks good. We will also read other options and we will select best option. It is okay to obtain confirmation through client as they are in constant contact with the customer. Is that correct? Can you ask the management themselves only to get the confirmation? No, confirmation should be obtained by the auditor. Option B is wrong completely. As per SF 505, confirmation should be directly obtained by the auditor. Yes. Whereas random selection can be done for all debtors. No. If debtors balance is very huge, you have to specifically send a confirmation to them. You cannot randomly select some debtors and send external confirmation. For all the debtors, you cannot do that. For huge debtors, you need to mandatorily send external confirmation. So option C is wrong. Randomly you can select for external confirmation the small debtors but not huge debtors. Next, either auditor or client can obtain confirmation or no, only auditor can obtain. So option A is the correct option, correct answer. Next, question number 4, which assertion has been affected in case of fixed asset? Let's see. Krish also observed addition in the assets amounting to 50 lakh during the year, supported by sufficient audit evidence. However, upon scrutiny, it was found that some of the invoices were not in the name of company. That means rights and obligation, ownership assertion, rights and obligation assertion has been addressed here. So, rights and obligation, option B. Next, fifth one. Cash and cash equivalents were not properly classified by the client. Which of the following is incorrect disclosure of the same? Let's see. Cash and cash equivalents, how they have classified? See, further, cash and cash equivalents were classified as balance with banks. Yes, that is correct only. So first you will show balance with banks. Next, checks and drafts on hand. Yes, after that you will disclose checks and drafts on hand. After that, yes, you will disclose cash on hand. After that, it will be others. In others, you will need to specify the nature. But they are saying earmarked balances with banks. Earmarked balances with banks will be disclosed separately. Understanding? So here, earmarked balance with banks, this has been wrongly presented in the cash and cash equivalents. So option D, earmarked balances with banks. Next, case scenario 18. First MCQ. As regards the doubt of Mr. Ram described in last para of the case scenario, which of the following statement is likely to be in accordance with standards on auditing? So, in the last paragraph, they have described certain things. After they are saying which one is as per auditing standard. Let's read last paragraph. Mr. Ram, one of the team members, raised a doubt. He inquired regarding recourse available to incoming auditor in case management makes it clear before acceptance of engagement by auditor regarding its inability in providing support to him in respect of certain procedures expected to be performed during the audit. See, before starting the audit itself, management has put limitations on you. Management is telling that we cannot support you in sending external confirmation request, we cannot provide you this information, that information is not available. Like that, management is putting limitations on you before accepting the audit itself. In such a situation, what is the recourse available to you? The recourse available to you is not to accept the engagement, correct or not? So the same is being asked in the question number 1. So the recourse available to you, the auditor should not accept such an engagement. Option C. Got it? Yes, sir. Next, question number 2. When CA Kishan, the partner, asked about preconditions for an audit, Mr. Arun could recollect only few of them. Which among the following points were missed by him? Let's see. With respect to preconditions for an audit, Mr. Arun, a team member, could recollect a few of them. Those included determining whether financial reporting framework used in preparation of financial statement is acceptable or not. Yes, this is one of the precondition. Management providing auditor with access to all relevant information and additional information upon request of auditor. Yes, this is also one of the precondition. It was further elaborated by Arun that management has to provide unrestricted access to employees within the entity as may be required by the auditor. Yes, this is also one of the precondition. Still there are some more preconditions which were not recollected by Mr. Arun. What are they? They have given certain 4 points and they are asking you, of these 4 points, identify the preconditions that were missed by Mr. Arun. Let us read them. Obtaining management responsibility on specific legal aspects governing the organization. Did you read that as a precondition in SA 210? No, this is not a precondition. Obtaining management responsibility on standard on auditing applicable to the entity organization. No, this is also not a precondition. Obtaining management responsibility for preparation of financial statements as per applicable financial reporting framework. This is one of the precondition as per SA 210. Similarly, obtaining management responsibility on necessary internal controls to enable preparation of financial statements which are free from material misstatement, whether due to fraud or error. Yes, this is also one of the precondition. So 3 and 4 are the two preconditions that were missed by Arun is the answer that you need to write. Option number C, which says 3 and 4. Next, identify the incorrect factor mentioned by Mr. Kumar regarding need for revision of engagement letter. See, this also without reading the case scenario itself you can answer. So as per SA 210, in certain situations, in case of recurring audit, you have to consider issuing a new engagement letter, right? So of these 4 situations, which is not that situation? Okay, significant change in ownership. If there is a significant change in ownership, will you consider issuing new engagement letter? Yes, this is one of the factors. So this is not the answer, because in the question they are asking which is not a factor. Okay, incorrect factor they are asking, so this is correct factor only, so that is not the answer. Recent change in the management, because of this also you will consider issuing new engagement letter. Change in financial reporting framework, this also you will consider. Modest change in the nature or size of the entity. See, if there is a change in nature or size of the entity, you will consider issuing new engagement letter. But if it is a modest change means very small change, very minute change. For each and every small change, you will not consider issuing new engagement letter. Getting it? Yes. So option D for this situation. For option D situation, you will not consider issuing new engagement letter. Next, question number 4. Mr. Sripad and Co. have failed to respond to incoming auditors. In this regard, choose the most appropriate option. For this also, you need not read case scenario. So, Sripad and Co. they have failed to respond to incoming auditors. Basically, Sripad and Co. are the outgoing auditors. Sripad and Co. are doing audit of one company. They have been removed by the company, and in their place, another incoming auditor has been appointed. Now, incoming auditor, he needs to communicate with Sripad and Co. Outgoing auditor. Incoming auditor communicated with Sripad and Co. But Sripad and Co., who is the outgoing auditor, did not respond to the incoming auditor. So, now, can you say that Sripad and Co., that is outgoing auditor, has not acted ethically? Yes, they have not acted ethically. There is a responsibility on them to respond. So in this situation, can you say Sripad and Co. has not behaved in a professional manner? Yes, so professional behavior has been compromised. So option D, it was unethical on part of outgoing auditor for failing to respond to communication made by incoming auditor. It is violation of a professional behavior principle. Next, case scenario 19. You can answer this case scenario 19 also without reading case scenario. Directly by reading the MCQs, you can answer this case scenario. See, since it became impracticable for CAB on 31st March 2024 to attend physical inventory counting at warehouse. So, auditor, it was impracticable for the auditor to attend at the physical inventory verification, and also became impossible to perform alternate audit procedure to obtain sufficient appropriate audit evidence regarding the existence and condition of inventory. So it is impracticable to attend at a physical inventory verification, and through alternate audit procedures also you are not able to obtain audit evidence. In such situation, what you will do? You will modify your opinion, right? So option D says modify the opinion in accordance with the report in accordance with SS 705 as a result of scope limitation. Option D looks good. We will also read other options. Omit altogether audit procedure. No. Rely on GHB Limited's perpetual inventory records as audit evidence and express unmodified opinion. No. You have, they are saying that you are not able to obtain audit evidence by performing alternate audit procedures also. So this option is irrelevant. Option B is irrelevant. Take management representation. You cannot solely rely on management representation. So option A also irrelevant. Option D is the correct option. You need to modify your opinion. If you are not able to attend, that is impracticable to attend physical inventory verification, and through alternate procedure also you are not able to obtain audit evidence. Next, which assertion concerning bifurcation of employee expenses into various heads are being verified by CAB? So employee benefit expenses, it is bifurcated into various heads. So there will be basic salary, and there will be PF, there will be ESI portion, right? There will be variance allowances, there will be bonus. So auditor is verifying each and every bifurcation of this employee expense portion. So he is addressing which assertion? Disclosure assertion, presentation and disclosure, whether employee salaries has been presented and disclosed properly or not. So by verifying bifurcation of employee expenses, auditor is addressing disclosure assertion. Option D. See, all these MCQs, without reading case scenario, you are able to answer the MCQ. Okay. Next, due to tight deadlines, CAB has insufficient time to properly perform or complete the relevant duties, and he has to sign off a clean audit report. So it seems he was not having proper time, so he has not performed his duties properly, and he has given clean report. Can you say that auditor has acted negligently? Yes, he has not exercised due care and professional competence, right? So professional competence and due care has been compromised. So which fundamental principle is compromised here? Professional competence and due care. Next, fourth MCQ. Undue dependence on fee from GHB Limited creates which type of threat? So if you are dependent on only single client for a huge portion of your audit fee, it creates a self-interest threat. Option C. Next case scenario 20. Mrs. Christian Co. and Company is a firm of chartered accountants based in Punjab. CAK, CAR, CAI. Okay. We will read MCQ. Based on that, we will go and read the case scenario. In case of difference of opinion between joint auditors, what course of action can Mr. Christian Co take while issuing audit report? See, for answering this MCQ, do you need to read case scenario? No. They are saying if there is differences of opinion among joint auditors, what course of action they will take with respect to reporting. Each joint auditor, they will use separate audit report. Correct or not? The same option you need to select. So option D says they can issue separate audit report, and audit reports issued by joint auditors shall make a reference to each other's audit report in the other matter paragraph. So option D is the correct. If joint auditors are arriving at different opinions, they need not be bound by opinion of majority joint auditors. Instead, they can give separate audit report expressing their own opinion. Understanding? Yes. So option D is correct. Next, the securities premium account of a Pawan Limited cannot be applied for which of the following? So securities premium, you cannot use it for all the purposes, only for certain purposes you can use it. Now they are saying out of the below four purposes, for which purpose you cannot use securities premium? Let's see. In writing of debit balance in profit and loss account, can you use securities premium for a writing off of debit balance in profit and loss account? No. Why? Because debit balance of a profit and loss account is a revenue item, securities premium is a capital item. You cannot set off revenue item, you cannot use a capital item to set off revenue item. So option, yeah, you cannot use security premium account for writing off a debit balance in the profit and loss statement. Got it? Yes sir. Next, MCQ 3, and remaining all other three you can use it for them, no problem. Next, CAI, who is in charge of audit of Nand Cooperative Society, wants to ensure that society has contributed for charitable purpose within the limits prescribed. How much is the society allowed to contribute for charitable purposes? Tell me. maximum how much charitable contribution can be made by the society. It is 10% of the profits available after transferring to the reserve fund. So option A, contribute an amount not exceeding 10% of net profits remaining after compulsory transfer to the reserve fund. So that is the maximum amount which can be given as a charitable contribution. It is not a 20%. Next, question number 4. Which of the following need not be included by audit team as part of audit documentation during handling of their respective assignments? Let's see, of these 4 points, which one need not be included as audit documentation? Significant and specific contracts and agreements, yes, you have to include them in audit documentation. Draft audit engagement letter, you need not include. Final audit engagement letter you should include. So option B need not be included in the audit documentation. Checklist need to be included. Summaries of significant matters should also be included in the audit documentation. Yes sir, got it sir. Next, case scenario 21. Question number 1. Financial events or conditions that may cast significant doubt on the entity's ability to continue as a going concern does not include. So they are asking which among the 4 is not a financial event that may cast a significant doubt on entity's ability to continue as a going concern. If you see, there are certain financial events, operating events and other events, right? Let's see. Inability to comply with the terms of loan agreement, is it a financial event? Yes, this is a financial event, so that is not the correct answer. Inability to pay creditors on due date, that is also financial event. Shortage of important supplies, that means the required raw material is a shortage, it is not available. Is that a financial event or operating event? It is a operating event, because no finance is involved there. Shortage of raw material is a operating event. Option C is the correct option for this MCQ. Next, question number 2, MCQ number 2. Which type of audit report will the auditor issue if the use of going concern basis of accounting is appropriate? So use of going concern basis of accounting is appropriate only, but material uncertainty exists and adequate disclosure of the material uncertainty is made in the financial statement. So use of going concern assumption appropriate and material uncertainty is also properly disclosed, then you will give unmodified opinion with material uncertainty related to going concern paragraph. In that material uncertainty related to going concern paragraph, you will explain about the material uncertainty. Got it? Yes sir. Next, MCQ number 3. If the auditor is of the opinion that written representation are not reliable, what type of audit opinion you will give? See, if written representations that are given by the management are not reliable, you will give disclaimer of opinion. Option A. Next, case scenario 22. See, MCQ number 1. What audit procedures should auditor perform to check ownership of a commercial property discussed in the scenario? See, in order to check ownership of a commercial property, you can verify title deeds. In the title deeds, whether the title deeds are in the name of company or not, you can check, right? By that you can verify the ownership of commercial property. The same option you need to select. See, auditor should request management to obtain. Okay, okay, we'll once read scenario what it is saying. Generally, for verifying ownership of any commercial property, which is any immovable property, you will verify title deeds, right? Now what happened in case scenario? During verification of immovable properties, auditor discovered that Kailash Limited had pledged one of its commercial properties as a security for bank loan. If you have pledged your immovable property with bank, title deeds will not be available with the client, they will be given to the bank, pledged with the bank. In such a situation, how will you verify the ownership of the commercial property? Tell me. You should ask for external confirmation from the bank, right? So see, the auditor should request management to obtain confirmation from bank for holding original title deeds of pledged immovable property as well as security. Option A is the correct option. Next, Which assertion is the auditor evaluating while verifying the existence of vendors and actual receipt of goods or raw material by the company? So this is with respect to purchases. He is verifying occurrence of purchase. So whether purchase has actually occurred or not, he is verifying, because whether vendor is in existent and whether goods have been received, raw material has been received, that means whether actually that purchase transaction has taken place, occurrence, you are verifying. Next, what could be the possible reason for issuing credit notes after end of the accounting period as mentioned in the above case? So in the above case, basically they have issued a credit note. One of the reason why you can issue credit notice might be fake sales you have entered, or there is also possibility that you might give discount to the customer after sale is made, or sales returns has been made by the customer. Because of all these reasons, you will give credit note. You need to read the options and you need to select the appropriate option. First option says fictitious sales by sales team to meet targets and cancel out those sales later with a credit note. Yes, this is one of the possibility for issuing a credit note. So this option looks good. We will see other options also, because there are various reasons why you will issue credit note. The best option you need to select. Ensuring necessary corrections are reflected in the financial records of accuracy. No, for this purpose you will not issue credit note. When issues arise that lead to customer dissatisfaction, credit notes may be issued to resolve the dispute. No, such adjustment may be made based on negotiations or changes in market condition. No, option A is the correct option. Okay, in the given points, option A is more suitable point. Next, question number 4. In the given case, CA Renu found that drawing power calculated was incorrect. What should be the correct drawing power? So if you see in the given situation, they have calculated drawing power as 82.5 lakhs and they have given the data also. Stock value, debtors value, all data they have given, and margin for stock is 25%, margin for debtors is 40%. Based on this, if you calculate drawing power, so stock value they have given 125 lakhs minus damage stock, creditors, margin, A gets as 52.5 lakh. This kind of calculation we have already seen in one of the MCQ, right? Next, similarly, debtors also, if you calculate, B gets as 24 lakhs. If you add both, it becomes 76.5 lakh. So correct drawing power is option B, 76.5 lakhs. Moving to case scenario 23, MCQ number 1. Auditor has performed procedures to obtain audit evidence about design and implementation of controls. Which of the following procedure is more reliable to obtain audit evidence related to application of a control? See, for answering this MCQ, you need not read case scenario. They are saying auditor has performed certain procedure for verifying application of a control, whether control is working properly or not. For verifying that, he has performed certain procedures. Of these procedures, which one is more suitable, they are asking. First one, observing the application of control. Next one, inspecting, inquiry, studying, design of controls. All these things you can use. Observation you can use for verifying control, inspection you can use, inquiry you can use. All of these are the procedures which you can use for verification of the control. But of these, which one is more effective, they are asking. Tell me which one is more effective. See, in case of inspection, you can inspect the control that has already been performed, like in the past, if the control has been executed, whether that control is executed properly or not, you can inspect the relevant documents. Similarly, inquiry also, you can just ask questions. But in case of observation, what will happen? As the control is taking place, you can observe it. So which one is more effective? Observing the control as it is taking place is more effective. More information you can obtain, more reliable evidence you will get about the effectiveness of control if you observe the control as it is taking place. Correct or not? Instead of verifying the documents, that means in case of, instead of inspecting the documents related to control, observing the control as it is happening will give more evidence. Correct or not? So observing the application of control is more, it provides more reliable evidence about the control. Got it? Yes, sir. Next, MCQ 2. Examination and evaluation of internal control is indispensable for CA NIL. That means unavoidable. Indispensable means unavoidable. It provides him necessary comfort relating to completeness of accounting information. However, review of internal controls of entity will not enable him to know the following. Of the four options, which one will not be identified by the auditor, or uh, verifying internal controls will not help the auditor in which aspect they are asking? Let us read. Verifying internal controls, will it help the auditor to identify whether errors or frauds are likely to be located? Yes. If you verify internal control and internal control in a particular area is not operating effectively, then you will get to know that there can be possibility of frauds, errors in that area. So this will be useful. Auditor will be able to identify this with the help of internal control. So this is not the correct answer. They are asking which cannot be identified or for which it is not useful. Understanding? So verifying internal control is useful for the first option. Whether an effective internal audit department is operating? Yes, verifying internal control will also help you to determine whether internal audit department is working effectively or not, because internal audit department is having responsibility to verify internal controls, right? So for this also it will help. Next, will verifying the internal control helps you in deciding whether your opinion needs to be modified? Tell me. In order to decide whether you have to give modified opinion, it depends on three things: availability of audit evidence, whether misstatements are material, and whether misstatements are pervasive, correct or not. So by verifying the controls, you cannot decide whether you can give modified opinion or unmodified opinion. So option C is the correct option. Next, moving to question number 3, MCQ 3. As regards weakness identified by auditor in control system, which of the following represents significant deficiency in internal control? So basically, if you observe here in the question, auditor has identified four significant deficiencies. Four deficiencies. Of that, which one is more significant, they are asking. So basically, all the deficiencies that have been identified by the auditor in the case scenario are significant. So option C, not performing bank reconciliation timely, lack of proper sequence in purchase orders, not verifying wage sheets by responsible official, and lack of insurance for cash in transit. All these are significant deficiencies only, because why these are significant deficiencies? Because of these deficiencies, material misstatements can occur in the financial statements. So option C is the correct option. These are the deficiencies that have been identified by the auditor in the case scenario. You will find in this point, auditor has identified the following deficiencies and they're asking which one is significant. Option C. Next, MCQ number 4. Which of the following is most appropriate regarding auditor's responsibility in accordance with SA 265? SA 265, it deals with communication of deficiencies in internal control with management and those charged with governance, correct or not? That is the responsibility of auditor as per SA 265. Now you have to read these four options and identify the best option. Okay, let us see. First option says to communicate significant deficiencies in internal control to management. Yes, this is one of the responsibility of auditor as per SA 265. This option looks good. Let us also read other options and we need to select the best option. Next, to communicate significant deficiencies in internal control along with the explanation of their potential effects to management. Yes, you should also give an explanation about potential effect. This option number B is more detailed when compared to option A. Still, we'll read other options also. To communicate significant deficiencies in internal control along with the explanation of their potential effects, to provide sufficient information to understand the context of communication to management and express opinion on effectiveness. See, till here it is okay, but providing opinion on effectiveness of internal control, that is not the responsibility of auditor as per SA 265. So option C is completely wrong. Till here it is correct, till communication with management it is correct, but after this it is wrong. Next, to communicate significant deficiencies in internal control along with the explanation of their potential effects and to provide sufficient information to understand the context of communication to management. Yes, option D is having more detailed objective as per SA 265. So option D is the correct option. So you should not come to conclusion by just reading one option. All the options you have to read and best option you need to select. Getting it? Yes. Next case scenario 24. Which of the sampling techniques were used for the following transactions? Okay, for this we need to read the question. So for each of the item, different sample techniques have been used. We need to identify. So first one, random number tables were used for selection of sample for power, telephone and fuel charges. This is a random sampling, right? For fuel charges, they have fuel charges, telephone, all these they have used random sampling. Next, no structured method of sampling was used for office stationery, nothing but haphazard sampling. Next, transactions exceeding 8,000 were selected for travel expenses. Now, this point, transactions exceeding 8,000 were selected for travel expenses. Tell me which sampling method he has used for that travel expenses. Basically, this does not come under sampling at all. This comes under specific selection of item. Basically, if you see, as per SA 500, there are three options for providing performing audit procedure. You can perform audit procedure on 100% of the items, or you can select certain items for performing audit procedures, or you can take sampling. This transaction exceeding 8,000 were selected for travel expenses. This falls under this second option. So this is not at all a sampling technique. Getting it? Yes. So this is not sampling technique. Next, the first 200 sale invoices from the sales book for the month of July were selected for sales. So this is contiguous group of items have been selected. So block sampling. Right, a block of items have been selected, so that is a block sampling. Now if you go and see in the options, for this third item they have given monetary unit sampling technique. That answer is wrong basically, but from the given options the most uh, correct answer is, see, after reading that you only will understand. So first one says random sampling, systematic sampling. This is not systematic sampling. Second one is not systematic, haphazard. So this is not the correct answer. They are saying systematic. This is also not the correct answer. Random, haphazard, monetary, block sampling. And option D, random, haphazard, monetary, systematic. Fourth one is not systematic. This is block sampling. So this is also wrong option. So of the given options, the most correct, the most nearer answer is option C. So you have to select option C. But for travel expenses, the method they have used is not monetary unit sampling. Here this is actually wrong. They should not keep monetary unit sampling as here, but since it is a MCQ, you need to select the best answer. The nearer answer you have to select. Option C will be the correct answer. getting it? But in the case scenario, the method that they have applied is not a sampling. It comes under specific selection of items as per SA 500. Got it? Yes, sir. Next, second MCQ. Which audit procedure was Mr. Kush intended to perform by comparing salary expenses? Let us see. Mr. Kush, one of the team members, compared the salary expenses incurred by the company during the current year with those of the previous year. Nothing but analytical procedure he is performing. So, substantive analytical procedure, option D. Next, question number 3. Which of the following is not part of CA Gagan's responsibility with respect to inventories held by third parties? This you can answer it without reading the case scenario. So, with respect to inventory that is held by third parties, which of the following is not the responsibility of auditor? Let's see. CA Gagan should request confirmation from third party. Yes, he needs to request regarding quantity and condition held by him. This is his responsibility. So, this is not the correct answer. They are asking which is not his responsibility. Okay, not his responsibility. You need to select it. CA Gagan perform independent valuation of inventory based solely on the company's internal records? No, it is not the responsibility of auditor to perform a independent valuation of the inventory with respect to inventory that is lying with the third party. So option B is the correct option. This is not his responsibility. Next says CA Gagan should request third party to allow him to physically inspect inventories. Yes, this is also one of his responsibilities. So this is not the correct answer. CA Gagan should review the terms of agreement between the company and the third party to understand the responsibilities related. Yes, this is also one of the responsibility of the CA Gagan with respect to inventory lying with third party. So this is not the correct answer. Option B is the correct answer. Next, moving to case scenario 25. Question number 1. Which of the following would not form part of explanation given by CAP to Rahul? What explanation CAP has given to Rahul? We'll see. So if you see, we need to read the case scenario for this. PKH Associates, a chartered accountant firm, is practicing in Mumbai since the last 2 decades. Rahul got the opportunity to work as an article clerk with PKH and Associates. After completion of formalities of article clerk registration, Rahul is placed in statutory audit team of the firm. CAP, the partner heading audit team, planned to take Rahul in the audit work of Mrs. Fox India Limited for the financial year 23-24. Till last year, CAK was the head of the audit team for audit of Mrs. Fox India Limited. As it is first assignment of Rahul, he was instructed by partner to go through the audit file of Mrs. Fox India Limited for the financial year 22-23. So, the engagement partner has audited this Fox India Limited even in the last year also. In the current year, he has asked Rahul, who is a article assistant, to go through the audit file of the previous year. That is what they are saying. And familiarize himself with audit procedures and methodology to be followed for the upcoming audit assignment. Now, on going through the audit file of financial year 22-23, Rahul found revised engagement letter, other working papers relating to MAT and deferred tax calculations, and the following extract on the verification expenses. So while he was going through the audit documentation, audit file of the previous year, he found these particular things. Of these things, one of the important thing he found was revised engagement letter. So for the previous year, a new engagement letter was issued. Now what Rahul has done is, we will read these things later on. For the first MCQ, the relevant content I am reading. Now later on, what Rahul has done after reading that previous year's documentation is, Rahul immediately drafted a revised engagement letter for the financial year 23-24 and also specified the scope of audit to include the following things. Now, Rahul thought that it is mandatory to obtain engagement letter for every year and handed over the revised draft of the engagement letter to CAP. CAP is surprised as to why Rahul drafted the same and explained him the situation under which it is necessary to obtain revised engagement letter. So, CAP has explained Rahul about the situations in which you need to give revised engagement letter. So the explanation is about the situations in which a new engagement letter is required. Now they are asking, of the explanation given by CAP to Rahul, what points could have been mentioned by CAP? Understood. So basically the situation what has happened is CAP did the audit of the company in the previous year. Rahul is a new article assistant who is doing the audit for the current year. In the current year audit, he is part of engagement team member. Now CAP, he told Rahul that Rahul, you once go and read the audit documentation of a previous year. While reading the audit documentation of a previous year, Rahul found that a new engagement letter, revised engagement letter was issued for previous year. Since revised engagement letter was issued for previous year, he has prepared a new engagement letter for the current year also and gave it to CAP. Now CAP said to Rahul, see Rahul, it is not required to give a new engagement letter for each and every audit. Only in certain situations you have to give new engagement letter in case of recurring audit. So what are those situations have been explained by CAP to Rahul. First, we need to select the point which would not have been there in that explanation, so not forming part of the explanation. First, recent change in the senior management. If there is a recent change in the senior management, will you give new engagement letter for recurring audits? Yes, you will give. So this is not the correct answer because this would have been explained by CAP to Rahul. A significant change in nature or size of the entity. Yes, in this situation also you will give new engagement letter. Replacement of CAK by CAP. If CAK, the engagement partner who has done the audit in the previous year, is replaced by CAP, in such a situation, do you need to give a new engagement letter? No, not required. If you see in SA 210, you will find the situations in which a new engagement letter has to be given in case of recurring audits. They are asking you in which situation new engagement letter not required. Option C. Got it? Yes, sir. Next, which of the statements included by Rahul in revised draft engagement letter is incorrect? So, in that revised draft engagement letter which Mr. Rahul has prepared, he has included 4 statements. Now, they are asking you which statement is wrong, which need not be included in the engagement letter. First one, reliability and sufficiency of financial information. Yes, this can be included in the engagement letter. Proper disclosure of financial information. Yes, this also can be included in the engagement letter. Responsibility of auditor to prepare financial statements. Is it the responsibility of auditor to prepare the financial statements? No, it is the responsibility of management to prepare the financial statements. So this point, statement 3 need not be given in the engagement letter. So option C is the correct option. Next, how will you categorize the information pertaining to financial year 22-23 in relation to extract found? So this is the extract. By seeing this, so serial number, nature of audit procedure, extent of checking, basis of sampling, who has done this. This is the sample of audit program or audit plan. Audit program. So this is part of audit program. Option number B. This same was part of audit program. Next, which of the audit procedure performed before finalizing the audit report of Mrs. Fox India Limited by Rahul is not as per SA 560. 560 is with respect to subsequent events. So, CAP has performed certain procedures. Of those procedures, which is not related to 560, let us see. These are the procedures. Obtain understanding of procedures established by company to ensure that subsequent events are identified. Yes, this procedure you will perform as per SA 560. So this is not the correct answer. Inquired management of the company as to whether subsequent events have occurred. Yes, this also you will perform as per SA 560. Read the entity's latest subsequent interim financial statements. Yes, this also you will perform as per SA 560. Read minutes of meetings of Mrs. Fox India Limited that have been held up to 31st March 2024, they are saying. Yes, you will read the minutes of meetings, but not of the meetings that were held till 31st March, that were held after 31st March. Those meetings you will read. So, option 4. See, option 4 looks like a correct option, but he has just changed the wordings. So it becomes wrong option. Understanding? If he said that reading minutes of meetings of Mrs. Fox India Limited that have been held after 31st March 2024, then this also would have been the procedure as per SA 560. But they have told that meetings till 31st March. So this is not the procedure as per SA 560. So fourth procedure, option D is the correct answer. Next question number 20, MCQ number 26, the case scenario number 26. Control target will be categorized in which of the following? So what is this control target? During this process, CAF observed that entity has, so while doing the audit, auditor has observed that entity has identified various controls to mitigate the risk. The entity has implemented a control named target. So they have implemented a particular control. The name of that control is target. Now what is the objective of this target? Whose objective is to ensure that production systems are processed to meet the financial reporting objectives. So this objective you will find for controls over data center. See, production system means what is meant by production system? Production system means nothing but the software that you are actually using is known as a production system. Now the objective of this control is to ensure that production systems will process the data so that the financial reporting objectives will be achieved. So this control is the control over data center and network operation, option D. If you have read the control on data center and network operation, you will find one of the objective of controls over data center and network operation as this point, to ensure production systems are processed to meet financial reporting objectives. Next, which of the procedures performed by CAF is suitable for satisfaction of concern regarding the borrowing? Let us see. CAF wanted to ensure that all borrowings on the balance sheet represent valid claims by bank or other third parties. Accordingly, he performed the following procedure. So CAF, he wanted to ensure that only loans and advances on which company is having obligation are shown. For that, what he has done, reviewed subsequent transaction after the end of the reporting period. This will give you evidence about existence, not about the right or obligation. Recomputed the interest. This will give you evidence about valuation assertion. Reviewed board minutes for approval of new lending agreements. This will give you evidence about obligation. So in the board minute, in the board's meeting, did the board of directors approve for taking the loan? If they have given approval, then they have accepted obligation for that loan. So third procedure, yes. So option C, procedure number 3. By performing that procedure number 3, CAF can get satisfaction that only those loans that belongs to company have been shown. Next, do you agree with all the ways suggested by CAZ to CAF? We need to see what has been the suggestions that has been given. So yeah, on completion of risk assessment procedure, CAF was wondering as to how he can verify the existence of related party transaction. Related party transaction, which standard SA 550, right? And transaction. So he consulted one of his colleagues, CSG, who suggested following ways to identify the same. So in order to identify related party transactions, what procedures you will perform? CAZ has suggested certain CAF has been suggested by CAZ certain procedures. You need to identify which is the wrong procedure. Information supplied by entity to regulators, yes, this procedure you will perform. Entities income tax returns, yes, you will see these things. Inventory records maintained by the entity. By verifying the inventory records maintained by the entity, how will you get information about the related party transactions? So third procedure suggested is the wrong procedure. So option number C, suggestion 3 is not correct. Next question number 4. CAF performed which of the following analytical procedure to obtain audit evidence with respect to overall reasonableness of purchase quantity and price of raw material? Let's see. So if you see, CAF decided to perform analytical procedures to obtain audit evidence as to overall reasonableness of purchase quantity and price. For this, CIF scrutinized raw material consumed as per manufacturing account and compared the same with the previous year. So how much raw material consumed during the year, he compared it with the previous year. This is nothing but a trend analysis, correct? This is a trend analysis, how much you consumed current year, how much you consumed in previous year. If you specifically give in, if you wanted to specifically give another name for this, you can say this as consumption analysis. Understanding? So consumption analysis is part of trend analysis. Since you are analyzing how much has been consumed in the current year comparing with the previous year, you will call it as consumption analysis. If in the options, if you don't find consumption analysis, best option would be trend analysis. Getting it? Since in the given options consumption analysis has also been given, option A would be the correct option. Got it? Yes sir. If consumption analysis is not given, then trend analysis will be the best option. Okay. Next case scenario 27. Whether asset classification of account of X Limited is correct, we need to read issue number 1. Consortium cash credit facility granted to X Limited. HFC Bank is a consortium member providing cash credit facilities of 50 crores to X Limited. With HFC's share being 10 crore over the past 2 quarters, interest amounting to 1.75 crore have been debited in the cash credit account of X Limited, while credits in the account amount only 1.25 crore. So interest charged is 1.75 crore, but the credits is only 1.25 crore. So the credits are not even sufficient to meet the debits, that is the interest charged for a period of 90 days. So can you say this account as out of order? Yes, it is a out of order, and once it is a out of order, you need to treat it as NPA, non-performing asset. Now, despite this shortfall, account has been classified as a performing asset, it seems. Is the classification correct? No, the classification is wrong. Option A says classification correct. No. This also says correct. No. No. Option D, classification is not in order, as classification has to be done on the basis of record of recovery of HFC Bank only. Option number D is the correct option. Next question number 2. Is the bank's decision not to apply NPA and income recognition norms to SJ Limited valid under regulatory guidelines? Let's see. Asset classification of SJ Limited. SJ Limited's accounts has seen no recovery for the past 18 months. However, bank has not applied NPA norms or income recognition norms to this account. The management justifies this by stating that account is guaranteed by central government and that NPA and income recognition norms are not applicable. See, if account has been guaranteed by central government, then you will not classify that account as NPA for provisioning purposes. But for income recognition purpose, you need to classify the account as NPA. In the given question, they have not classified the account as NPA both for provisioning and also for income recognition purpose, which is wrong. Correct or not? Yes. So option A says bank is correct. No. Option, okay, let's read the complete option. The bank is correct to the extent of not applying NPA norms for provisioning purpose. However, this exemption is not available in respect of income recognition norms. Yes, option A is the correct option. Next, question number 3. ABC Traders offered its warehouse as security for the loan. HFC Bank created a charge on the warehouse. Which form of security has been created? See, if you have offered your warehouse as a security for the bank loan, the charge that creates, you will call it as mortgage, right? Yes, so it is mortgage. And they are also asking whether bank is required to get stock audit done for cash credit facility. If you see in the case scenario, the cash credit that they have taken is 4.5 crore. Since the cash credit limit is less than 5 crore, stock audit is not required. Only if the cash credit limit taken is more than 5 crores, only then stock audit is required. So in the given situation, stock audit is not required. Option A says this is pledge, no. Option B says this is mortgage, and bank is required to get stock audit. No, it doesn't need stock audit. Option C says pledge, wrong. Option D says security created is a mortgage and bank is not mandatorily required to get stock audit done of cash credit account of ABC traders. Yes, option D is the correct option. Whether correct classification and provisioning norms have been applied in the account of precision engineering, let's see. So in the precision engineering, what happened is they have taken a cash credit limit of 300 lakhs. That means 3 crore cash credit limit they have taken, and outstanding balance is 3.08 crore. Okay, bank classified the account as a substandard. One fine day, DGM of bank was passing through the area in which borrower is located and bank observed that building occupied by the borrower is damaged and there is no machinery, stock and other assets available in the premises. Borrower was not available telephonically and no contact could be made with him. He ordered independent verification of assets and a report was submitted that no security mortgaged with bank is available. Report has been accepted by bank authorities. Only a piece of land with realizable value of 25 lakh is available as of now. So value of loan is 3 crores, but the securities value is just 25 lakhs. So here value of security has fallen less than 10% of amount outstanding, right? So let's just round it up as 3 crore. Amount outstanding is 3 crore 8 lakhs. We'll just round it off for calculation purpose. So multiplied by 10% means it gives around 30 lakhs, right? And value of security is 25 lakhs, which is less than 30 lakhs. So in this situation, since the value of security has eroded less than 10% of the amount outstanding, you need to classify this account straight away as loss asset. Instead, what they have done is bank made a provision in its books of accounts considering the account as a standard asset. Is that correct? No, they have to treat it as NPA and a loss asset. Option A says account is correctly classified. Wrong. Account should have been classified as doubtful. No, it should have been classified as loss asset. Account should have been classified as loss asset and full provision should have been made in the books of accounts. Yes, option C is the correct option. Case scenario 28. So question number 1, basically this particular case scenario, there is also question, same type of question is there in the question bank. See, we'll read the case scenario. A government department has been allocated a budget for infrastructure development. During the audit, auditor observed several discrepancies that raise concern regarding the management and utilization of funds. The key findings include the following. Now, there are these 5 key findings. Based on above facts, answer the following MCQs. Now, in the MCQs, each MCQ is related to each of these points, like that 5 MCQs have been given. Now, see, first point. Some payments were processed without proper approval from the competent authority. To identify this, which type of audit has to be conducted? Audit against sanctions. If you do audit against sanctions, you will identify any payments that were processed without proper approval. First MCQ is that only, audit of sanctions. Next, a large scale project was implemented, but no assessment was made to determine whether expected benefits were achieved or not. That means whether the desired results are achieved or not, target achieved or not. This comes under effectiveness of program. To identify effectiveness of a program, you need to conduct a performance audit, triple E. So for second question, performance audit, option D. Next, funds were utilized from an account for which no budgetary provision has been made. So this kind of thing can be identified in case of audit against provisions. So option A, audit against provision of funds. Next, certain expenditure were made without adhering to prescribed financial regulations. This can be identified in case of audit against rules and orders. Right, option B. Next, there were instances of unnecessary spending that did not align with the principles of financial propriety. This can be identified in case of propriety audit. Option C. So this is 5 MCQs, case scenario 28. Now moving to case scenario 29. Which of the following fundamental principles of ethics is being violated when Sumit was instructed to present more favorable picture of a company's financial health? So Mr. Sumit, he is one of the article assistant in the case scenario. Now auditor asks Sumit to present more fair picture, like not more fair picture. He is asking, we'll read the case scenario, you will get to know. See, CA Sumit, working in BRS and Associates Chartered Accountants, has been assigned to prepare the year-end financial statements for rapidly growing tech startup Innotech. The company has been under pressure to show strong financial results to attract new investors. Sumit's manager Viraj has instructed him to arrange sum of numbers, particularly the reported revenues and expenses. So he has been asked to show more revenue, more expenses, so as to give the fair, not fair picture, so as to give the increased picture. So actually revenue is one thing, but they are asking to show more revenue. So if CA Sumit does this, what will be compromised? Integrity will be compromised, correct or not? If you don't show the actual picture, if you alter the actual picture and show more revenue, more expenses, it will violate integrity principle. So option B. Next, which type of threat arises in case of development of relationship with the CEO? So if you become more familiar with CEO, if you develop more relationship with CEO, it creates a familiarity threat to independence, correct? Yes. So option D. Which principle would Smith violate if he disclosed financial details to third party without the permission of company? Of course, confidentiality, right? So without reading case scenario, you can answer these particular MCQs. Next, case scenario 30, right? Yes. Considering table given in the case scenario, which of the following combination is a appropriate example of non-funded credit facilities provided by branch to its customers? So from the following, you need to identify non-funded credit facilities. Bills purchased, discounted bills for collection, that is a funded credit facility. So this is not a correct answer. Bill for collection, funded. Bills purchased and discounted, letter of credit issued. See, bills purchased and discounted, that is a funded. Letter of credit, it is non-funded. Guarantee issued, this is also non-funded. So option D. So from the given list of loans, letter of credit and guarantees, these two are non-funded facilities. Next, CAB's decision to perform both test of control as well as substantive test was taken after he had assessed risk of material misstatement in the financial statements to be high due to large number of small ticket size loans. Which standard on auditing deals with the auditor's responsibility to design such a test? So designing the audit procedure is dealt by which standard, they are asking. If you see, as per SA 315, you will identify risk of material misstatement, right? If ROMM is high, you will perform more substantive procedures as per SA 330, correct or not? So for whatever risk that you have identified here, you will give your response as per SA 330. Your response is nothing but the audit procedures. So you will design your audit test as per SA 330. Got it? Yes, sir. Next, MCQ 3. Saurabh is unable to understand the relevance of going through SMA. SMA means Special mention accounts. What is special mention account? There are three categories of special mention accounts. SMA 0. If a loan account is outstanding from 1 to 30 days, you will categorize it into SMA 0. If it is outstanding from 31 to 60 days, you will categorize it as SMA 1. If it is outstanding from 61 to 90 days, then you will categorize it as SMA 2. And if it is outstanding for more than 90 days, you will categorize it as NPA. Now, what is the purpose of categorizing the loan accounts into SMA as on 30 November 2023? Which of the following statement is more appropriate? Basically, you will categorize the loan account into SMA in order to identify the accounts where the probability of the account slipping into NPA is very high. To identify those kind of accounts at the early stage, you will categorize the loan accounts into SMA category. So option D, it would help auditor in identifying accounts which may involve downgrading from standard category to non-performing asset. Instead of waiting till the asset turns into NPA till 90 days, instead of waiting, if you keep some other type of categorization before NPA, such as SMA 0, 1 and 2, you can identify the assets before they turn into NPA. Got it? Yes, sir. That is the purpose of SMA jotting. Next, case scenario 31. Question number 1. Which assertion is the auditor testing when they verify that employee benefit expenses do not include cost of unauthorized personnel? So only only the salary that is paid to actual employees, existing employees only should be recorded, and salary paid to unauthorized employees should not get recorded. That means only the salary expenditure that has occurred should be there. Salary expenditure, fake salary expenditure should not be there. That will be coming under occurrence assertion, right? Option B. All items of inventory pertaining to relevant year shall be included regardless of the location. Which assertion? It is the cut-off assertion, right? Option D. So all inventory that relate to current year should be recorded in the current year only, correct? That is cut-off assertion. Next, auditor reviews purchase invoices have been made in the name of client. Which assertion is he primarily testing? Rights and obligations. See, here you might see that the question says purchase invoice. Here, purchase of inventory. Understanding? So whether inventory is in the name of a client only or not. So for inventory, you are checking rights and obligation assertion, option B. Not for purchase, you are checking for the inventory. Getting it? Yes. You might say, sir, purchase is a P&L item, and for P&L item, rights and obligation assertion will not be there. Like that, you might get a doubt. Here you are testing for inventory. Understanding? Purchase invoices. What will you purchase? Inventory you will purchase, correct or not? So whether that inventory has been purchased in the name of client or not, you are checking. So here you are checking rights and obligation assertion. Next, question number 4. When the auditor assesses whether inventory has been valued at lower of a cost or NOLV, which assertion is being addressed? Valuation assertion. Simple, right? Yes. Next, case scenario 32. MCQ 1. Which threat to the firm's independence exists in case CAP as referred in the observation 1? Let's see observation 1. CAP, a partner of firm, performed both statutory audit and non-audit engagement services for Green Private Limited. This will create a self-review threat. Option B, because the work which you might have done in a non-audit engagement, you only might have to verify it in case of audit. So this will create a self-review threat. Next, with reference to observation 2 related to CAL, which type of threat exists? Let's see. CAL, partner of firm who has done income tax audit for Mrs. Future Associates, wherein CAL has a material significant indirect financial interest. Whenever there is a financial interest, that will create a self-interest threat. Option A. Next, which threat to independence is involved in observation 3, wherein audit team accepted expensive gifts and hospitality? So if you are accepting expensive gift and hospitality, only if you have become more familiar with the client will give them, correct or not? So this is creating familiarity threat. Option D. Identify the type of threat to independence on the basis of threat given by the client. So client is threatening the auditor, nothing but intimidation threat. Option A, right? Yes sir. Next case scenario 33, question number 1. What type of audit test is CA RIA performing when verifying major invoices in the store renovation expenses? So store renovation expenses, is it a transaction or a balance? This is a transaction. So for that, whatever the procedures you are performing, you will call them as a test of transactions, right? Option B. Next, identify which type of assertion she intends to test when she wants to ensure genuineness of trade receivables. So genuineness of trade receivables means whether trade receivables actually in existence or not. For that, option C, existence of trade receivables, correct or not? Yes. Yes, trade receivable balances are genuine or not overstated. That means existence. Next, when analyzing advertising expenses of a current and previous year and their relationship with total sales, this is nothing but a substantive analytical procedure. So whenever you see the term analyzing and comparing current year with the previous year, you will blindly say it as substantive analytical procedure, right? Yes. Next, which audit procedure is being performed by CA RIA? By reviewing property documents for a newly acquired showroom. So property documents you are reviewing for checking whether it is in the name of the company or not. That means rights and obligation assertion, right? They are asking which audit procedure, not the assertion, audit procedure. So by verifying documents comes under inspection, correct? So option B, inspection. You are inspecting the documents. Next case scenario 34. Amit has bought stock in XYZ Private Limited and his investment could benefit from issuance of a unmodified opinion. This will create self-interest threat. Option A, right? You have invested in the company and you are also doing audit of that particular company. Next, in the given case, Amit is selecting sample to verify trade receivable balance where larger balances have higher chance of being included. So if the value of item is more high, the chance of that getting included into sample is high. This method is nothing but monetary unit sampling. Option D. Meera is reviewing a method for calculating software development cost that she helped in creating while working at XYZ Private Limited. Meera, she has helped in developing a software. Now being auditor team of that particular company, Meera is also verifying the genuineness of that particular development cost. So this will create self review threat. Option D. You are only reviewing your own work. Next, Raj, the CEO, is requesting the Meera and Amit to modify the financial statement disclosure in a misleading manner. Which fundamental principle of professional ethics would be violated? Integrity will be violated, correct or not? Yes. So actually the position is one, but company is asking to show some other position, wrong position. So it violates integrity. Moving to case scenario 35, MCQ number 1. Keeping in view Keeping in view description provided in the case scenario, which of the following statement is likely to be most appropriate? So we have to read the case scenario first of all. For this, before reading the case scenario, let us once see what these options are about, so that we will get an idea of what has to be searched in the case scenario. So the options are speaking about that the engagement partner is known socially to promoters and directors of the company. It seems engagement partner is socially known to promoters of company. The situation mandatorily involves advocacy threat consisting a doubt on auditor's independence. Irrespective of this, detection risk in engagement is low. So options are speaking about certain threat to independence, and also they are speaking about detection risk. So we need to read the case scenario, and based on case scenario we have to determine whether detection risk will be low or high in the given scenario, and what threat might exist to the auditor. These two we need to identify. Okay, yes. So let us read the case scenario. DS and Co chartered accountants or statutory auditors of SAR Industries Private Limited, a company engaged in manufacturing business since 2018. The company operates from rented premises and it does not have building of its own. It had upgraded its machinery last time in 2020. Except interest in this company, promoters, directors, KMP and their relatives don't have interest or ownership in any other entity. Also, the company does not enter into any business dealings with promoters, directors, KMP and their relatives. The director and KMP get only reasonable remuneration from the company. Though the company has an internal control system in place, it has not appointed internal auditor. It also not mandatorily required to make such appointment. Okay, all this is not necessary for our MCQ. Next, DS and Co have accepted audit of the above company for the year 23-24 for the first time. Promoters and directors of company are known to engagement partner only socially for quite some time. So promoters are known to the engagement partner only for some time, that too only socially, not professionally. So this does not create any familiarity threat. Just knowing for a shorter duration of time, will it mandatorily create a familiarity threat? No, there is rare chance of creating familiarity threat, but mandatorily it will not create any familiarity threat. So by seeing the relationship that is given in the case scenario, this will not mandatorily create any familiarity threat. Okay, so answer to the first question we have got it. Next, how it is for the first time that, however, it is for the first time that any type of professional work related to this company has been accepted by them. Okay. While formulating audit plan for the company, CAD has planned certain risk assessment procedures and further audit procedures consisting of test of controls and substantive procedure in related to different areas. Now here you need to observe that auditors, they are doing audit of this company for the first time. If they are doing audit of this company for the first time, they are having less experience with this company. So there is a high chance that whatever the audit procedures that they perform, they might not be able to detect the misstatements, correct or not. So detection risk will be high in this company because auditors are auditing this company for the first time. So we also got the answer with respect to detection risk. And also, if you see, turnover of the company has increased from 15 lakhs or 15 crores to 30 crores, so there is a drastic increase. And also gross profit increased from 3.75 to 6. So since there is a drastic increase, the size of the entity has also increased during the current year when compared to the previous year, and auditors are auditing the company for the first time. Because of these two reasons, the audit procedures that the auditor performs might not be able to detect the misstatements, so the detection risk is high in this situation. So we need to select the option which says familiarity threat will not be created mandatorily and detection risk will be high. The option which says that should be selected. Option A says detection risk is low, so this is not correct answer. Option C also says detection risk is low, so this is also not correct answer. So either option B or option D. Let us read. Engagement partner is known socially to promoters and directors of the company. The situation mandatorily involves familiarity threat. No, it may involve familiarity threat because the duration is very shorter duration. It doesn't mandatorily involve familiarity threat. So option D is the correct option. The situation reflected in the case scenario may not constitute threat to independence. You cannot say that it will not, you cannot say it will not, because you don't know, it might also create a familiarity threat. So you, but there is no 100% guarantee that a familiarity threat will exist, that can't be said, right? So they are saying it may not constitute a threat to independence of auditor mandatorily. Irrespective of this, detection risk in the engagement is high. Option D is the correct option. Next, see, when compared to all other case scenarios, this case scenario is somewhat difficult. Next, CAD has included in audit plan certain procedures in respect of PPE items. So with respect to fixed assets, certain audit procedures have been included. Which of the following audit procedure included in audit plan is likely to be least relevant? You need to observe, the MCQ is not asking you to identify the audit procedure which is not relevant. The question is not that, which is least relevant they are asking. So all the audit procedures, all the options are relevant only. From that options, you need to identify the option which is least relevant. So you need to apply your brain for this MCQ. So see, first option they are saying, inspecting and reviewing companies' plans for physical verification of PPE. Yes, company's management, it should conduct physical verification of PPE. Auditor should verify the plan of a company for verifying the physical inventory verification. Yes, not physical inventory, physical PPE verification. So this is relevant and more relevant only. Assessing depreciation method used. So if method of depreciation used by the management is wrong, the entire value of the asset will become wrong. Correct or not? It will have lot of impact on the valuation of the asset. So, and judgment is involved in selecting the depreciation method. There is a possibility that management wantedly they might select a depreciation method which is more useful to them. So the chance of wrong depreciation being selected is very high. So this method is very relevant. Next, verifying cost of PPE items acquired during the year with purchase bills. So whether amount recorded in the books of accounts, is it matching with the purchase bill? So if with respect to particular asset, purchase bill shows 80,000, whether same 80,000 only shown in the books of accounts or not, this procedure you will perform. But what is the chance of wrong amount being entered in the books of accounts? Mostly none of the management will commit this uh, latent fraud. Correct or not? This is very visible in the purchase invoice. It is showing 80,000. How can you enter in the books of account 70,000? Auditor will easily identify. Correct or not? Yes. So there is less chance for fraud happening in this area. Correct or not? So option C is less relevant audit procedure. Understanding here, this audit procedure also you will perform, but when compared to other audit procedures, this is less relevant. Why? The chance of fraud happening in option A is high, because there is a possibility that some of the employees might take away their assets and it might be still showing in the books of accounts. So to avoid that situation, management has to compulsorily conduct physical inventory verification, physical PPE verification. So that is more relevant. Next, depreciation method also, the chance of fraud occurring is very high. But in case of this purchase bill amount, the amount at which PP has been recognized, the chance of fraud occurring there is less. Yes, fraud can occur, but the chance of occurring is less. Why it is less? Because it will be visible in the purchase invoice what is the value at which it has been purchased, and at that same amount you have to recognize. If at all management has wrongly recognized the amount of PPE, auditor will easily identify it. Correct or not? So option C is less relevant. This option C procedure is less relevant. Getting it? Yes. Next, recalculation of depreciation charge in the statement of a profit and loss account. This is also more relevant when compared to option C and D. C is less relevant. Getting it? Yes. See here, for this MCQ you need to apply your knowledge and identify which is less relevant. Here you should think, if auditor doesn't perform which of the following procedure, the chance of fraud is more. Understanding, wherever the chance of fraud is more, that procedure is more relevant. Wherever the chance of fraud is less, that procedure is less relevant. Understanding, you have to think this from the point of view of chance of occurring of fraud in the situation. Got it? Yes. Next, question number 3. Which of the following statement is likely to be most suitable to explain the fact relating to variation in gross profit ratio as compared to last year? Let us see first of all what has happened to gross profit. So in the last year 22-23, gross profit is 3.75 lakh and turnover is 15 lakhs. So GP ratio, let's write GP ratio. GP ratio, if you do 3.75 divided by 15 into 100, it comes to 25%. And here in this year 6 divided by 30, it comes to 20%. So gross profit ratio has reduced, right? So what could be the reason for reduction of gross profit ratio? You need to identify from the following options. Let's see. Option A says, first of all, option B says that gross profit ratio increased, but in the given scenario, gross profit ratio decreased. So option B is wrong. Now let's read remaining options. Option A says gross profit ratio has decreased in the year 23-24 as compared to year 22-23. It may be due to fact that sale price may have been reduced by the company. Yes, if you reduce the sale price in order to procure more orders, gross profit ratio automatically it falls. So option A looks good. Let us also read other options. Gross profit ratio decreased in 23-24 as compared to, yes, it may be due to the fact that office staff salary engaged in administrative functions. See, this is indirect expenditure. Indirect expenditure will impact net profit ratio but not gross profit ratio. So this is wrong option. Next, last option, it may be due to the reason that company has not made allowance for obsolescence of inventory with rest. No, this is also indirect only. Allowance for provision for obsolete inventory, which will impact net profit, not the gross profit. So this is also wrong option. Sorry, this is direct only, but if allowance is not made, gross profit will increase. Correct or not? This point, allowance for obsolescence of inventory, that will impact gross profit only, but this will increase the gross profit, not reduce the gross profit. Correct? So this is also wrong option. Option A is the correct option. Next, question number 4. CAD has also studied purchases and sales data of the company during the year and has also compared such data with the preceding year and earlier years also. It is an example of course, this is a ratio analysis, right? Sorry, not ratio analysis, trend analysis. Sales data of company has been compared with preceding year and earlier year. So this is a trend analysis. No ratio is involved here. So this is option B. Trend analysis forming part of substantive analytical procedure. If ratios are involved, you will call it as ratio analysis. Next moving to MCQ 5. Considering the whole case scenario, identify which of the following combination of standards is not proper for their likely relevance in performing and completing the above engagement. Now, if you see in the case scenario, they have specifically mentioned 2 points. What are those 2 points? If you observe, they have said here, I will use green pen. They have said the company does not enter into any business dealings with the promoter, director, key managerial personnel and their relatives. That means company is not having any related party transactions. Correct? If it is not having any related party transactions, SA 550 is not applicable to it. Correct or not? Similarly, they have also said one more thing. If you observe this one here, it has not appointed internal auditor. It is also not mandatorily required to make such appointment under provisions of Companies Act 2013. That means internal audit also not there for them. If internal audit itself is not there, how can statutory auditor use the work of internal auditor? So SA 610 also not applicable to them. Correct or not? So now in the options, in whichever option you find SA 550 and 610, that you have to select. Got it? So if you see, option 1 says SQC1, SA 220, 501, 505. All these are relevant only because SQC1, SA 220, they are relevant for every case scenario. Whatever case scenario has been given with respect to audit, it will be relevant because SQC1 is quality at the firm level, SA 220 is quality at the audit engagement level. They are relevant for all the audits. And SA 501 and 505 both are related to evidence. In the case scenario, they have spoken about evidence with respect to inventory, right, which will be dealt in SA 501. So 501, 505, they are also related to evidence only. So you can't say that they are not relevant for the case scenario. Option B says SA 550, related party, not at all applicable to the case scenario. And 510 is applicable to the case scenario because this is the first time the auditor is auditing this particular company. Initial audit engagement, opening balances. So 510 is relevant. SA 210 also relevant. So this is relevant, this is relevant, but 610 is not relevant. So this one not relevant. So the combination of these standards is not relevant to the entity. Yes, individually 510 and 220 are relevant, but combination of these 510, 220, 610, 550 is not relevant because they are asking, if you see, combination of standards is not proper. They are asking, not, they are not asking individual standards, group of the below standards, which is not relevant. So option B will be more correct answer. Understanding? Next, option C says SA 220, SA 500, again with respect to evidence, quality. 510 initial audit engagement, opening balances. 700 format of audit report. This is also relevant for all the case scenarios. Whichever case scenario is given with respect to audit, the format of audit report is as per SA 700 only. So these are also relevant. Next, SQC1, SA 700. All these are relevant groups only except option B, because option B is having 550 and 610, which are not relevant for the case scenario because they have specified certain points saying that these standards are not applicable. I have shown you those points in the case scenario. Got it? Yes. See, when compared to all other case scenarios which we have seen, this particular case scenario is somewhat difficult. Okay. Next case scenario 36, which dash is conducted to ensure that various programs, schemes and projects where large financial expenditure have been incurred or run economically and are yielding results expected of them. Nothing but performance audit. Triple E, economy, efficiency, effectiveness. So performance audit, option C. Next, question number 2. While conducting an audit against provision of funds, statutory auditors Mrs. Rama and associate must check which aspect. Let's see. Provision of funds means whether there is a provision made for this particular expenditure, whether amount expended is within the limit or not, within the limit of provision or not. Checking these things. So option A says that the each item of expenditure is covered by the sanction. This comes under audit against sanctions. So this is wrong. That expenditure incurred has been on the purpose for which the grant and appropriation has been provided, and the amount of such expenditure does not exceed the appropriation made. So this is the correct option. Under audit against provision of funds, this is what you will check. Next, MCQ 3. Which type of expenditure audit covers? Which type of expenditure audit covers? Scrutiny of expenditure incurred on the construction of stockyard by the company, which is considered as infructuous and avoidable expenditure. So all the expenditures which are avoidable and infructuous can be identified under propriety audit, right? So option A. Next, moving to case scenario 37. Mr. B, an article clerk responsible for audit procedure considering. See, for all these MCQs, you need not read case scenario. Without reading case scenario, you can answer this MCQ. Mr. B, article clerk responsible for audit procedure concerning inventory, found that inventory amounting to rupees 38 lakh after excluding 2 lakh of inventory that was held by PQ Limited as a consignee has been recognized in the balance sheet. Which of the following assertion related to inventory are applicable in the situation? So audit clerk is checking whether all the inventory that belongs to company is only recognized in the books of accounts. That means completeness and also rights and obligation assertion is involved. All the inventory, complete inventory that belongs to the entity, that means on which the entity is having right, only that inventory is being included or not, that is being checked in the scenario. So the two assertions that will be involved are completeness assertion, rights and obligation assertion. These two assertions are involved in this MCQ. So 2 and 3 option B. Next question number 2. Mr. C, an article clerk responsible for audit procedure regarding the share capital, found that during the year under audit, PQ Limited had issued sweat equity shares amounting to 10 lakh rupees. Which of the following statement regarding sweat equity shares is correct? Let us read. It can be issued to employees. Yes, this is correct. It can be issued to directors. Yes, this is also correct. It can be issued at discount. Yes, this is also correct. It should be of class of shares already issued by PQ Limited. Yes, this is also correct. So all of the above 1, 2, 3 and 4 all are correct. Option D. Next question number 3. Mr. D, an article clerk, was performing audit procedure related to reserves and surplus in PQ Limited. Tell him that which statement are correct in respect of reserves and surplus. Let us see. Reserves are the amounts appropriated out of profits. Yes, these are the amounts appropriated out of profits for commitment. No, not always you will appropriate for commitment. There will be some reserves which will not be having any specific purpose. Correct. There can be some free reserves also. So first statement is wrong. Next, securities premium is a capital reserve. Yes, this is a capital reserve. Debit balance in statement of profit and loss account should be shown as a negative figure under the surplus. Yes, it should be shown as a negative figure. All reserves can be used to augment, that means increase working capital of the company. No, you cannot use all the reserves for increasing working capital of the company. The certain specific reserves cannot be used. So this is also wrong. In the question what they are asking, tell him which statements are correct. So 2 and 3 are correct. Option B. Next question number 4. Mr. E, article clerk, was not sure about which items should be considered as intangible assets in PQ Limited according to AS 26. Which of the following items should not be recognized as intangible assets? Let us read. Internally generated goodwill. You should not recognize internally generated goodwill as intangible asset. Only goodwill that has been purchased by you should be recognized as goodwill, as intangible asset. If it is internally generated, you should not recognize it. Next, compact disk in case of computer software. See, the computer software, it has to be stored either in pen drive or a compact disk. The value of compact disk will be less, but the software in it will be more value. So compact disk will also be included in the value of intangible asset. Yes. Next, copyrights should be treated as intangible asset. Next, computer software for computer controlled mission tools. So there are certain mission tools. So let's say there is a particular machinery. The value of this machinery is, let's say for example, some 1 crore rupees. This mission is being controlled with the help of a software that is installed in this mission. Understanding? Now whose value is more? Software value is more or mission value is more? Of course mission value is more. For controlling that mission, for operating that mission, you are using a software. Getting it? That cannot operate without the specific software, which is an integral part of related hardware. Here hardware is having more value when compared to the software that is present in it. Understand? You are using the software just to operate the machinery hardware. Understanding? So this should not be treated as an intangible asset. This is a tangible asset only. So this is not intangible asset. So 1 and 4 are not intangible assets. Yeah, option D. Next question number 5. Mr. F, an article clerk, wants to know that which of the below statement is incorrect while auditing depreciation and amortization expenditure. Let us see. Depreciation and amortization have been charged as per the useful life of PPE and intangible assets. Depreciation, yes, depreciation and amortization, it should be charged as per useful life of PPE and intangible assets. Yes, this looks good only, correct only. Depreciation on the revalued amount should be accounted from the revaluation reserve. Yes, this is also correct only. If you charge any depreciation on revalued value, that should be charged to revaluation reserve. Depreciation should be charged on assets from the date of actual use, not when they are ready to use. Or no, depreciation should be charged from the date on which they are ready to use. So this is the wrong point. They are asking you to identify incorrect one. So option C should be correct answer. We will also read other options. Depreciation and amortization should be computed prospectively whenever there is any change in the useful life of a PP and intangible assets. Yes, if at all there is any change in the useful life, from that date only you need to calculate the depreciation for the changed life. This is also correct only. So they are asking you to identify incorrect option. So option C is the correct option. Next, case scenario 38. MCQ 1. In initial stage of conducting audit of HT Private Limited, CA Mr. D decided to evaluate internal control of company. Evaluation of internal control is very important part of audit report. No. Audit evidence? No, not at all related. Audit documentation. Yes, this is related. See, for this MCQ, you have to check for the given statement. You can combine it with which of the options? You can combine it with audit documentation. Sorry, not audit documentation. With audit program. How is audit documentation related to internal control? No. Evaluation of internal control is part of audit program. You can say it like that. But evaluation of internal control is very important part of audit documentation. Can you say like that? No. Understanding. So this MCQ, you need to answer it from the point of view of options given. Understanding which option is more suitable, you have to select. Next, question number 2. The method suggested by first team member, according to which series of instructions and questions which a member of auditing staff must follow and answer when he completes instruction, he initials a space against the instruction. The method is called checklist because it is being answered by the audit staff, right? Option B. Next, question number 3. The method suggested by second team member in which complete and exhaustive description of internal control. In which method description of internal control will be given? Narrative record. So option A. Next, fourth MCQ. The third team member suggested a method in which comprehensive series of questions concerning internal control is used to collect information. These questions are usually issued to client. If you are giving questions to client, you will call it as internal control questionnaire. Option A. Next, case scenario 39. Question number 1. CA Rajesh has considered all factors affecting the supervision and review of engagement team members' work. One of the following is not a factor in deciding the nature, timing, extent of direction and supervision of engagement team members' work. See, now in the engagement team there will be article students, there will be paid assistants, right, and there will be principal auditor. Now the principal auditor, the engagement partner, should review the work that is done by his engagement team, correct or not? Now in deciding the extent of review of the work of the engagement team, the engagement partner considers certain factors. Now there are 3 factors that will be considered. The MCQ is asking which is the factor that will not be considered. Understanding? Now you will consider materiality of the item. If the item's materiality is more review of the work will be done. If you will also consider ROMM of that area. If the risk of material misstatement is very high in a particular area, then work done by the article assistant in that area will be reviewed more by the auditor. Correct or not? Next, knowledge of that particular article assistant. If that article assistant is highly knowledgeable, you will review that work less. Correct or not? These 3 are the factors. You need to identify the factor other than this which is given in the option. So size and complexity of the entity. Yes, size and complexity of the entity will impact. If size of the entity is very high, complexity of transactions are very high, you will review more. The work performed by the article assistants will be reviewed more. This is one of the factor. Availability of time and trained personnel to review the work. See, If you don't have the time to review the work, you will not ignore reviewing of the work. You will ensure, you will take more time to review the work. Just because of the reason that the time is not available, you will not compromise on review. Understanding? Similarly, trained personnel, if there are no trained personnel to review the work, you will hire more trained personnel to review the work, but you will not skip reviewing. So this is not the factor that will impact the amount of review. Next, capability and competence of individual team member, this is also one of the factor. Area of the audit, this is also one of the factors. So all these factors A, C, D are the factors that will impact the auditor's decision of how much work has to be reviewed, but option B is not the factor that will impact his decision. Next, MCQ 2. As per understanding of CA Rajesh, which of the below options falls within the scope of audit of financial statements? Let's see, they're asking which will fall within the scope. Reliability and sufficiency of financial information, yes, this is within the scope of audit. Responsibility for preparation and presentation of financial information, see, is auditor, as per understanding of CA Rajesh, which of the below options fall within the scope of audit of financial statements? Responsibility for preparation and presentation of financial information. See, is it the responsibility of auditor to prepare and present financial information? No. So this doesn't fall within the scope of audit. So this is not within the scope of audit. Expertise in authentication of documents. See, is authenticating the document, is it responsibility of auditor? No, this also not within the scope of auditor. Duties outside the scope of competence of auditor, this is also not within the scope of auditor. So which is the one which is within the scope of audit? Checking reliability and sufficiency of financial information, option A is within the scope of audit. Next, suggest the audit team members of CA Rajesh and Co to match apt combination of following. Let's match. Sample risk, option A says sample was not representative of the population. Yes, this is the sampling risk. 1, 2, 3, 4. So 1 is related to A. Audit risk, risk that auditors give inappropriate audit opinion when financial statements are materially misstated. Yes, this is related to 2 is related to B, correct definition only. Not an audit risk, erroneous conclusion due to application of inappropriate audit procedure. See, this is the definition of non-sampling risk. The risk of, see, erroneous conclusion due to application of wrong audit procedure is non-sampling risk. So option 4 can be related to option C. Risk that auditor might express an opinion that the financial statements are materially misstated when they are not. This is not a audit risk. So you need to select the option which says 1A, 2B, 1A, 2B, 3D. It says 3C. This is wrong. 1C wrong, 1B wrong, 1A, 2B, 3D, 4C. Yes, option D is the correct option. Next, MCQ number 4. CA Rajesh decided to go for sampling for verification of controls, transactions, and for applying substantive procedure. In this regard, select a statement from the below options which is not apt. So by reading 4 options, you need to select the option which is wrong. First option says, it is possible to make 100% examination of test of controls. Can you verify 100% of test of controls? No, you cannot verify 100% of controls. That is not possible, not feasible, and also not economical. Why? We have already discussed in one of the case scenario, right? So option A is not apt. The first option itself, you got the answer. Next, fifth MCQ. CA Rajesh wants to choose a sample size which enables him to make a proper risk assessment of population. In selecting sample size, which of the below option is not correct? So they are asking you the option which is not correct. Let's see. Lower the risk auditor is willing to accept. So if auditor wants to accept lesser risk, then sample size will be more. Sample size greater, the sample size needs to be. Yes, this is correct point only. if there is an increase in tolerable rate of deviation. So if auditor wants to, or if auditor is okay to accept more risk, then sample size will reduce, then sample size will decrease. This is also correct option. Other things being equal, greater the reliance auditor places on operating effectiveness of control. So if auditor wants to rely more on the controls, then he will verify more controls. So sample size of controls will increase, correct or not? The greater is the extent of auditor test of control, thus the sample size will decrease or no, the sample size of controls will increase. Since auditor wants to place more reliance on the controls, he will test more and more controls. So the sample size of controls will increase, not decrease. So option C is the wrong, incorrect point. So option C is the correct option for this MCQ. Next, the auditor's judgment as to sufficiency of audit evidence is not dependent on one of the factors mentioned below. Choose one such factor from the below. So sufficiency means quantity of audit evidence is not dependent on one of the following factor. They are saying basically quantity of audit evidence is dependent on ROMM. If the area is having more ROMM, more quantity you need to obtain. It is also dependent on materiality. If the area is more material, you need to obtain more evidence. And it is also dependent on size of population. If size of population is more evidence you need to obtain. These are the three factors on which size, on which quantity, that is sufficiency of audit evidence, is dependent. You need to identify the one which is not belonging to these three. So first option is nature and source of audit evidence. Nature and source of audit evidence, it will impact appropriateness of audit evidence, not the sufficiency of audit evidence. So option 1 is the correct option, because they are asking the one which is not dependent. Next case scenario 40. So MCQ number 1. The following are part of internal control questionnaire in respect of purchases, creditors, inventories, and fixed assets. Match the apt combination from the following information regarding related part of internal control questionnaire and description of item. So there are 4 questions that will be there in the internal control questionnaire with respect to controls, and they have given 4 items. Now you need to identify which question is related to which item. Okay, these questions are on controls with respect to these, any of the 4 items. You need to identify, you need to match. Let's start. Are materials inspected and counted, weighed, or measured in the receiving department? So whenever you have purchased the raw materials and you have received them at the receiving department, are materials being inspected, counted, weighed? So this is the control with respect to area of purchase, correct? So this can be matched with B. Next, in respect of raw material and supplies, are reconciliations made of quantities or values received as shown by purchase invoices with receipt into stock records? So whether value of purchase that is shown, is it matching with the purchase invoice? That means whether creditors have been recognized correctly or not. This control is related to creditors. Next, are there norms for reorder level? Reorder of what? Reordering of inventories. Option D. This is related to inventory. This control is related to inventory, not control. This question on control is related to inventory. Next, is there written procedure for periodic verification and discrepancy disclosed by such reports investigated, and are the records and financial accounts corrected with appropriate authority? Of course, the remaining one that will be related to option the fixed assets. So 1B 2A, it says 1D wrong. 1B 2A, yes, 1B 2A. 3 is D, 3D 4C. Yes, option B is the correct option. Next question number 2. In respect of a confirmation from the trade receivables, choose the statement which is not correct. So you need to select the wrong option, the wrong statement. Confirmation from trade receivables should necessarily be as on the date of balance sheet. No, confirmation from debtors or trade receivables, it should be as nearer as the as nearer to the date of balance sheet. It need not be exactly as on date of balance sheet. So option A is the wrong option. This is a wrong statement. Yes, of course the remaining statements will be correct only, you can read them. Next, MCQ 3. Some of the parties to whom the confirmation requests were sent have replied and some did not. CA Ravi Chopra analyzed the responses received and discussed with his team members the reasons for non-response and asked them to send the reminders. Choose the statement which is not correct from the following. Again, wrong statement you need to select. Failure to receive a response to negative confirmation request does not explicitly indicate receipt by the intended confirming party of the confirmation request. Yes, if the intended party did not reply to the negative confirmation request, it will not give you an evidence about whether that party has actually received the request or not. That you cannot identify, because negative confirmation request itself means that he should not respond if the amount has been agreed by him. So this statement is correct only. Next, failure of a confirming party to respond to negative confirmation request provides significantly less persuasive audit evidence than does a response to positive confirmation request. Yes, negative confirmation request provides less persuasive evidence than the positive confirmation request. This is also correct statement only. Confirming party may be less likely to respond in the case of disagreement with confirmation request when the information in the request is not in his favor. No, if the information in the request is not in his favor, it is more likely that he will respond. They are saying he will be less likely. Answer, it should be more. So this is a wrong statement, option C. Next, MCQ 4. In respect of registration or satisfaction of charges created on borrowings of company, following information is to be disclosed in the financial statements. Choose the correct option. Let's see. Charges or satisfaction yet to be registered with ROC beyond the statutory period, details thereof shall be disclosed. Yes, these details should be disclosed. This option looks correct only. Let us read the other options also. Charges or satisfaction yet to be registered with ROC beyond the statutory period, details and reasons thereof should also be disclosed. Yes, this is more appropriate when compared to option A. Let us also read option C. Charges yet to be registered with ROC beyond 12 months from the date of creation of charge. No, basically the statutory period is 30 days. Within 30 days you have to disclose. This is not the correct option. Charges or satisfaction of charges made by the company during the year. No, this is also irrelevant. So option B is more relevant option. Here if they have said it as 30 days, it would have been more relevant, but option B is more relevant now. Next, CA Ravi Chopra has considered all the events that cast doubt on going concern assumption. Consider the following examples of events or conditions that make a significant doubt on the entity's ability to continue as the going concern. Now, see, they have given certain events. You need to identify which is operating event, which is financial event, which is other event. So, shortage of important supplies. This is a operating event. We'll do one thing. Operating, financial event, other event. We will write the numbers there. So, first one is operating event. Loss of major market share, this is also operating event. Inability to pay creditors, this is a financial event. Non-compliance with regulatory requirement, this is a other event. Arrears or discontinuance of dividend, this is again financial event. Option 5, right? Yes. Emergence of highly successful competitor, this is again operational. 6. Pending legal proceedings which may result in claims which the entity is unlikely to be able to satisfy, this is again other event. Inability to obtain financing from financing for essential requirements. This is again financial event, option 8. So operating 126, financial it says 358, right? Financial 358, operating 126, 126 operating 47 others. Yes, option D is the correct option. Next MCQ 6. CA Ravi Chopra considered the subsequent events which required to be dealt within the financial statements. Select from the below options the one which is not a event providing evidence of conditions that arose after the date of financial statements. What is this? First of all, you read this first of all. Event providing evidence of condition that arose after the date of financial statement. See, here they are referring to non-adjusting event. Understand? See, what is definition of adjusting event? Definition of adjusting events means event that provide condition that is existing as on balance sheet date, right? Here they are saying event to provide evidence of condition that arose after date of financial statements. So this is non-adjusting event. Now they are asking you to identify the event which is not a non-adjusting event. That means simply they are asking you to identify adjusting event from the given options. Getting it? So definition they have given non-adjusting and asking you to identify which is not a non-adjusting. The one which is not a non-adjusting means it is adjusting subsequent event. So you need to identify adjusting subsequent event from the below options. Option A says settling a legal claim outside the court at a reduced amount between the date of financial statement and date of auditor's report for which provision has already been made in the financial statement. This is a adjusting subsequent event. So option A is the correct option. So as on balance sheet date, there is certain liability and that has been settled after the date of balance sheet date out of court. So because of that you will reduce or increase the amount of liability that is there as on balance sheet date. So this is adjusting subsequent event, and question is also asking to identify adjusting subsequent event. So option A is correct option. Let us also read other options. Issue of new share capital, this is non-adjusting. Planned merger of a company, this is also non-adjusting. Destruction of substantial inventories due to fire between date of financial statements, this is also non-adjusting. So option A is the correct option. Case scenario 41. So MCQ 1, CAS failed to respond to incoming auditors. In this regard, choose the most appropriate option. Basically, CAS is the outgoing auditor. This type of MCQ already we have seen in one of the previous case scenarios. When incoming auditor is coming, he has to communicate with outgoing auditor, and outgoing auditor should respond to the queries of incoming auditor. Now in the given situation, outgoing auditor has not responded. If outgoing auditor has not responded, you will say that outgoing auditor has acted unethically and he has not complied with the requirement of professional behavior. So it was unethical on part of outgoing auditor for failing to respond to communication made by incoming auditors. It is violation of principle of objectivity. Yeah, no, it is violation of professional behavior and it is unethical. Option B. In the given case scenario, if tolerable misstatement is increased to 2 lakhs, so if tolerable rate of misstatement increases, then sample size will decrease, right? So sample size will decrease. Option B. Which of the following conclusions about Skillet's intangible asset expenditure is most appropriate under AS 26? Let's see. So what they have done with respect to their intangible assets. 6 lakhs spent on in-house research to create a unique student performance database intended to enhance marketing effectiveness. Amount spent on research and development should not be capitalized. It has to be charged to P&L statement. 5 lakhs paid for software integrated with computerized learning device. So there is a software that is integrated within the machinery or within the learning device. So here this should be treated as fixed asset. This kind of MCQ, this kind of point already we have seen in one of the case scenario. It should be treated as fixed asset but not intangible asset. 3 lakhs spent on standalone accounting software used by the finance department. This can be treated as intangible asset. So all three items should be recognized as intangible assets, no. Only item 2 and 3 are no. Item 1 should be expensed off, yes. Item 2 should be treated as fixed asset, yes. Item 3 should be recognized as intangible asset, yes. Option C is the correct option. Next, MCQ number 4. Which of the following correctly describes statutory framework applicable to smart traders LLP? See, this MCQ also we have already seen in one of the previous case scenarios. Basically, for LLP, there will not be DIN and must have at least 2 partners. One must be designated, it is registered with Ministry of Corporate Affairs. It looks good only. LLP must have at least 2 designated partners, yes. Who must obtain DPIN, yes, and it is registered with Registrar of Companies, not with Ministry of Corporate Affairs. With the Registrar of Companies, it should be registered. This looks good. Option D says LLP must have minimum 3 partners. No, minimum 2 is sufficient. So option C is correct option. Next, fifth MCQ. See, if Piyush approaches CAS in August 2025 for audit and filings of financial year 2024, 2024-25, which outcome is correct? See, if you approach the auditor in the month of August for the financial year 2024-25, what will happen? The due date for filing of annual return would have been completed, because annual return has to be submitted within 60 days from the date of financial statement. So you would have missed filing of annual return, right? So annual return filing will be delayed, as every LLP would be required to file annual return in Form 11 with ROC within 60 days from closure of financial year. Yes, option A is the correct option. That would be the consequence. Next, case scenario 42. Which of the following best represents three-party relationship in the assurance engagement? So in the assurance engagement, the three parties are auditor and the management or the responsible party and the intended users. So in the present situation, Ravi and Mehta are the auditors. Management of Fresh Forms Private Limited, they are the responsible party, and intended users. Option B represents three party relationships. The three parties are these three people only. Next question number 2. Which actions should the Ravi and Mehta engagement partner take as per compliance with professional ethical requirements and independent principles? So Ravi and Mehta have been appointed as auditors to ensure compliance with ethical requirements and independence requirement. What actions they can take? Obtain information from firm to identify and evaluate threats. Yes, they can obtain information from the firm in order to evaluate information with respect to the independence compliance and ethical requirements compliance at the engagement level. Evaluate whether action create threats to independence. Yes, this also they can do. Apply safeguards or eliminate threats to acceptable level. If you identify any threats, apply safeguards or eliminate the threats completely, whichever is possible. Next, report the issue directly to client's CSR committee for resolution. No, you will not report to client's CSR committee directly. Consider withdrawal from engagement if threats remain unacceptable. Yes, if threats remain unacceptable, you'll also consider withdrawal from engagement. 1 2 3 5. So 1 2 3 5, option B is the correct option. So these are the course of actions which Ravi and Mehta can do for the purpose of ensuring compliance with independence and the ethical requirements. Next, whether dividend should be recognized as liability in the financial statements of Fresh Farms Foods Limited as at 31st March 2025. This kind of MCQ also we have seen. Basically what has happened is the dividend that is related to financial year 24-25, it has been declared on 15th April 2025. Now in which year you will recognize the liability, in 24-25 you will recognize, or 25-26 you will recognize liability in 25-26, right? But in the given situation what happened is, they have recognized liability in 24-25 only. Is that correct? No, they should not recognize liability in 24-25. No, amount should be recognized equally. Yeah, no, no, the dividend should be recognized as liability. Instead, the amount of a proposed dividend should be appropriately, should not be disclosed as, should not be recognized as, yes, the dividend should not be recognized as liability. Instead, amount of proposed dividend should be appropriately disclosed in the financial year 24-25, and in financial year 25-26 you can recognize as liability. So option C is the correct option. Next, question number 4. Acceptance of significant gift and hospitality from the client will create familiarity threat, and loan taken from the client, it creates self interest threat, right? Familiarity, self interest, option B. Next, 43, MCQ 1. Which of the following statements are correct regarding audit documentation and the assembly of a final audit file carried out by Miss Nishi? Let's see. The auditor shall prepare audit documentation after auditor's report within 90 days. No, within 60 days. So this is wrong. Changes of any type can be made to the audit documentation during final assembly process. No, only changes of administrative nature can be made. After the assembly of a final audit file has been completed, auditor shall not delete or discard audit documentation of any nature before the end of its retention period. Yes, this is correct. Retention period for audit documentation ordinarily is no shorter than 7 years from the date of auditor's report. Yes, this is also correct. So the correct options are option 3 and 4. So option number C. Next, question number 2, MCQ 2. During the audit of OP Limited, Mr. Paras concludes that financial statements do not provide adequate disclosure of material uncertainty related to going concern. What action should Mr. Paras take in this situation? So, in the financial statements, adequate disclosure is not given. So, audit evidence is available. So, audit evidence is available to prove that disclosure is not present. And misstatement, if at all, it will be material only, because it belongs to going concern, so it is material. And whether it is pervasive or not, based on that you will give either qualified opinion or adverse opinion. If it is pervasive also, you will give adverse opinion. If it is not pervasive, you will give qualified opinion. So auditor shall express qualified or adverse opinion, option B. Next, Mr. Sanjay considers the following as examples of indicators of significant deficiencies in internal control. Which of the following items would actually indicate a significant deficiency? Let's read. So we need to read all these 5 points and we need to identify which of the point is example for significant deficiency in internal control. See, misstatements detected by auditors procedures that were not prevented or detected and corrected by entities internal control. This deficiency is example for significant deficiency. Disclosure of a material misstatement due to error or fraud as prior period items in the current year's statement of profit and loss statement. In the previous year you have not identified misstatements because of lack of controls, and that item you have shown in the current year as prior period item. This deficiency will be treated as significant deficiency because you are not able to identify the misstatement. Evidence of management's inability to oversee preparation of financial statements. Yes, this is also significant deficiency only. Since management is not able to oversee the preparation of financial statements, there is a possibility of more misstatements taking place. So this will be treated as significant deficiency. Presence of risk assessment process within the entity where such process would ordinarily be expected to have been established. So ordinarily it is expected that a risk assessment process should be there in the entity, and that risk assessment process is present in the entity. Is that a significant deficiency? No, first of all, there is no deficiency at all. The expected risk assessment process is present, so this is not a significant deficiency. Evidence of effective response to identified significant risks. So whatever the significant risks have been identified, management is properly responding them and fixing them. If management is properly effectively responding them, how can that become a significant deficiency? There is no deficiency at all, first of all. So this is also not a significant deficiency. So 1, 2, 3 are significant deficiencies. Option A, no. B, no. Here in C you add as 3 also. So option C is the correct option. There is some printing mistake in point C. You make this last one as 3. Okay. Next, case scenario 44. Gurpreet was of the view that audited financial statements are not guarantee against probable wrongdoings in the financial matters of companies. What kind of assurance does audit of financial statements provide? It provides a reasonable assurance. Reasonable assurance means a high level of assurance but not absolute assurance. So it provides reasonable assurance, meaning high level of assurance. Next, MCQ 2. Rohit added that auditor can force an employee of the company to provide him required information and documents. Can you force the employee of the company to provide required documents? No, you can just request them. You cannot force them. A and B are saying yes. So wrong. Option C says no, he cannot do so. He can only request for providing him with necessary information and documents, but it cannot be forced by him. Yes, option C is correct. Let us also read option D. No, he cannot do so. He has no right of seeking information. No, auditor is having a right to seek the information, but you cannot force the employee of the company to provide the information. Got it? Next, MCQ number 3. Ali had listened in one of the classes that audit covers all aspects of entity and concluded that each and every transaction of entity is verified by auditor. Is that correct? No, auditor cannot verify each and every transaction. So view of Ali is wrong. Goretti also seemed to be in agreement with him, but she was of the view that besides this, it also meant that audit should be organized to cover all areas of entity. Will audit cover all areas of entity? No, only those areas that has impact on the financial statements will be covered by the audit. So the views of both Ali and Goretti are wrong. So views of both Ali and Goretti are incorrect. Option D. Next, MCQ number 4. All of them also discussed about benefits of auditing. Which of the following is not a likely benefit of auditing? Let's read. Since auditing is connected to future events, is auditing connected to future events? No. First option itself wrong option, right? That means first one itself is not the benefit. So option A should be correct answer. Let's read. Audited information can be easily relied upon by users. Yes, audited information can be easily relied upon by users, but this is not a benefit because the the statement that they are making is wrong. Auditing is not connected with future events. Auditing is connected with the past events, historical events only you are auditing, correct? So this is not the benefit. Errors or frauds can be identified. This is benefit. Government authorities can make use of audited accounts for different purposes. Yes, this is also a benefit. It can help in bringing out deficiencies in maintenance of financial records. Yes, this is also a benefit. So all these three are benefits, but point A is not a benefit. Next, MCQ number 5. Goretti told her friends that she had read a news report about how a company had misled its auditors by producing some fabricated documents. Which of the following statements seem to be appropriate in this regard? Let's read. It was wrong on part of auditor to rely on fabricated documents. See, how can auditor identify whether a document is a genuine document or not? So this is wrong statement. Although it was wrong on part of auditor to rely on fabricated documents, he cannot do anything in the matter. He has to report on the basis of documents provided. No, he is not wrong in relying on that fabricated documents. Management is wrong. Auditor has to conduct audit by exercising professional skill. Yes, but he is not an expert in discovering genuineness of documents. Yes, hence management consisting of dishonest persons may have led him to rely upon fabricated documents deliberately. Yes, option C is the correct option. Next case scenario 45. Management of company has engaged CAP to issue duly signed report for half yearly as referred to in the last para of the case study. Which of the following standards, if any, issued by ICAI are relevant for CAP? So if you observe here, we need to read these two, and the question is about this last paragraph. Okay, let's read it. Management approaches CAP who has qualified recently and started practicing. Reports providing assurance for half yearly results and projected financial statements are sought from CAP. Now, if you observe here, management is asking to provide assurance, and that assurance is on half yearly results. Generally, that means interim financial information. Interim financial information, you will generally conduct a review, correct or not? So, they are asking to do review, and SRE, standard on review engagements, are applicable for this engagement. Management provides necessary information and records to him in this regard. So, in whatever has been mentioned in this paragraph, for that SRE series, standards on review engagement are applicable. Next paragraph, last paragraph. Assume in the above case, so in the above case which we have read, assume that company only provides a trial balance, financial statements in draft or preliminary form, along with accompanying records for relevant half year to CAP, and requests him to provide duly signed financial statements. So, management is asking the CAP to provide duly signed financial statements with a report for mutually agreed professional fees. Now, by reading this last paragraph, we will get a feeling that management is asking to provide assurance on the financial statements. Even though they haven't used the term assurance, they are asking the auditor to sign the financial statements. If you are signing the financial statements and giving a report, they haven't specifically used the term assurance report, but auditor is signing the financial statements, CAP is signing the financial statements, so you are providing a assurance on that by signing it. But the paragraph has not used the term assurance, so there will be little confusion here. What ICAI has assumed that since the term assurance has not at all been used in the last paragraph, and management is asking just to sign the financial statements, man ICAI taken view that this is a related service, SRS, standard on related services engagement is applicable, because no assurance is involved here, like that view ICAI has taken. But if you read the paragraph, it is clearly saying that auditor has to sign the financial statements in this paragraph. So you will get and those financials are of half yearly financial statements, so you will get a view that that is a review engagement. Such kind of uh, thinking you will get here, and that thinking is correct only, but unfortunately what can we do, ICAI has taken a different view and given answer as options is standard on related services, taking assumption that providing no assurance is involved in this paragraph in this particular point, and auditor has to just prepare financials, like that view ICAI has taken. Okay, but as per my point of view, correct answer should be option A, but as per ICAI view, correct option is answer C. Okay, next question number 2. Which of the following statement is most appropriate in the given case scenario? Let's see. CAP can assist management in preparation of financial statements of the company. However, issue of report in such case is outside the scope of work. No, first of all, CAP cannot assist management in preparation of financial statements if he wanted to provide assurance. So this is not the appropriate one. CAP can assist management in preparation of financial statements of the company, and he can issue audit report. No, by sorry, by helping management to prepare financial statements, how can you give audit report? No. CAP can assist management in preparation of financial statements of company, and he can issue compilation report in this respect. Yes, by helping the management to prepare financial statements, you can issue compilation report. Option C is correct option. Option A would also have been correct, but they are saying issue of report itself is outside the scope of work of this particular type of engagement. So we are not considering option A as correct, since option C says CAP can assist in preparing financial statements and he can give compilation report, not audit report. If it would have been audit report has been mentioned here, C also would not have been correct. Okay, so option C is correct. Let us also read option D. Responsibility of preparation of financial statements is of a company's management. Yes, CAP cannot assist management in preparation of financial statements of company. However, he can issue review report. Option D also looks good only. So both these statements are correct statements. We need to see in the given situation to what they are referring, whether they are referring to compilation or they are referring to review. If they are referring to compilation, you have to, you know, select option C as correct. If in the case scenario they are referring to review, you have to select option D as correct. Let us see. If you see, just now we have seen this particular point, ICAI has taken the view of SRS, compilation engagement view ICAI has taken. So here your answer should also be from the point of view of compilation engagement. So option C is correct. Okay. Yes. Next question number 3. Let's just a second. Let me check the answer also. Yeah. Option C they have given. Question number 3. Generally, this MCQ and this MCQ, those two MCQs can be debatable because here the wordings that have been used by ICAI are not proper. Exact wordings they have not used. They haven't given the clarity. So they are debatable, but you have to go with whatever the answer that the ICAI has given in the suggested answer. Okay. Next. In the above said scenario, for issuance of signed financial statements for half year by CAP, as discussed in last pair of case study, identify the most appropriate statement. So, with respect to the signed financial statement, that is that for that compilation engagement, you need to identify most appropriate statement. SQC1 is not applicable. No, for all the types of engagements, SQC1 is applicable. This is wrong, and it is saying CAP cannot issue audit report. This point is correct, but first one is wrong. SQC1 is not applicable. Again wrong. SQC1 is applicable in such type of engagement. That yes, this is correct. D says SQC1 is not applicable. CAP is bad from issuing any such report. No. Option C is the correct option. Next, fourth MCQ. The banker of company has also requested for projected financial statements for coming years along with a report from CA regarding these projections to consider request of management. Which of the following standards issued by ICAI are relevant to CAP in such a situation? Here you are providing assurance on the underlying assumptions in case of projected financial statements. So SAE series, standards on assurance engagement, is applicable. Option D. Next MCQ number 5. Suppose CAP also accepts work of issuing projected financial statements with a report to be signed by him. Management has projected turnover of 100 crore for the next year, 150 crore, 200 crore for the following years respectively, as compared to present turnover of 25 crores in current half year. Identify the most appropriate statement in this situation. Let's see. CAP has to satisfy himself regarding arithmetical accuracy of projected data. No, in case of projected financial statements, you will not check about the arithmetical accuracy of the amounts. You will just check the reasonableness of assumptions. Okay. CAP has to satisfy himself regarding reasonableness of assumptions underlying the projected turnover and its consistency with actuals. Yes, this option looks good. Let us also read other options. CAP has to satisfy himself regarding arithmetical accuracy of data. Yeah? No. CAP has to satisfy himself regarding reasonableness of assumptions underlying projected turnover. Yes. Its consistency with actuals. Yes. And disclosure and presentation also. Yeah. So when you compare option B and option D is more relevant, more clear. So option D is the correct option. Case scenario 46. MCQ1. Auditor is fact checking about promoters and key managerial personnel. she is also considering competence of staff of to perform engagement. What is she trying to do? Basically, she is conducting preliminary engagement activities, right? So before starting the audit, whether to accept this audit or not, in deciding that she is performing certain preliminary engagement activities. As per SA 300, we are having certain preliminary engagement activities now. So option B, she is conducting preliminary engagement activities. Next, MCQ 2, considering of number and location of branches, requirements of financial reporting framework, and expected time of completion are relevant factors primarily for which of the following? If you see number of branches, what is the requirements of FRFW, all these are broad things, not specific things for any specific area. So these things will be considered in setting up overall audit strategy. So option B, establishing overall audit strategy. If they speak about any procedure, risk assessment procedure or further audit procedure with respect to any particular area, then the answer will be audit plan. Understand? Yes. Next, MCQ 3, taking into account description of a planned inquiry and visit, which of the following statements are true? Basically, in the case scenario, what happens is auditor thought it proper to inquire key employees of company in procurement and marketing departments and planned for the same. She also planned to visit 3 plants of the company. So 3 factories of the company auditor wanted to visit. So inquiry is a risk assessment procedure. Similarly, by visiting at the plant, you will observe. Observation is also a risk assessment procedure. So she is trying to perform planned inquiry and visit fall in the area of audit strategy? No, they are risk assessment procedure, they fall in the area of audit plan. Planned inquiry, visit or risk assessment procedure, and they fall in the field of audit plan. Option B is the correct option. Next, MCQ 4, what is detailed set of instruction given to assistant in engagement team known as? A detailed set of instructions that you give to each assistant specifically is known as a audit program. That is a definition of audit program, right? Option C. Next, the issue of generation of scrap has been overlooked in detailed set of instructions given to engagement team. What should be proper course of action by CA Kovuru? Let's see this. So during the course of execution of above set of instructions, it has been brought to her notice that company is also producing substantial quantities of scrap generated during manufacturing process. At the time of development of audit program, this point that the company is generating a huge amount of scrap is not known to the auditor. So verification procedures about scrap is not included. However, no instruction have been given to engagement team in this regard. Now, in this situation, after knowing this, what would be the proper course of action by CA Kovuru? She should add the procedures required for verification of scrap into the audit program, right? She should amend the audit program. First option says she should ignore this information. No. She should modify earlier set of instruction. Yes. Option B looks good. We'll also read other options. She should leave the matter. No. She should put the ball in court of management. No. Option B is the correct option. Next, case scenario 47, MCQ 1, regarding drastic fall in revenue of company, which of the following is an audit risk? Let us read. Revenue has been drastically fallen, it seems. Because of that, what audit risk occurs? Fall in revenue would result in fall of profits for the company. That is risk for the company. That is not a audit risk. Yes, the statement that they are saying is correct only, but that is not a audit risk. That is risk for the company's business. Okay, they are asking audit risk that arises because of a fall in revenue. Drastic fall in revenue may imply that company is not able to carry out its operation in foreseeable future due to lack of demand in market for company's product. There is a risk that going concern disclosure is omitted to be made in the financial statements. Yes, this is the audit risk. company might not be a going concern, and there is a risk that that going concern disclosure is not made in the financial statements. That risk is there. Option B is the correct option. Next, companies' products are getting outdated in the market. Which of the following is an audit risk? So let us read. The company's products are getting outdated, it seems. Because of that, what audit risk will be there? Company should devise strategies to sell the part. No, that is not an audit risk. Inventories may be understated in such a scenario. Na? No, that is not an audit risk. See, if the inventories are becoming outdated, you have to reduce the value of inventory. You have to provide a provision for obsolescence of inventory. The risk that you might not provide the provision for obsolescence, and the inventory might be shown at a higher value, that is the audit risk. So the risk that inventory might be overstated is the audit risk in the given situation, not understated. So option C, inventories may be overstated in such a scenario, that is the audit risk. Next, MCQ 3, a large customer has failed to pay to the company. Identify audit risk from below. Receivables may be misstated. Yes, this looks correct only. There is a possibility that one of the debtor, if he has not paid, large debtor, if he has not paid means, if you don't provide provision for the same, debtors might be misstated. That is one of the audit risk, you can say. We'll also read other options and we need to select the best option. Receivables may be overstated if recoverable debt is not written off. Both option A and B are correct, but option B is more specific. How the misstatement might happen? Because of overstatement or understatement? Because of overstatement. So option B is the correct option. Next, identify audit risk involved when inventory holding period has increased from 30 days to 90 days. If inventory holding period increases from 30 to 90 days, it means that inventory might have become outdated, and you might not provide provision for it. Because of that, inventory might be shown at a higher value only. So there is a risk of overstatement of inventory. So there is a risk of overstatement of inventory is option A. Next, MCQ 5, part of inventories are lying with the third parties. Identify audit risk involved. Let's see, there is a risk that third party do not manufacture account according to specifications. That is company's manufacturing risk, not audit risk. There is a risk that by getting job work done by third parties, company is increasing all these related to company point of view. There is a risk that sufficient and appropriate audit evidence would not be available in respect of quantity and condition of inventories lying with third party. Yes, there is such possibility. Third party might not provide proper confirmation regarding quality and quantity of inventory lying with him. This looks good. Let us also read option D. There is a risk that sufficient and appropriate evidence would not be available for quality control in respect of inventories lying with the third parties. Not quality control, quality of the inventory. So option C is correct. Next case scenario 48, MCQ 1. Which of the following most appropriately describes test of control regarding insurance of inventories? Inspect inventory insurance policies to verify that inventories at each location are insured for fire and burglary. Some insured and period of validity of policy are not relevant. No, some insured and period of validity not relevant. No, they are relevant. So this is wrong. Inspect insurance policies to verify that inventories at each location are comprehensively insured. Ensure adequacy of sum insured by comparing it with value of inventory. Also ensure policy period has not expired. So option B is the correct option. In verifying test of controls around insurance of inventory, you need to cover all these aspects. Option C and option D also looks good only, but they contain only some points. Option B contains all the points that should be verified. Next, MCQ 2. Which of the following most appropriately describes test of control regarding inventory count? Let's see. Obtain detail of inventory counting procedure and ensure that inventory counting is carried out in accordance with laid down procedure. Yes, this you have to do when you go for physical inventory verification. This is correct only. Next, Obtain detail of inventory counting procedure and ensure that inventory count is carried out according to laid down procedure, and also attend inventory count. Yes, this is also correct only, but when compared to A and B is more detailed option. Let us also read C. Obtain detail of inventory counting procedure and ensure that inventory count is carried out in accordance with the laid down procedure. Attend inventory count and perform test count also. Yes, so option C is more detailed. So correct option is option C. Next MCQ number 3. While testing control over bank reconciliations, it has been noticed that bank reconciliations are not being performed at regular intervals. Identify the most appropriate description of a control deficiency in this regard. So there is a deficiency in the control. How you have to describe this control deficiency? You have to give context of this deficiency. You need to give description, and you should also explain the impact of this deficiency. All these things should be explained. Option A says bank reconciliations are not being performed regularly as concerned staff is overburden. Will you just say one point? No, you have to clearly give financial impact also. So option A is wrong. Bank reconciliation are not being performed regularly as concerned staff is overburdened. It could result in errors. Okay, it looks good only. Let us also read option C. If it is more detailed, we will select it. Bank reconciliations are not being performed regularly as concerned staff is overburdened. It could result in errors. It may result in misstatement of cash and bank balance in the financial statements. So option C is more detailed. This is how you need to explain, describe the control deficiency, where you will describe in the letter of weakness, which you will give to those charged with governance as per SA 265. SA 265 is about communicating significant deficiencies in internal control to those charged with governance and management, right? In that communication, you need to describe like this. Next, MCQ 4. Since the company is a new client, which of the following statement is more appropriate? Let's see. There is a reduced detection risk or no? Detection risk increases. Since you are auditing that client for the first time, you don't have much experience with respect to that client. So there is a high probability that audit procedures that you perform might not detect the misstatements. So detection risk increases. So option B is the correct option. There is a risk of detection risk. There is an increased detection risk. Next, MCQ 5. Which of the following statement is most appropriate regarding auditor's response to assessed risk of a new client? Since the client is a new client, the risk is more in that client, correct or not? The risk that you might not be able to identify misstatements is more, since he is a new client to you. You have not audited that client in the previous years, so you have to perform more audit procedures. So substantive testing will increase. Substantive testing means detailed checking, detailed testing will increase. So more substantive procedure would be required to be performed. Yes, option A is correct. Next case scenario 49. Which of the following statement is most appropriate regarding inventory count by auditor in accordance with SA 501? Let's see. She should inspect the inventory to ascertain its existence condition at all locations, observe how company personnel are carrying out count procedures, and perform test counting. Yes, this is the responsibility of auditor as per SA 501. Option B says she should inspect inventory to ascertain its existence at all locations, observe how company personnel are carrying out count procedure and perform test counting. The matter of condition of inventory falls in domain of expecta. No, SA 501 doesn't speak about valuation of inventory, right? It just speaks about existence and condition of inventory. Option C also speaks about condition of the valuation of inventory falls in the domain of expert. No, this point is not said by SA 501. Option D says she should inspect the inventory to ascertain its existence and condition all location and perform counting of each and every item. No, you need not perform each and every item. On test basis, you need to count it. Test counting you have to do. So option A is correct from the point of view of SA 501. Next, MCQ 2. As regards inventories lying with third parties, which of the following statement meets the requirements of SA 501? Let's see. She should request confirmation from third parties regarding quantity, condition of inventory held on behalf of company, as well as request third parties to allow her to inspect inventories held by them. Yes, both of these two things are correct only, but you can perform any one of these two things or both of these two things based on the situation. It says both requirements are necessary. No, not both requirements are necessary. You can decide to send external confirmation to the third party, and if you feel that whatever the response given by third party is appropriate, you need not visit the third party. If you feel that third party's response is not appropriate, not reliable, then you will go and check inventory physically also. So you can decide to perform both external confirmation for third party and also visit the location, or any one of it based on the circumstances. There is no rule that both of these to be performed. Option B says compliance of any one of these or both is required for the purpose of SA 501. Both option A and B are same, just this point is changed. Compliance of any one of these or both is required for the purposes of SA 501 based on the requirements. So option B is the correct option. Next, MCQ 3. Keeping in view description regarding trade receivables, identify the most appropriate statement in the context of SA 505. So, external confirmation. She should not plan and design confirmation request for large number of parties having small balances or no. She should not completely ignore. She should at least send negative confirmation request to debtors whose number is large but value is small. Understanding? She should at least send a negative confirmation. She should not completely ignore. So option A is wrong. She should plan and design positive confirmation request for large number of parties having small balances. No, not positive, negative. She should plan and design positive. No. She should plan and design negative confirmation request for large number of parties having small balances. Option D is the correct option. Next, fourth MCQ. As regards sampling, which of the following statement is most appropriate in terms of requirements of SA 530? Let's see. Sampling is used in test of transactions as well as test of controls. Yes, this is correct only. Sampling is used in test of balances as well as test of controls. Yes, this is also correct only. Sampling is used for test of details. Yes, this is also correct only. Sampling is used in test of details as well as the test of controls. When you see, all these options got included in option D. So option D is the correct option, because test of details include both test of transactions and test of balances. Got it? So option D is the correct option. Next, fifth MCQ. Since she intends to rely upon sampling extensively, which of the following statements is true about sampling risk? Sampling risk can be eliminated. Can you eliminate the sampling risk? No, it cannot be eliminated. They are asking which of the statement about sampling risk is true. This statement is false. So this is not the correct answer. Increase in sampling risk would lead to decrease in detection risk. There is no relationship between detection risk and sampling risk. Understanding? Sampling risk is part of detection risk. Decrease in sampling risk would lead to increase in detection risk. No. Basically, if you want to establish a relationship, you can say if sampling risk increases, detection risk also increases. Understanding? Direct relation you can establish, but not indirect relationship. So these two are also wrong statements. Sampling risk will always be in existence. Yes, option D is the correct option. This statement is true. Sampling risk will always be there if you take the sample. Got it? Next, case scenario 50. If you see case scenario 50, we have already discussed this case scenario 50. It got repeated in this ICAI case scenario booklet. In the first 30 case scenarios, one of the case scenario is same, this one only. It got repeated. So I am not discussing case scenario 50. Why unnecessarily waste of time? We will go to case scenario 51. By mistake, it got printed double time, duplicate. Yes, case scenario 51, MCQ number 1. Which of the following is not correct with respect to shares issued at premium and securities premium account in terms of section 52 of the Companies Act? So we need to read the following options and find out the Wrong option with respect to securities premium account. They are asking not correct. Let's see. Where a company issues shares at premium, whether for cash or otherwise, sum equal to aggregate amount of premium received on those shares shall be transferred to securities premium account. Yes, this is correct only. We need to identify wrong statement. Securities premium account can be applied by company in paying up unissued equity shares of company to be issued to members. Yes, this is also correct statement only. Next, the securities premium account cannot be applied by company in writing of the expenses of or the commission paid or discount allowed. So, can you use the securities premium amount for writing of a commission paid or a discount allowed on issue of securities? Yes, you can use, but they are saying you cannot use. So, this is the wrong statement, and this will be the correct answer for this MCQ. Next, which of the following is not a example of a capital reserve? Is revaluation reserve capital reserve? Yes, any reserve that arises out of capital profits is known as capital reserve. Securities premium also capital reserve only. Capital redemption reserve also capital reserve only. General reserve, this is not a capital reserve. General reserve is a revenue reserve, right? So option D is the correct option. Next, MCQ 3, statement 1, they are saying confirmations as well as undelivered letters should be given or returned to the auditor and not to the client. Yes, this statement is correct. Whenever you send external confirmation, for that external confirmation, if at all they are undelivered or there are any external confirmations received as low door found locked, like this, if you receive back any external confirmations being undelivered, those should be returned to the auditor, not to the client. So this statement is correct only. Statement 2, when no reply is received with respect to external confirmation, auditor should perform alternate procedures regarding the balances. Yes, statement number 2 is also correct only. So if you see option C, both statements 1 and 2 are correct. Next, MCQ 4, Mr. Chaitanya performed which of the following analytical procedure to obtain audit evidence with respect to overall reasonableness of purchase quantity and price of raw material? Let's see. So more specifically, Chaitanya collected reports from management for composition of stock containing raw materials as a percentage of total stock and compare the same with data of previous year. Nothing but here Chaitanya performed composition analysis, nothing but one type of analytical procedure. So option B, stock composition analysis, because this composition and analysis is specifically related to stock in the given situation. So option B is the correct option. If it was not related to stock, any other analysis, you can just mention as composition analysis, or if stock composition analysis, sorry, first one is consumption analysis, they are saying, right? So if you see here, did he perform consumption analysis? No, he performed composition analysis only. So option B, stock composition analysis. Next, MCQ 5, which of the following is not correct with respect to disclosure requirement of schedule 3 to the Companies Act? Let's see. Current maturities of long term borrowings is to be disclosed under the head long term borrowings. Current maturities should be disclosed under short term borrowings, correct or not? So you have taken a long term loan, let's say 10 years repayment period. Every year you will pay certain money. Now the money that has to be repaid in the next period is current liability. It should not be shown under long term liability, it should be shown under current liabilities. So current maturities means the money which you are going to repay in upcoming 1 year should be shown under current liabilities, not long term liabilities. So option A, first option itself is the wrong option. So option A is the correct answer for this MCQ. Next, Case scenario 52, MCQ number 1. Work relating to verification of revenue was assigned to Mohit in audit program. However, it is being performed by Rohit actually. So, work is allocated to one person, but another person is doing it. Similarly, verification of trade receivables was planned to be carried out by Rohit in audit program. However, it is being performed by CA Rajan Pillai due to last minute practical issues. So, in the audit program, it is mentioned that one person has to do the work, but actually some other person is doing the work. Now, which of the following statement is most appropriate in this regard relating to the audit documentation? Let us see. Option A says audit program contains names of persons and work to be performed. It is immaterial whether work assigned to one person is performed by other person. No, you need to document who has performed the work. So it is not immaterial if work is assigned to one person and it is performed by another person. You cannot ignore it. You need to document it. In fact, you have to alter the audit program also to include the name of the person who has actually performed it. So option A is not the correct option. Audit program was already prepared. Only persons assigned specific responsibilities can perform those duties. Or no, it is not that in the audit program, if Mr. A's name was mentioned, he only has to do the work. Might be due to the practical reasons, practical issues, some other person might be allotted that work later on during the audit. So you cannot say that mandatorily the person whose name has been mentioned in the audit program should do that work. So this is also wrong option. It is necessary that audit program be suitably updated or notes are given in working papers to this effect so that planned duties are in accordance with actual work performed. Let me read this once again. It is necessary that audit program be suitably updated or notes are given in the working papers to this effect so that planned duties are in accordance with the actual work performance. Yes, you need to accordingly update the audit program to include who has actually performed that work. So option C looks good option. Let us also read option D. Changes in audit program or notes clarifying the matter are required only when person not forming part of audit engagement team is deputed to perform audit duty. Or no, even if some other person within your engagement team has been done that work instead of the person who has been allotted that work, in that situation also you need to document. It is not that only if the person completely outside from the engagement team has performed the work, only then audit program need to be amended. No, not like that. Work allocated to one person of audit team but done by another person of audit team, in that situation also you need to amend. So option D is wrong option. Next MCQ2. As regards materiality, which of the following statement is most appropriate in the context of audit documentation? Let's see. Materiality has already been determined. There is no need to put it in the working papers. So no, you need to document materiality, how you have arrived at the materiality. Option B says materiality depends upon professional judgment of auditor. Whatever amount has been determined can be documented in working papers. Let us see. This option looks good only. Let us see option C also. Materiality arrived on the basis of professional judgment along with factors considered in determining has to be documented. Yes, option C is more correct when compared to option B. In option B, they are saying materiality is dependent just on judgment of auditor, but not. Materiality is dependent on professional judgment of auditor and also some other aspects. So option C is the correct option when compared to option B. Next, as regards the team's assessment that ROMM, risk of material misstatement, is low, which of the following statement is odd one relating to documentation of risk? Let's see. Discussion among engagement team members and details of significant decision reached has to be documented. Yes, the discussions that has taken place among the engagement team members related to ROMM has to be documented. That is correct only. That is not a odd one out. Details of risk assessment procedures have to be documented. Yes, this also should be documented with respect to risk assessment. Details about how understanding of each component of internal control was obtained to be documented. Yes, this also should be documented as part of risk assessment, because one of the component of audit risk is control risk. For assessing the control risk, you need to document how you have understood each component of the internal control. So option C is also part of risk assessment only, not a odd one out. Option D says, see, of course, if all the first three options are not correct, option D should be the correct answer. Precise calculation of risk of material misstatement has to be documented. Can you precisely calculate the risk of material misstatement? No, exactly you cannot calculate. It is dependent on the PJ, professional judgment of the auditor surrounding circumstances. So it is not possible to precisely determine the calculation of risk of material misstatement. So option D is the odd one out, that need not be documented. Next question number 4. CA Shobit is responsible for attending physical inventory count of the company. Okay. Which of the following is not true in regard relating to audit documentation? So with respect to physical inventory counting, which of the following is not correct? They are asking. Not correct. Let's see. Dates on which physical inventory count process was attended by him should be documented. Yes, you need to document it. It may also include photographs of that date showing his attendance of inventory counting process at a particular location. Yes, this option is correct statement only. This is not the false statement. Details of test counting undertaken should form part of audit document. Yes, this is also correct. Details of obsolete goods found should be form part of audit documentation. Yes. Reports showing that stocks conform to quality control standards in accordance with law are essential part of audit documentation. No, see, basically with respect to certain laws and regulations, it will, in the law it will be specified, if you are manufacturing this product, it should be of this much quality. Like that, with respect to quality, there will be quality standards, there will be ISO standards, right? So is there responsibility on auditor while doing inventory verification, whether to check whether stock manufactured by the company, has it been manufactured as per ISO standards or not, as per standards specified by law? Is that responsibility of auditor during physical inventory verification? No, it is not your responsibility to check whether quality of stock is proper or not. Checking whether stock has been properly manufactured at utmost quality or not is the responsibility of management, not the auditor. Okay, that is not at all relevant to the audit. So option D is the wrong statement, not correct statement. Next. As regards related party transactions, which of the following should not be part of audit documentation? Let's see. Management representation letter regarding related party transaction, it should be part of audit documentation. Related party transactions policy of the company, this also should be part of audit documentation. Documentation to show that such transactions are at arm's length price, yes, this also should be part of audit documentation. Documentation to show that such transactions are at a close length basis. No, there is no concept such as close length basis. So this is wrong. Option D need not be part of audit documentation related to related party transactions. So option D is the answer. Next, case scenario 53, MCQ number 1. As regards the description of a matter above concerning issue of going concern, which of the following statement is most appropriate for auditor's report? Let us see what has happened in the case scenario. CA Gaurav Gogoi is about to conclude audit of a company. It has been noticed during the course of audit that there is a shortage of important material supplies being imported from China due to prevailing geopolitical situation. The company has shared with him its plan to deal with the situation. He is satisfied with the assessment of a company for dealing with the matter. The issue is disclosed in the financial statements and considering management's assessment. So, as of now, using the going concern basis of assessment is proper only, but there is a material uncertainty because of non-availability of raw materials, and that material uncertainty has been properly disclosed in the financial statements, it seems. So it is felt that use of going concern assumption by company in preparation of financial statements is appropriate. Now what will you do? So use of going concern basis of assumption is appropriate, and the material uncertainty has been properly disclosed in the financial statements. Will you modify your opinion? No, you will not modify your opinion. You will give unmodified opinion. But in the material uncertainty related to going concern paragraph, you will specify about this particular material uncertainty. So you need to select the option which says that auditor should express unmodified opinion. So this is correct, partly it is correct. Auditor should express qualified opinion or no. Besides expressing unmodified opinion, auditor's report shall include a separate section under the heading material uncertainty related to going concern, drawing the attention to the note in which such a disclosure is made in the financial statements along with the related matters. Option C is the correct option. Next, MCQ number 2. As regards going concern base of accounting is concerned, which of the following statement is true? Let's see. Company showing net loss in its financial statements is essentially not a going concern. See, just because company is showing loss in its financial statements, will the company become not a going concern? No. Just based on that factor, you cannot say that company is not a going concern. So this option is wrong. They are asking you to find out a true statement. Next, following going concern assumption of accounting is primarily duty of auditor. No, it is duty of management. In case company is not a going concern, its financial statements must be prepared on liquidation basis. Yes, this is the true. Correct option is option C. MCQ number 3. Which of the following statement is true in respect of auditor's responsibility in respect of subsequent events? Let's see. They are saying there is no obligation for auditor with respect to subsequent events. No, auditor is having certain obligations. He needs to perform certain audit procedures. Option B also says no obligation. Option C, auditor has only to rely upon written representations. No, auditor should perform necessary audit procedure to know about events occurring between the date of financial statements and the date of auditor's report. Yes, option D is the correct option with respect to subsequent events. As regards use of qualifying language in written representation, which of the following statement is most appropriate? Now, qualifying language in written representation means already we have seen these type of MCQs. Management will give written representation to auditor, but in that written representation, it will tell that subject to our knowledge, we are giving this written representation, or based on information available to us, we are giving this written representation. Like that, they will give certain qualificatory language. They will use certain qualificatory language. Can management use such language in the written representation? Yes, of course they can use. We have seen that point already. So, such a wording dilutes intent of written representations or no? Option A says it is reasonable for auditor to accept such wording. Yes, auditor can accept such qualificatory wording in the written representation if auditor is satisfied that representations are being made by those with appropriate responsibilities and knowledge of matter included in the representation. So option A is the correct option. Next, as regards auditor's responsibility regarding matters communicated orally with those charged with governance, which of the following is most appropriate? So if you have communicated any matters with those charged with governance orally, you should also document those matters which have been communicated orally. So option D says matters communicated orally have to be documented by auditor, stating to whom these were communicated. So option D is correct only. Let us also read option A. It says matters communicated orally have to be documented by auditor, stating when and to whom these were communicated. So from option A, option B, option D, which is correct? Option A is more relevant because you need to document both when it was communicated and to whom it was communicated. Got it? Yes sir, got it sir. Next MCQ case scenario 54, MCQ number 1. In case of misses a persistent and company, what would be an ideal audit opinion? Let's see. See, with respect to audit opinion, you remember this table in mind. Okay, so if in order to determine type of audit opinion, you will take the decision based on three things: whether there is audit evidence available with respect to proving the misstatement. Do you have audit evidence to prove that there is a misstatement? Next, is that misstatement material, and is that misstatement pervasive? Based on these three things, you will determine the type of audit opinion. So audit evidence is available and it is material but not pervasive. You will give qualified opinion. Audit evidence not available, but misstatements, if at all they are, they will be material but not pervasive, then also you will give qualified. If audit evidence available, misstatements are material and also pervasive, you will give adverse opinion. Audit evidence not available but misstatements are material and also pervasive, you will give disclaimer of opinion. Based on this, you will determine the type of audit opinions. Let's read the first aspect related to the MCQ. During the audit of Mrs. Persistent and Co., Mr. A found that firm has changed method of depreciation from WDV to SLM. Okay, but has not given the retrospective effect. So you are having audit evidence to prove that retrospective effect has not been given. Mr. A calculated the difference of depreciation, but Mr. Persistent and Company has stated that they don't want to change the financial statements. So there is a misstatement, and that misstatement is material also. But misstatement is there only in one area, so it is not pervasive. So audit evidence available, misstatement material but not pervasive, you will give qualified opinion. So for question number 1, option B, qualified opinion. Next, MCQ 2. In case of Mrs. Dubious Brothers, what audit opinion should the auditor give? Let's read. During the audit of Mrs. Dubious Brothers, Mr. B observed that firm had a very large amount of cash sales. So there are lot of cash sales and there were no details of customers. So with respect to debtors, no details were there to whom sales were made. Further, cash generated was not even deposited in the bank regularly. So with respect to cash, it was not deposited. So there were certain misstatements with respect to cash. So in debtors there are misstatements. If in debtors there are misstatements, in sales also misstatement, and in cash also misstatement. So misstatements are material and they are also pervasive. In many areas misstatements are there and you are having evidence to prove that. So you will give adverse opinion, option B. Next, according to you, what would be the appropriate course to take in case of Mrs. Honest Associates? Let's read. During the audit of Mrs. Honest Associates, Mr. A came to know that firm has changed its method of valuation of stock. Okay. This change has a material impact on the financial statements of the company. Okay. The firm has made relevant disclosures in the financial statements and has given proper accounting treatment to this exercise. So there has been a change in the accounting policy or accounting method. Yeah, accounting method, and that change has been properly disclosed in the financial statements. Now, can auditor emphasize this in the emphasis of matter paragraph? Yes, you can emphasize it. So option C, mention the fact in the of change in the method in the emphasis of matter paragraph. Next, MCQ 4. When the auditor, after conclusion of audit exercise, is of the opinion that there are material misstatements in the financial statements, but they are not pervasive, then what should auditor do? So you have audit evidence, misstatements are material but not pervasive, you will give qualified opinion, right? Yes sir. Next, MCQ number 5. When the auditor concludes that financial statements are prepared in all material respects in accordance with the applicable financial reporting framework, auditor will give unmodified opinion, clean opinion, correct or not? Yes. So option D. Next, moving to case scenario 55. First MCQ. Based upon plain reading of audit findings stated in paragraph A, identify type of audit carried out by Office of Comptroller and Auditor General of India. Let's see. So audit of implementation of Nagpur Metro Rail project was conducted by the Comptroller and Auditor General of India. Following is extract of a few audit findings placed on the website. The location of a new airport station was not ideal for the viewpoint of ridership due to sparse population in and around the station and also from the accessibility point of view. So they have established a project and now auditor is verifying the performance of that project. So nothing but performance audit he is doing. So option C. Next, keeping in view audit findings in respect of Haryana Power Generation Corporation Limited, identify type of audit carried out. Let's see. Another set of audit findings in respect of audit of Haryana Power Generation Corporation Limited, a wholly owned government company responsible for operation of power generation plants in state of Haryana, is as under. The main reason for low generation was higher variable cost of thermal power stations, which result in backing down of the project. So here you are referring about economy, achieving the target with lesser money or not. So that aspect is covered under performance audit, correct or not? Triple E, efficiency, economy, effectiveness. So here also auditor is doing performance audit, option D. Next, MCQ number 3. Which of the following is the most appropriate statement in context of report tabled in parliament regarding administration of direct taxes? Let's see. A report was tabled in parliament highlighting main features of direct taxes administration of country as mandated in Constitution of India. This report primarily discussed compliance with provisions of Income Tax Act 1961 and associated rules and procedures, etc., as applied to administration. So a report related to direct tax is framed. Direct tax is central government related matter, right? So with respect to that, which is the following, which of the following option is correct? Let's see. It is likely to be report prepared for submission to president. Yes, all the reports related to central government will be submitted to president. Article 151 of Constitution of India by Comptroller and Auditor General of India. Yes, C&AG will submit reports related to central government to president. Option A looks good. Let us also read other options. To prime minister, you will submit no. To president by CBDT, Central Board of Direct Taxes, no, not by Central Board of Direct Taxes. It is likely to be report submission for prime minister, again no. So option A is the correct option. Next, MCQ number 4. Who is empowered to conduct supplementary audit in case of Radial Finance Corporation Limited? See, who is having the power to order for supplementary audit? C&AG is having the power. So option C. That is straightforward. Without reading case scenario, you can answer. Next. As regards the comments of auditors specified in respect of audit report of above insurance company, which of the following is likely to be most appropriate statement? Let's see. So, auditor has done audit of an insurance company, and the annual report for particular year also contains comments of statutory auditor. So, in the annual report of insurance company, comments made by statutory auditor on matters such as whether company has carried out reconciliation in respect of its intercompany balances with other government owned insurance company. So auditor has made certain comments. Okay, now they are asking, those comments will be with respect to what, as per the directions given by whom? Let's see. Such comments are likely to be comments of test audit carried out by C&AG. No. Such are likely to be comments in respect of directions to statutory auditor by C&AG for reporting on specific aspect of their audit work. So if you remember, while C&AG allots audit of a government company to the auditor, by allotting the audit, C&AG will also direct the auditor on which matters he needs to report upon and on which matters he needs to focus upon. So on those matters, C&AG, he will give comments in his audit report. So the comments that he has given there, they might be as a result of direction given by the statutory auditor. So option B is the correct option. Got it? Yes, sir. Moving to case scenario 56. MCQ number 1. As regards description of agricultural advance, which of the following statement is most appropriate in this regard? Let us see what they are saying with respect to agricultural advance. The first point, loans under Kisan credit card are given by bank to farmers to meet their short-term credit needs for cultivation of crops. In respect of one agricultural advance classified under Kisan credit card having an outstanding balance of 20 lakhs as at year end, there is no transaction in account since last 90 days. For the last 90 days, there is no transaction in the account. The said loan has been granted for cultivation of paddy, which is harvested in a period of 3 to 4 months. So this is a short duration crop, and the duration of this crop is 3 to 4 months. In case of short duration crop, if the amount is not paid for 2 crop seasons, if the amount is outstanding for 2 crop seasons, then you should treat it as NPA, not 90 days. In this situation, if the amount is outstanding for 8 months, let's take it as 4 months. So one crop season is 4 months, 2 crop seasons becomes 8 months. If the amount is outstanding for 8 months or more, only then you have to treat it as NPA, right? So the branch has classified the said advance as standard asset. So the classification of this agricultural loan by the bank as a standard asset is proper only, correct? Same thing you need to say. Option A says branch has erred. Erred means branch has committed wrong by classifying asset as standard asset. Did bank committed wrong? No, bank is correct only. So option A is wrong. Classification. However, there are no transactions in the account since last 90 days. It is SMA. No, that is not the definition of SMA. SMA is a special mention account. It will be treated as special mention account category 0 if amount is outstanding for 1 to 30 days. SMA 1 if 31 to 60 days. SMA 2 if 61 to 90 days. Right. So this is not a SMA. Option C says classification made by branch is proper. So option C is correct option. Next, moving to question number 2. Regarding taken over account from another bank, which of the following statement is most appropriate? Let's see point number 2. It is observed that account of one borrower availing cash credit limit of 50 lakhs was taken over from another bank. The proposal was sanctioned by branch manager instead of immediate next higher authority as required in manual of delegation of power. So as per the bank rules, it means a higher of it seems a higher officer has to authorize takeover loan, but instead of that higher officer, the branch manager himself has authorized the loan. Is that correct? No, auditor needs to highlight this point. So option A says it is an internal issue of bank and auditor is not concerned. No, auditor is concerned. It is an internal issue of bank, however auditor may at his discretion, no, mandatorily he needs to report. It is a serious violation of laid down internal control procedure of bank for sanction of advances and should be reported by auditor without fail. Option C is the correct option. Even though it is a internal matter, auditor needs to report it. Okay, yes sir. Next, MCQ 3. As regards a debit balance of 1.5 lakhs in savings account, which of the following is the correct from the point of view of auditor? First of all, we will see why 1.5 lakh debit balance occurred in the savings account. Generally in the savings account, the amount should be credit balance, not the debit balance. Let's see why debit balance has occurred. It is noticed that head office of a bank has flagged a savings account maintained in a branch in which interest was wrongly paid at higher rate due to wrong data feeding entry. So due to wrong data feeding entry, interest rate has been calculated at higher rate. Now situation has been rectified by debiting excess interest paid in the account. So earlier by mistake you have credited more interest. After knowing that, now you have debited the interest which you have credited extra earlier. Now since there was a little balance in the savings account, debit balance of 1.5 lakh was created in the said savings account. So due to that reversal of interest, debit balance has occurred in the savings account to the extent of 1.5 lakh rupees. Due to above reversal, now the matter was immediately informed to account holder. So bank immediately informed to the account holder. See, account holder, by mistake we have credited your account earlier. Now we are debiting it. Because of that debit, 1.5 lakh you have to pay to the bank. However, he has not turned up for payment since matter was informed to him about 6 months. So 6 months has completed, still he has not repaid. Now should you treat that 1.5 lakh as NPA? Answer is yes, that 1.5 lakh is due to the bank on a particular date, and from that date borrower has not paid for a period of more than 90 days. So it becomes NPA, right? So the debit balance of 1.5 lakh should be classified as NPA. Option number B. Got it? Yes, sir. Next, MCQ 4. Which of the following statement is not true about drawing power? So with respect to drawing power, they have given certain points. We need to identify which is not true. Wrong one you need to identify. Drawing power refers to amount calculated based on primary security less margin as on particular date. Yes, this option looks correct only. This is a true statement only. Next, drawing power is always less than sanction limit. Will drawing power always be less than sanction limit? No, there can be certain scenarios can arise wherein drawing power can cross sanction limit. Like, let's say sanction limit is 1 crore rupees. Okay, borrower has withdrawn complete 1 crore rupees. So drawing power also 1 crore rupees. He has withdrawn complete amount. Now interest has been charged for that amount which has been drawn. Interest of 1 lakh has been drawn. Now this amount has exceeded sanction limit, correct or not? So this situation can occur. So drawing power need not always be less than sanction limit. In some situations the amount which you have drawn can cross the sanctioned limit. So this statement is not correct. So option B would be the correct option. Let us also see the other options. It can be different from sanction limit. Yes, drawing power can be different from sanction limit. Creditors for goods are reduced for purpose of calculating drawing power. Yes, creditor for goods will be reduced from the drawing power. This is also correct statement only. So they are asking wrong statement. Option B is the wrong statement. Next, MCQ 5. Considering housing loan and car loan availed by a borrower, which of the following statement is appropriate? Let's see what happened. One borrower has availed housing loan and a car loan from the branch. Housing loan EMIs are overdue for 120 days as on date of balance sheet, and car loan EMIs are overdue for 60 days as on date of balance sheet. So here housing loan become NPA, but car loan is not NPA. Even though car loan is not NPA, since it has been taken by same borrower and one of his loan has become NPA, you need to treat both house loan and car loan as NPA, because NPA calculation is borrower wise but not facility wise, right? You remember that point? Yes. So both housing loan as well as car loan should be classified as NPA in accordance with RBI norms on asset classification. Yes, option A is the correct option. Next, moving to case scenario 57. Considering discussion about Sukanya and Sushant, which of the following statement seems most appropriate? Let's see. So Das and Co, a firm of auditors, is offered appointment as auditor of a company. A prospective new client. CA Sukanya, one of partners, is dealing with new client. While meeting with officers of the company, she comes to know that Sushant, CFO of the company, was her classmate. In fact, both of them had started CA together. However, Sushant had left CA midway due to repeated failures and tried his luck to pursue MBA from one of the leading institutions. Now, audit of the company in which Sushant is working as MBA is offered to this particular audit firm in which Sukanya is one of the partner. Now, can this audit firm accept the engagement? There can arise a familiarity threat, right? Familiarity threat to the independence. So, audit firm can accept the engagement, but in order to overcome the familiarity threat, better some other partner is acting as an engagement partner instead of CA Sukanya, right? The same thing you need to select. Option A says above discussion is irrelevant. No, above discussion creates self familiarity threat, right? Next, the proposed offer should be accepted by firm. Engagement team may be headed by CA Sukanya. No, CA Sukanya can't head the engagement team. It creates a familiarity threat. Proposed offer should be accepted. Engagement team may be headed by different partner. Yes, option C is the correct option. Keeping in view request of company to be visibly associated with the company's new services, identify which type of threat is being faced by the audit firm. Let's see. During initial discussions, it transpires that company is going to launch new services in the field of weather forecasting. Such services would be available on website of company and micro weather information would be available on payment of charges. Company requests audit firm to be visibly associated with their marketing blitz. Marketing blitz means marketing campaign. So it seems company is going to launch a marketing campaign for their weather services, and company is asking auditors of the company to be visibly associated with the marketing campaign. Nothing but company is asking the auditors to promote their services. In such a situation, which threat it will create? It will create advocacy threat. Option D. Next, MCQ number 3. The previous auditors Walker and Co have not replied to communication of Das and Co, which fundamental principle of professional ethics is not followed by them. Basically, previous auditors were Walker and Co. Now, whenever new auditors join, they need to communicate with previous auditors. New auditors sent communication to Walker and Co, but Walker and Co, the old auditors, did not reply back. So, which fundamental principle Walker and Co did not Walker and Co have violated? They have not behaved professionally, correct? So, professional behavior, option B. Next, Das and Co have failed to advise company regarding audit of consolidated financial statements. Which fundamental principle of professional ethics is violated by Das and Co? So basically, company has to prepare consolidated financial statements, and Das and Co has to audit the same. Das and Co did not suggest the company about the requirement to prepare the consolidated financial statements. Now, which fundamental principle Das and Co violated? Professional competence and due care, correct or not? Das and Co audit firm should have all the professional knowledge to deal with the client. If audit firm did not suggest to the client about a particular requirement of law, then they are not having professional competence and they have not exercised due care, correct or not? So option D, professional competence and due care. Next, MCQ number 5. Which of the following statement is most appropriate regarding providing offer of work of IT services by auditors to the company? So, company has asked auditors to provide IT services also. Now, if auditor provides certain non-audit services, what will happen? Self-review threat will occur, correct or not? So, such an offer may create self-review threat. Option A is the correct option. Next case scenario 58. MCQ 1. Previous auditors Veer and Co did not reply to communication of Mohan and Associates. Which fundamental principle of professional ethics is not followed? We have seen in the previous case scenario also this type of MCQ. If previous auditors don't reply back to the communication made by the incoming auditors, then they have not complied with professional behavior, right? Option number C, professional behavior. Next, MCQ 2. Auditor did not carry out any other audit procedures to justify management's treatment of said tax matters under appeal in the financial statements. What is lacking on the part of auditor in such a situation? So, management is having certain tax related disputes. Auditor did not perform any audit procedures with respect to that area of tax disputes. So, here auditor did not exercise professional skepticism, correct or not? If at all any fraud risk is there, he need to critically assess it. He need to have a questioning mind. All that he did not exercise in this situation. So, professional skepticism has not been followed. Next, Mr. A was requested to provide accounting and bookkeeping services to Semi Private Limited. Identify the type of threat. Self-review threat will occur, right? If you only prepare books of accounts, you only do the audit, self-review threat will create. Next, Mr. Raj is confident that investment made by him is completely secure and there is no risk of any loss. Select the correct statement. Let's see, option A. Audited financial statements provide absolute assurance. No, they will not provide absolute assurance. Audited financial statements provide reasonable assurance. Yes. It does not guarantee complete accuracy. Yes. Option B is the correct option. Next, MCQ number 5. Mr. A was preparing documents and audit file in physical paper form, believing that it is compulsory to do so. Is it compulsory to prepare documentation in physical form only? Can't you prepare documentation? Can't you maintain documentation in soft copy? Yes, it is allowed to maintain documentation in soft copy also. You can maintain either in soft copy or in physical form as per your convenience, right? So, option A says audit file should be kept both physical and electronic. No. Audit file should be kept only in physical. No. Audit file may be kept in physical or electronic form as per your convenience. Option C is the correct option. Next case scenario 59, MCQ number 1. Considering dilemma of J described in case scenario, which of the following statement is most appropriate? Let's see what is the dilemma J is having. So, with respect to a particular audit plan and audit program have been duly documented. They have documented audit plan and program. Okay. However, during the course of audit, some information has come to the notice of audit team which requires a change in audit plan and could lead to revision of audit strategy. Okay. Now, J, junior team member, is pondering means having doubt over documentation requirements in this peculiar situation. See, whenever you have changed audit plan, audit program, you need to document the reasons why you have changed audit plan and audit program, correct or not? So, here auditor, he needs to document audit plan, audit program, and also the reasons why changes to audit plan and program has occurred. All these things need to be documented, right? Yes, sir. So, option D, if you see overall audit strategy, audit plan, and any significant changes made during the audit engagement to overall audit strategy or audit plan, and the reasons for such changes need to be documented by the audit team. Yes, option D is the correct option. Next, MCQ number 2. Guide K regarding the most appropriate statement concerning obtaining sufficient appropriate evidence as described in the case scenario. So, let's see. Basically, I guess you can answer this MCQ without reading case scenario also. Let's read the options. Sufficient appropriate audit evidence is to be obtained only in case of statutory auditor. No, you have to obtain sufficient appropriate evidence in the audit, in the review, in any other assurance engagement. In all the situations, you need to obtain sufficient appropriate evidence, correct or not? So, option A is wrong. They are saying only in audit you need to obtain sufficient appropriate evidence. Next, option B. Sufficient appropriate evidence is to be obtained in audit engagements, review engagements, and engagement involving examination of prospective financial information. Yes, option B is the correct option. Next, MCQ 3. Advise K regarding most appropriate statement in respect of documenting materiality. Let's see, this also you can answer without reading case scenario. Materiality of 75,000 needs to be documented. Yes, materiality of 75,000 you need to document it. This option looks correct only. Let us also read other options and we will select the best option. Performance materiality, which is to be set at a more than materiality level. Will the performance materiality be more than materiality level? No, it will be less than materiality level. Option B is wrong. Performance materiality which is set at less than materiality for the financial statements as a whole requires to be documented along with materiality. Yes, you need not you should document not only materiality, even performance materiality should also be documented. So, option C also correct. From option A and option C is having more information, more appropriate. So option C is the correct option. Next, MCQ 4. Which of the following combination best describes a three-party relationship in context of audit of a partnership firm? Basically, in the case scenario, the auditor is doing audit of a particular partnership firm. Now, in case of audit, there will be three parties, right? Three-party relationship is a audit. So now, who are those three parties they are asking? Let's see. Anuj Associates, this is the audit firm. Yes, this is one of the party. Management of Partners of Buddy Enterprises, this is the partnership firm for which you are doing audit. So management of Buddy Enterprises is also one of the party. And income tax authority, yeah, not only just income tax authority, all the intended users will be the parties to the in that three-party relationship. Third party is all the intended users, not just income tax department, right? So option A is not correct. Option B says individual team members. No, this is also wrong. Option C says Anuj Associates, yes, auditor, management of partnership firm, and bankers. No, bankers are one of the intended users, right? So whichever option contains all the intended users, that you need to select. Option D says Anuj Associates, management, and all the intended users. Yes, option D is more relevant, right? Option C and A also correct, but they are discussing only one of the intended user, but apart from them lot of intended users will be there, right? So option D is correct. Next, which of the following statement is true regarding drawing power on the basis of facts given in the scenario? Let's see with respect to drawing power. So value of stocks is 10 lakhs, okay, margin is 20%. So from value of stock you need to reduce margin 20%, it becomes 8 lakhs. So drawing power is 8 lakhs, right? So DP is 8 lakhs and you can withdraw up to 10 lakhs. No, you can withdraw up to 8 lakhs only. DP is 8 lakhs and you can withdraw up to 8 lakhs. Yes, option D is the correct option. Next, case scenario 60. MCQ number 1. In the audit of ABC Limited, which combination of circumstances primarily justified the auditor's decision to obtain additional audit evidence for inventory valuation? Let's see what has happened. ABC Limited is a mid-sized manufacturing company engaged in production of electrical components and spare parts. The company maintains significant inventory across multiple warehouses. During the audit of financial statements for the year ended 31st March 2025, auditor noted that inventory prices were highly volatile. So prices of inventory is very much volatile, and that discrepancies in inventory records had been reported in earlier audits. It seems discrepancy in inventory has been reported in earlier audits. Certain inventory items were also identified to be slow moving and required significant management judgment for valuation. So these three are the reasons, right? Price of inventory is highly volatile, and in previous audits certain discrepancies identified, and there is also lot of slow moving inventory. Based on these factors, auditor assessed risk of material misstatement of inventory value as high. In the course of audit, auditor performed inquiries with store managers, production head, and finance personnel to understand process for identification of obsolete inventory and valuation adjustments. While management represented that adequate provision had been made for obsolete inventory, stores manager indicated during the inquiry that certain obsolete inventory items were still carried at cost due to pressure to meet profitability targets. So auditor inquired the management, have you valued obsolete inventory at cost or NRV, whichever is lower? Management said yes, we have valued obsolete inventory at NRV basis only. But when you have inquired the same with one of the store manager, he said that to meet the pressure on profitability, we have valued obsolete inventory at cost basis only, not on a market value basis. So here what management is saying and what this store manager is saying, both are contradicting, correct? So responses you got for inquiry are contradicting. So because of all these reasons, auditor wanted to detailedly verify the valuation. You need to mention all those reasons only, right? So have you understood what they're asking in the question? See, in the audit of ABC Limited, which combination of circumstances primarily justified the auditor's decision to obtain additional audit evidence? Okay, because there are certain circumstances like price volatility, and in the previous year discrepancies noticed, and obsolete inventory valued at cost only. Because of these circumstances, auditor wanted to obtain more audit evidence. Okay, you need to mention these circumstances. So option B, prior period discrepancies, price volatility, and contradictory inquiry responses regarding obsolete inventory. All these has caused the auditor to obtain more audit evidence. Next, store manager's statement that obsolete items were carried at cost due to pressure to meet profitability targets most appropriately implies that auditors should conclude that issues relates only to operational inefficiency. Yeah? No, the issue is related to valuation. Accept management representation or no. Treat the information as an indicator of potential management bias. So here store manager told that the obsolete inventory is being valued at cost basis only instead of valuing at market value. So here management is showing biasness in valuation of inventory in order to achieve more profitability. So this information should be treated as evidence of management bias and modify audit procedures accordingly. Yes, option C is the correct. Next, in the audit of ABC Limited, after obtaining contradictory responses during inquiry and before designing substantive procedures, auditor decided to test controls specifically over approval of inventory write-downs and review of aging reports. So here auditor specifically wanted to review, verify, perform substantive procedures in the area of controls around controls specifically over approval of inventory write down. So with respect to writing down of inventory, is there a control of authorization that auditor wanted to check? Now this decision was primarily to determine, so why auditor has decided to check controls over authorization of write downs. So let's see, option wise we'll see and we'll select the best option. He wanted to check whether controls existed and operated effectively to prevent management from deferring write-downs of obsolete inventory to meet profitability targets. Yes, to check that management is not having, or management cannot defer writing down of inventory, to check that auditor is verifying whether controls are there over this area or not. Yes, option A is the correct option. Whenever the inventory becomes obsolete, immediately management has to write it down, correct? It cannot defer it. So to ensure that writing down whether proper controls are there in the organization or not, auditor is checking. Yes. Next, MCQ 4. After concluding that controls over identification and valuation of obsolete inventory were not operating effectively throughout the period, auditor performed procedures such as examining subsequent sale prices, physically inspecting slow moving items. So in the case scenario, what happened is auditor has concluded that controls over identification and valuation of obsolete inventory were not operating effectively. So management failed to identify the absolute inventory. So auditor performed some more procedures such as examining subsequent sale prices, physically inspecting slow moving items, and performing substantive analytical procedure. So why auditor has performed these procedures? Because since controls are not operating effectively, auditor want to obtain evidence whether management has done overvaluation of inventory. Did management overvalue the inventory? To obtain evidence about that, auditor has performed these procedures of checking subsequent sale prices and physically inspecting the slow moving inventory. So if you see option B, obtain direct evidence to evaluate whether inventory was overstated due to delay or inadequate write downs. For that purpose, auditor has verified subsequent sale prices or the physical inspection of slow moving inventory. Next, MCQ 5. Auditor identified that certain slow moving and obsolete inventory items continue to be carried at cost due to pressure to meet profitability target. This situation most directly affects which management assertion? Valuation assertion, correct or not? Management has not properly valued the inventory, so this will affect valuation assertion. So option D, valuation, because inventory may be overvalued as net realizable value has not been appropriately considered, right? Yes sir. Next case scenario 61, MCQ number 1. Considering description provided in case scenario regarding accounting income as per books of accounts and taxable income under income tax law, choose appropriate responsibility of Dhanush. Let us see what they are saying in the case scenario. So they are saying, see, during the course of audit, it is noticed by Dhanush that computers form significant chunk of PPE items in the financial statements of company. Okay, the company has taken useful life of computers consisting desktops for 3 years. However, depreciation charged on computers in financial statements of company is higher than depreciation allowable under income tax law. So under income tax law, see, under income tax law, under Companies Act, depreciation has been charged more in Companies Act. Depreciation charged on computers and financial statements of companies higher than depreciation allowable under ES. So under Companies Act, more depreciation charged, and Income Tax Act less depreciation charged. Because of that, what will happen? Income will be shown more in income tax, less income tax will be shown in the companies in the financial statements as per Companies Act. Because of that, what will happen? Tax, you will pay more tax as per Income Tax Act, but in the as per in the financial statements in the current year income has been shown less, correct, but in the next year the complete fixed asset should be charged over the period, right? So as the time passes in the upcoming years, the remaining fixed asset will also be charged as depreciation, right? So in the current year, as per Income Tax Act, more income is there, as per Companies Act, less income is there. But as the period, as the financial year passes, this situation will reverse, right? So when the situation reverses, in the current year you have paid more tax, na, that tax you have paid more will be claimed as asset for the upcoming years. So deferred tax asset will arise as per AS 22, accounting standard 22, right? So in this given situation, deferred tax asset will arise. So in accounting standard 22, you would have discussed this concept in depth, when deferred tax asset, when deferred tax liability will arise, right? So option A says that deferred tax liability will arise. No. Option B says the deferred tax asset is likely to arise as per AS 22. Yes, option B is correct. Option C also says the deferred tax asset only, but they are mentioning AS 29, which is wrong, right? Yes, sir. Next, second MCQ. Keeping in view description provided in case scenario, which of the following statement is likely to be correct regarding accounting treatment of cost of CDs and software acquired by company to run tests? Let's see. So during the course of audit, auditor notices that cost of CDs along with the software cost is treated as an intangible asset by the company. So if you see here the business model of the company has a substantial number of computers at each center to enable seamless experience for students appearing for standardized aptitude and language tests. Basically, company is doing a business of providing computer based examinations to the students. So it is having lot of computers at each centers, just like you will write this information technology exam and self-paced online module exam, just like that business they are doing. Now the company has acquired new identifiable software involving substantial expenditure for conducting tests during the year, which is expected to drive company's revenue in coming year. So it has purchased a software. At the time of taking a test, a CD containing software is run in each system. So software you cannot run it directly, it should be kept either in CD or in pen drive, right, for enabling students to take the test. Cost of CD without software is nominal. So what you will do, the cost of CD is nothing, is nominal when compared to the cost of software. So you will club the cost of CD into the software itself and you will treat it as intangible asset. So company has also done that only. Cost of CD along with software cost is treated as intangible asset. So the treatment done by the company is proper, right? So option A says company's accounting treatment of treating cost of CD with software cost as intangible asset is not proper. No, it is proper. Company's accounting treatment of treating cost of CD with software cost as intangible asset is proper. Yes. Option B looks good. We'll also read other options. Company's accounting treatment of treating cost of CDs with software cost as intangible asset is not proper or wrong. Company's accounting treatment of CDs as intangible asset not proper. No. Option B is the correct option. Next MCQ 3. As regards the discrepancies noticed in computer system on physical verification by management, as described in case scenario, which of the following statement is most appropriate? Basically, management has conducted physical verification of computers. While conducting the physical verification of computers, certain computers are there in the books of accounts, but physically they are not present. Okay, this is the situation that has happened. With respect to this situation, what are the which one is the correct option? You need to choose by reading the options. Let's see. Option number 1 says management has properly dealt with such discrepancies. However, Dhanush should bring it to light of engagement partner as it may result in modification to auditor's opinion. See, basically, if you see in the case scenario, when these items were physically verified by management during the year, it has resulted in material discrepancies and management properly dealt with such material discrepancies in the books of accounts. So no misstatement is there, management properly dealt that discrepancy in the books of accounts. Since management has properly dealt in the books of accounts, auditor need not modify the opinion, correct or not? But option A says auditor might have to modify the opinion. So option A is wrong. Next, management has properly dealt with such discrepancies. Yes, this is told in the case scenario itself that management has properly dealt with the discrepancies. Now, however, Dhanush should bring it to light of engagement partner as it entitles a specific reporting requirement for the auditor under Companies Act. Yes, under Companies Act, CARO 2020, specific reporting requirement might be there on the auditor with respect to TPE, material discrepancy, clause 1 of CARO 2020. CARO 2020 is nothing but part of Companies Act only. So option B is the correct option, even though management has corrected it in the books of accounts, properly dealt in the books of accounts, it should be brought to the notice of auditor because the auditor might have to report as per Companies Act. So option B is correct option. Next, which of the following statement meets requirement of law in respect of revenue from operations of the company? Let's see what are the revenue from operations of the company. So revenue of company during the year 23-24 is 50 crores. Okay. 45 crore from fees charged from students, 5 crore from sale of books. Okay. Besides, company also received 10 lakhs as interest on certain investments during the year. Okay, that is the income. Now what they are saying, they are saying revenue from operations 50 crore should be shown in the statement of profit and loss. Yes, this option looks correct only. Whatever the revenue that you have received, 50 lakhs, 50 crores, that should be shown in the profit and loss statement. Yes, option A looks good only. We will also read other options. Revenue from operations of 50.10 crore should be shown in statement of profit and loss. However, revenue from sale of books, fees charged from students and interest on investment should be disclosed separately in notes. Yes, option B is more appropriate. 50.10 crore should be shown as a P&L, as the income in P&L, and bifurcation 45 crore from courses, 5 crores from books and 10 lakhs from interest. That bifurcation you should show in notes to accounts. Basically, if you see, this interest income is there, na? Interest income is not revenue from operations, correct? Interest income is other income. So interest income should not be clubbed in revenue from operations, if you see. But in option B, they are saying interest income of this 10 lakhs also clubbed in revenue from operations, which should not be done. So option B is wrong, right? Because they are saying interest income should also be shown as revenue from operations. If you see option D, revenue from operations 50 crores should be shown in statement of profit and loss. However, revenue from sale of books and fees charged from students should be disclosed separately in notes. So option D is more appropriate, more correct when compared to option B, right? So option D is the correct answer. Let's see what ICAI has given. Yes, ICAI has also given option D, because in the option B, this 10 lakhs of interest income also they are saying to be shown as a part of revenue from operations, which is wrong, correct? So you should be very careful, you might get confused. So option D is the correct option. Next, company has taken useful life of desktops to be 3 years. Such a requirement is there in schedule 2 of the Companies Act, correct? So yes, prescribed under schedule 2 of the Companies Act. However, a company can choose useful life different from what is prescribed in schedule 2. Yes, you can also choose a different useful life than that prescribed in schedule 2. So option C is the correct option. Next case scenario 62. MCQ number 1. As regards audit of a branch of CDL Limited as referred to in case scenario is concerned, which of the following statement is most appropriate? Basically, in the case scenario, for the company for which auditor is doing, there are around 60 branches. Of that 60 branches, certain 5 branches are audited by branch auditor. So the concept of a branch audit is discussed in the case scenario. Now, in the context of a branch audit, which of the following option is the correct option? They are asking. You need to read the options and select the correct option with respect to branch audit. Let's see. Accounts of branch shall be audited either by company's auditor or by any other person qualified for appointment as an auditor of the company and appointed as such under section 139 of the Companies Act. In case of branch accounts are audited by a person other than company's auditor, branch audit report is sent by the branch auditor to company's auditor. Yes, of course, option A is correct option. This is the correct statement with respect to branch audit. Branch audit can be done either by the company's auditor or by any other person who is qualified to be appointed as auditor of the company, and the audit report of the branch audit should be sent to the company auditor. Yes, that is correct option only. So option A, you need not read other options. Other options will contain the wrong options. So option A is the correct option. Next, MCQ 2. After reading methodology for carrying out branch audits by Mr. D, which of the following statement is likely to be most appropriate? So if you see in the case scenario, what has happened? Mr. D is basically doing audit of branches. Since Mr. D is conducting audit of only 5 branches of company, he has not arrived at materiality level in respect of audit branches. So he did not arrive materiality for branches, it seems. Is that correct? No, you have to arrive materiality for branches separately. On the same lines, identification and assessment of risk of material misstatement has not been performed. Even assessment of risk of material misstatement also he did not perform, it seems. This is also not in line with the uh, auditing standards, right? Branch auditor should perform risk assessment also. He is of the view that the determination of materiality and identifying assessing risk of material misstatement is done for financial statements of company as a whole. See, you will do for company as a whole and even for individual branch also. You will calculate materiality, you will perform risk assessment, which has been not done by the Mr. D. So you can select appropriate option by reading the option C. Separate determination of materiality and identifying Romam is not required. It is required. Separate determination of materiality and identification of a Romam is required in respect of each branches. However, documentation for those matters regarding branches is not required. No, you have to document also. So separate determination is required, and he is required to perform substantive procedure as described in the case scenario in respect of audited branches and also maintain documentation. Yes, option C is the correct option. Let us also read option D, what it is saying. Identify assess risk of material misstatement required along with documentation in respect of each branch. However, materiality is required to be arrived only for financial statements of company as a whole. No, both materiality and risk of material misstatement should be done for branches and it should be documented also. Okay, so option C is the correct option. Next, third MCQ. Choose the correct statement regarding results of analytical procedure performed by Mr. D, summarized in table 1 in the case scenario. Let's see. Basically what we'll do is, here table what they are saying, they are speaking about inventory turnover ratio. So branch 1, branch 2, and in year 21-22 what was inventory turnover ratio of branch 1, branch 2, like that they have given for 3 years. What is inventory turnover ratio? Nothing but cost of goods sold divided by average inventory is the inventory turnover ratio. This will show how many times the inventory has been turned over. Okay, for achieving the sales that is shown, how many times the inventory has been circled, turnovered, is known as inventory turnover ratio. Okay, yes. Now if you see, they are asking which statement is correct. During the year 23-24, option A says inventory of branch 1 have moved faster in comparison to branch 2. Let's see, they are saying during 23-24 branch 1 moved inventory faster. So during 23-24 branch 1 inventory turnover ratio is 12 times, whereas for branch 2 inventory turnover ratio is 10 times only. So branch 1 moved the inventory faster when compared to branch 2. So first option itself is correct, right? So option A itself is correct. You need not read other options. Next, MCQ 4. Considering contents of email sent by company's auditor to Mr. D, which of the following statement is likely to be in accordance with the standards on auditing? Let's see what is the email that he has sent. So the company's auditor, main auditor, has also decided to use the work of Mr. D, that is branch auditor, with respect to financial information of 5 branches included in the financial information of the company. During the course of audit, company's auditor advised Mr. D by way of email certain significant accounting, auditing, reporting requirements and asked him to provide representation as to compliance with them. Yes, the company auditor can ask the branch auditor by sending certain points that needs to be verified by the branch auditor. So what the main auditor has done, he has sent certain significant accounting, auditing and reporting requirements that needs to be checked by Mr. D and asked Mr. D to provide representation with respect to same also. Now, irritated and surprised, Mr. D is of the view that such an email is beyond the rights of company's auditor. No, it is within the rights of company's auditor. Company auditor is having all the right to ask the branch auditor to provide representation that he has complied with certain auditing, accounting standards, requirements of auditing and accounting standards. So, the company auditor is within his right only. If you see option A says company's auditor can advise, yes, company auditor can advise Mr. D regarding certain significant accounting, auditing and reporting requirements and ask him to provide representation as to compliance with them. Yes, option A is the correct option. Next case scenario 63. Let's see MCQ number 1. Considering table given in the case scenario, which of the following combination is appropriate example for non-funded credit facility? We'll read the options and we'll identify which is the non-funded credit facility. Bill purchased and discounted is a funded facility. When you purchase the bill, you will give the money. See, funded facility means outflow of cash will be there. Non-funded facility means no outflow of cash will be there. In case of bills purchase, outflow of cash will be there. So it is a funded facility, not a non-funded facility. Next, again saying bills for collection, staff housing loans. Of course, it is a funded facility. So that is also not correct. Bills purchased and discounted, letter of credit. So letter of credit is non-funded only. Bills purchased is funded facility. So this is also wrong. Letter of credit, yes, it is a non-funded facility. There will not be any outflow of money. Next, guarantees issued is also non-funded facility. There will not be any outflow of money. So option D is the correct option. Next, moving to MCQ number 2. CA B's decision to perform both a test of control as well as a substantive test was taken after he had assessed the risk of material misstatement in financial statements to be high due to large number of small ticket size loans. Which standard on auditing deals with auditor's responsibility to design such a test? Auditor's responses to assess the risk of material misstatement. As per that standard only, auditor will design his substantive procedures, correct or not? So that standard is nothing but SA 330. Oh, what happened? That standard is SA 330. Just a second. So option B, SA 330. Next MCQ 3. Saurabh is unable to understand relevance of going through SMA jotting as on 30th November 2022. Which of the following statement is most appropriate in this context? See, what is the purpose of special mentioned accounts? The purpose is to identify the accounts that will turn from standard to NPA category at the early stage. At the early stage itself, you will be able to identify the account. That is the purpose of SMA jotting, special mention account, right? So if you see option D, it would help the auditor in identifying accounts which may involve downgrading from standard category to non-performing asset. Option D, that is a purpose. Next, case scenario 64, MCQ number 1. In point 1 relating to employee benefits, which among the following assertions are discussed respectively? Let's see. Point 1. Employee benefits expenses shown in books of accounts were actually incurred, nothing but occurrence assertion. Expenses in respect of all personal expenses were accounted for, nothing but completeness assertion. Next, expenses recognized during year 22-23 related to this year only, nothing but cut-off assertion. So assertions addressed are occurrence, completeness, cut-off. So occurrence, completeness, cut-off. So 2, 4, 3. So option B, 2, 4, 3 is the correct option. Next, do you think amount of dividend recognized as liability in year 22-23 as given in point 2 is that appropriate? Let's see what point 2 says. It was noted that a dividend to equity shareholders for the year 22-23 was declared in 15th April 2023. So, in which financial year you should recognize it as liability? In financial year 23-24, it should be recognized as liability, correct or not? As the dividend related to 22-23, same was recognized liability in the same year. Can you recognize it in the same year as liability? No, because it is declared in the next year. You should recognize liability of you should recognize the liability as the next year's liability, not the current year's liability. So first option says yes, so wrong. No amount should be recognized equally. Yeah, no amount should be recognized as liability in year 22-23, but it need to be disclosed in the notes to accounts of that particular year. Yes, this is the correct option. Liability need not be recognized, but disclosure has to be given. Next, question number 3. In relation to matter described in para 3 pertaining to debtors, which of the following assertion was verified by auditor? Let's see point number 3. Debtors constitute one of the major components of a company's financial assets. As part of audit procedure, verification was made whether company had made allowance for those debtors which were doubtful. Nothing but he is verifying valuation assertion. Allowance means valuation, because debtors should be calculated. Debtors reduce allowances, correct? So valuation assertion. Next, read point 4 and choose which assertion is not proved in this case. Let's see question number 4, point number 4. Asset additions during the year amounted to 50 lakhs. The payment in respect of these assets were made through bank account of the company. However, on scrutiny, it was found that some of invoices were not in the name of company. So, if some of the invoices are not in the name of company, means rights and obligation assertion, right? Point number 4. Rights and obligation assertion is not addressed there, not proved there. Next, MCQ 5. Choose the correct statement from the below pertaining to matter described in point 5. Let's see what point 5 says. Company was maintaining few bank accounts, including one foreign currency account. There was included in previous year file a paper in the previous year file a paper converting foreign currency amount held in bank account to Indian rupees at closing exchange rate. Okay, If you are having foreign currency, you will convert it into closing rate, correct? So company was required to restate said amount in accordance with requirement of AS1. No, AS11. Foreign exchange is dealt by AS11. So not this one. Company was required to restate said amount in accordance with AS11. By verifying it, auditor had verified completeness assertion. No, valuation assertion he is verifying. So valuation assertion AS11, option D is the correct option. Case scenario 65, MCQ number 1. As regards matter of balance in current account and related issues is concerned, which of the following statement is likely to be most appropriate? Let's see. So for first MCQ, see. During the year 20 to 23, firm was maintaining a current account with the branch of a public sector bank. Her audit plan had included procedure of confirming balance of a current account directly from the bank. So the auditor is doing audit of a particular firm. That firm is having a current account with a bank. Auditor wanted to obtain direct confirmation from the bank. Okay. As of 28 March 2023, firm had an urgent need to pay its utility bill amounting to 1 lakh rupees. However, due to insufficiency of funds, it has requested branch manager to get a check drawn on utility company cleared. Therefore, balance in current account of the firm in books of bank branch stood at 0.29 lakhs debit. Since the funds were not available, the 1 lakh check was cleared by the banker based on the request made by the company, and account balance went into debit of 92 lakhs. The firm, sorry, of 92,000. The firm had also issued checks in the evening of 31st March 2023 in anticipation of funds on next working day, that is 3rd of April 2023. It had also certain checks dated 27th March 2023 from its debtor lying with it, which were deposited in afternoon of 31st March 2023 in bank branch at request of debtors. Okay. Now there is a debit balance in the current account, correct? So bank should, the not bank, the company should classify it as liability, correct or not? So if you see, option A says should be classified as cash and bank balances. Option B also says cash and bank balances. No, since the account in the current, the amount in the current account, it has went into debit balance, you need to classify it as a current liability. We'll read option C and D, which one is most appropriate, we'll select. Amount of 0.292 lakh is required to be classified under current liability in the financial statements of the firm. Procedure of confirming bank balance directly from the bank alone is likely to constitute sufficient appropriate audit evidence. See, whatever the procedure auditor has used, sending direct bank confirmation is one of the audit procedure for obtaining audit evidence. That alone is not the audit procedure. They are saying that alone is likely to constitute sufficient appropriate audit evidence. No, apart from that, you should obtain some other audit evidences also. Just that one is not sufficient, right? So option C is not correct. Option D says amount of 0.92 lakh is required to be classified under the current liabilities in financial statements of firm. Procedure of confirming a balance directly from bank alone is not likely to constitute sufficient appropriate audit evidence. Yes, that alone is not sufficient appropriate audit evidence. That is audit evidence. But apart from that, you should obtain some other audit evidences also. So option D is the correct option. Next. Considering a matter of verification of inventories, which of the following statement is based on facts described in the situation and also in essence of standards on auditing? Let's see. Basically, if you see here in this case scenario, auditor has been appointed in May 2023. That means after physical inventory verification is conducted. Generally, physical inventory verification will be conducted before 31st March, right? So after 31st March, on May 2023, auditor has been appointed. So here auditor cannot attend the physical inventory verification, right? So if you are not able to attend the physical inventory verification, what other option you are having? See, option A says she should verify subsequent sale invoices of inventory. Yes, lying in the stock as at year end. Besides, she should also review stock records of year 20 to 23 and subsequent periods. Such evidence may constitute sufficient appropriate audit evidence. Yes, since you are not able to attend at the physical inventory verification, this will constitute sufficient appropriate audit evidence. Option A looks good. Let us also read option B. Option B says she should attend at physical inventory verification, not possible in the given situation. She should verify purchase invoices of inventory items lying in stock as at the year end. Stock records are not required to verify. Yeah? No. She should verify purchase invoice of inventory items lying in the stocks at the year end. See, purchase invoices, why will you verify? In order to get evidence about the existence of inventory as on 31st March, subsequently if they have been sold, that will give you evidence. Correct or not? Purchase invoices are related to previous one. She should attend physical inventory verification, they are saying not possible. So option A is the correct option. Next, question number 3, MCQ number 3. Identify correct statement on the basis of a description provided in the case scenario. See, we can basically, by reading these options, we can select the correct option without reading case scenario. See, purchase bills of FMCG goods, debit notes issued by the firm on debtors for GST short charged earlier during the year, and credit notes issued by the firm for extra price charged. All these are examples of internal evidences. See, purchase bill is not example of internal evidence, that is generated externally, so that is a external evidence. Debit note and credit note are okay, those are internal evidences. So option A is wrong. Again, they are saying purchase bill is example of internal evidence. Wrong. Option C says only debit notes issued by the firm on debtors for GST charged earlier during the year, and credit notes issued by the firm during the year on debtors to account for extra price charge in accordance with provisions of GST law are examples of internal evidence. Yes, purchase bill is not a internal evidence. Remaining credit note or debit note are example of internal evidence. Audit evidence obtained by the auditor is persuasive. Yes, this is also correct. So option C is the correct option. Next, case scenario 66. MCQ 1. Which type of audit is most likely to identify payments processed without proper approval from competent authority? Without proper approval means audit of sanctions, right? In case of audit against sanctions only, you will check whether this payment is having proper approval or not. So option B, audit of sanctions. Next, MCQ 2. Identify the type of audit to evaluate whether expected benefits of large scale infrastructure project were achieved or not. So the efficiency, effectiveness, this you will check in performance audit. So option D. Next, MCQ number 3. Which type of audit addresses the issue of funds being used from an account without a budgetary provision? So this is addressed by audit against provisions, right? So option A, audit against provision of funds. Next, case scenario 61. This case scenario 61, it is same as it is the case scenario 1 that we have seen. It got printed twice by mistake. So case scenario 67 is same as that of case scenario number 1. Next, case scenario 68. So MCQ number 1. Keeping in view request of company to be visibly associated with company's new services, identify which type of threat is being faced by audit firm. So in the case scenario, company has launched new services. Basically this one is also same. In one of the case scenario we have seen company is launching weather services. So weather forecasting service. So company will request the audit firm to be visibly associated with marketing efforts. There we have seen as a marketing blitz, right? So now here company is asking the auditor to promote its activities, right? Nothing but this will create a self advocacy threat, right? So option D. Next, MCQ 2. Previous auditors Royal and Co have not replied to communication of Ravi and Co, which fundamental principle of professional ethics is not followed by them. So the outgoing auditors have to respond to the communication of incoming auditors. Here outgoing auditors did not respond to communication that is made by incoming auditors. So this will it means that outgoing auditors have not complied with professional behavior, right? They have not behaved professionally. So option B. Next, third MCQ. Ravi and Co have failed to advise the company regarding audit of consolidated financial statements. Same this type of MCQ we have seen here. The auditor failed to advise the company that company has to prepare consolidated financial statements. So here auditor is not having professional competence and due care, option D. Next, which method is Ravi and Co using to facilitate the accumulation of the information necessary for proper review and evaluation of internal controls? So if you see here in the case scenario, firm is reviewing internal controls of XYZ Limited. He verifies the following things. So, or tenders called before placing orders, or purchases made in the on the basis of written order. Like this, certain questions are given, and these questions auditor is verifying. Nothing but this is a checklist, right? Audit checklist. So here he is using option C, audit checklist. Next case scenario 69. As regards the description of agricultural advance, which of the following statement is most appropriate in this regard? This kind of MCQ also we have seen. Kisan credit card. See, the bank provides a Kisan credit card loan to the farmers, and that amount is outstanding for 90 days, and the crop season for it is 3 to 4 months. Here bank has classified it as a standard asset. Is the classification of bank correct? Yes, it is correct, because in case of agricultural loans you need to classify the account as the NPA. If in case of short term loans, short duration crop loans, if the amount is outstanding for more than 2 crop seasons, right? Here 90 days rule should not be applied. So classification made by branch is proper, option C. This kind of MCQ already we have seen in one of the case scenario. Regarding taken over account from another bank, which of the following statement is correct? Basically this also we have seen in one of the MCQ. So with respect to taken over advance, approval is given by the branch manager, but actually approval has to be given by some immediate higher authority. So internal rules are not followed. Is this an issue? Is this an important issue and auditor needs to report upon this? Yes, auditor needs to report upon this. So it is a serious violation of laid down procedures of bank for sanction of advances and should be reported by auditor without fail. So option A is the correct option. Next, regarding drastic fall in revenue of company, which of the following is an audit risk? So if a company's revenue drastically falls, then there is a risk that company might not be able to continue as a going concern. If this revenue falls even in the further years also, then company might not be able to continue as a going concern. That is one of the risk that is involved. So option B, risk of going concern. Next case scenario 70. In the context of inquiries made by CA trustworthy, which of the following statement is true? If you see in the case scenario, we'll read it. CA Trustworthy has accepted audit of financial statements of a company, that is Precision Industries Private Limited, for the year 24-25. Company's annual turnover is 250 crores. As he is conducting audit of company for the first time, he started gaining knowledge of the business and its internal control to identify and assess risk of material misstatement. In this regard, he has made inquiries from certain personnel, including company's in-house legal counsel and various departmental heads. So as part of risk assessment, he is making certain inquiries. So he has inquired with Mr. A, head of internal audit department. He has inquired with John, in-house legal counsel. He has inquired with Mr. I, who is IT system head. So all these inquiries are as part of a risk assessment procedure, right? So inquiries from John F or in nature of substantive procedures are no, they are in the risk assessment. They are risk assessment procedure. Option B also says substantive procedure. These two are wrong. If you see option A says inquiries from John and F are in the nature of risk assessment. Only inquiries from John and F with Mr. F, based on information received from inquiry of Mr. John, risk assessment material in litigation or claim involving the company was assessed by him. It was also decided later to issue letter of inquiry to Mr. F, who is external legal counsel. So that is also one of the risk assessment procedure only. Sorry, inquiry letter to risk assessment procedure only. So this option looks good only. Let us also read option C. Inquiry from A, John and I. These three are in the nature of risk assessment procedure. If you see, when compared to option A and option C is more broader. So option C is the correct answer. Here in the option C, three people are covered. Mr. A, John, I, all are risk assessment procedures only. So all are covered in option C. So that is the correct option. Next, MCQ number 2. In which of the following areas CA trustworthy is unlikely to use internal auditor to provide direct assistance? Let's see. Basically, external auditor, he has also gone through internal audit report submitted to management and decided to use internal auditor to provide direct assistance to perform following procedures labeled as P, Q or S. So from these four procedures, for which procedures a statutory auditor cannot use direct assistance of internal auditor? Let's see. To vouch few expense bills, yes, for vouching you can use direct assistance. Trace transactions through information system, yes, you can use direct assistance because judgment is not involved in those areas and those are not high risk assessment areas, high risky areas. So you can use the work of internal auditor, direct assistance. Verify accuracy of aging of trade receivables. For this also you can use uh, direct assistance of internal auditor because much judgment is not involved. Next, to evaluate appropriateness of management use of going concern. So assessing whether management's use of going concern basis is that appropriate or not. In making that decision, judgment of auditor is involved. So in whatever the areas a judgment of auditor is involved, he cannot use the work of internal auditor or he cannot use the direct assistance of internal auditor. So for procedure, for yes, he cannot use direct assistance. So work stated at yes, option B is the correct option. Next, MCQ number 3. With regards to audit evidence obtained during the audit, which of the following statement is incorrect as discussed in the case scenario? Let's see. We can read the options and we can select the correct answer for this MCQ. Sales invoice and responses to inquiries from middle level IT system personnel are examples of internal evidence. That is correct statement only. Sales invoice is an internal evidence. Similarly, inquiries from middle level IT system personnel, whatever the evidence you get from the middle level IT personnel through inquiry, that is also internal evidence only. So that statement is correct only. We have to identify incorrect statement, right? So this is correct statement. Next, audit evidence obtained from inquiry of middle level IT system personnel is more reliable than observation of application of a few controls by CA trustworthy. No, audit evidence that you obtain through observation is more reliable than the audit evidence you acquire through inquiry, because if you inquire they will give information, right? You don't know whether the information that the other person is giving is correct or not, but when you observe, you yourself is observing the process or procedure going on. So the evidence that you get in observation is more reliable than the evidence that you get in case of inquiry. Got it? Yes, sir. So option B is the incorrect statement. Since it is an incorrect statement, this is the correct answer for our MCQ, right? Yes, sir. While selecting samples of trade receivable described in case scenario, which method is being used? Let's see how they have selected sample. So there were 100 trade receivables. So population is 100. Okay. It was decided to send external confirmation to 20 trade receivable. So sample size is 20. He chosen one trade receivable randomly, and after that every fifth, that means sampling interval is 5, right? So here they are using, if these terms are involved, sampling interval involved means interval sampling, or you can call it as systematic sampling, correct or not? So they have used systematic sampling. Option D is the correct option. Next, choose option showing correct values of population. How much was the population? 100. Sampling interval was 5. Sample size was 20, right? So 100, 5, 20. 100, 5, 20, option A. Next, case scenario 71. This case scenario 71, it is a repeated case scenario. So I'll not be covering this case scenario again. All the MCQs of this case scenario are already discussed in other case scenarios. Same Case scenario 72 also repeated case scenario. All the MCQs of this case scenario 72 are also repeated. So I am not going to discuss that again. Starting with case scenario 73 now. So MCQ number 1. Which of the following is a clear non-compliance committed by audit assistant in accordance with relevant standards on auditing? So we need to read the options and we need to say which is not as per the auditing standards. Let's see. Completing documentation within 60 days, that is as per auditing standards only. As per SQC 1, you need to complete audit documentation within 60 days, so that is proper. Next, using standard templates for work papers, this is also as per auditing standards only. Omitting reviewer's name and saving files in unsecured folders, this is not as per auditing standard requirement. So option C is the correct option for this. Next, MCQ 2. Which of the following is most appropriate response for the change in inventory testing sheet? So if you see here what happened, after signing the audit report, senior audit team member altered the inventory sampling sheet to reflect a different method without recording the reason or the date of change. See, you can alter the sampling sheet, there is no issue in that, but you need to record the reason for such a change and the date on which such a change has occurred. These things needs to be recorded. So if you see, the change can be permit the change as it will improve the audit quality. Yes, you can permit the change. This option looks good only. Let us also read other options and we need to select most appropriate option, right? Permit the change as outcome is not changed. No, outcome will change. Reasoning is wrong. Such changes should not be permitted unless reason and date are recorded. So when compared to option A and option C is more relevant, more appropriate. You can permit such a change, but until and unless reason and date are not recorded, reason for the change in the testing sheet or the method used and the date on which such change has occurred, until these things are recorded, you cannot change the inventory testing sheet. So option C is the most appropriate option. Next, MCQ number 3. The internal auditor discovered that software failed to charge 12% interest on overdue payments due to technical glitch. So software failed to charge 12% rate of interest due to certain technical glitch. Okay, now does reporting this situation fall under the scope of internal auditor? Now if you see, this is an internal control. You have coded the system in such a way that automatically it will calculate rate of interest of 12%. That is the internal control. That internal control has not worked properly. Should internal auditor report that failure in internal control? Yes, it is absolutely responsibility of internal auditor to report that failure. So yes, as it relates to the internal control failure, it needs to be reported. Option B is the correct option. Next, MCQ number 4. Whether statutory auditor can rely extensively on the internal auditor's work in the given situation where internal auditor does not report to higher management. See, if internal auditor doesn't report to higher management, then internal auditor cannot exercise independence. That much independence he cannot exercise, that much objectivity he cannot exercise if he is not made responsible directly to the top management. And the risk of material misstatements seems high. If the risk of material misstatement is high, then you cannot rely on the work of internal auditor, right? So no, the independence and objectivity are compromised. So option A is the correct option. Next, case scenario 74. MCQ number 1. What should CA Adhya do regarding inventory at warehouse that could not be physically verified due to flood? So see what happened in the case scenario. The auditor is doing audit. Now the company conducted its year-end physical inventory verification count on 30th March 2025. Inventory at one of its warehouses valued at 95 lakhs was excluded from the count as the location was not visited by him due to flood. So if you are not able to attend the physical inventory verification, you need to perform alternate audit procedures, right? So option C, perform alternate audit procedures to obtain sufficient appropriate audit evidence. Next, MCQ number 2. What should be CA Adya's conclusion regarding revenue recognized for sales billed on 30th March but dispatched on 2nd April? So bill raised on 30th of March, but dispatch of goods has happened on 2nd of April. Now, in which year revenue should be recognized? See, in order to recognize the revenue, whenever the risk and reward transfers, only then you need to recognize the revenue, correct or not? Now, if you see in the given case scenario, management is saying that revenue recognition is done at point of dispatch. So generally management recognizes the revenue at the point of dispatch, because management feels that ownership, risk and rewards transfer at the time of dispatch. However, CA Adya noticed that certain dispatches made on 30th March 2025 were billed, but the goods actually left the premises on 2nd April 2025. So here, since the actual dispatch happened on 2nd April 2025, revenue recognition should also be done in 2025, that is next year. So revenue should be deferred to April since ownership and control did not transfer before year end. Yes, option B is the correct option. Next, MCQ number 3. While verifying capitalized expenses of machinery installation, CA Adya notices 5 lakhs towards training and inauguration. What should she do? See, expenditure towards training and inauguration, should that be capitalized or should that be taken to revenue? That should be taken to revenue account, correct or not? So recommend for reclassification of 5 lakhs as revenue expenditure. Option A is the correct option. Next, MCQ number 4. Which of the following is not a valid alternate audit procedure in case of non-response from a debtor or creditor? So you have sent external confirmation to debtor or creditor. That debtor or creditor has not responded. Then what will be the appropriate audit procedure that you have to perform? So examine here they are asking what is not a valid alternate procedure. So of the 4 options, 3 options will be valid procedure, 1 will be invalid procedure. You need to identify that invalid procedure. See, examination of subsequent cash receipts or payments. Yes, if you did not receive response from debtors or creditors, you will examine subsequent receipts from debtors, subsequent payments to creditors. Through that, you will try to obtain audit evidence with respect to debtors and creditors as on 31st March. So this is a proper alternate audit procedure that you will perform. Review sales or purchase orders. Yes, this also proper procedure. Verification of board resolution for amount. For debtors amount, for creditors amount, there will not be any board resolution. Understanding? So this is not the proper audit procedure that you will perform. So option C is the correct option here. Next case scenario 75. CA Maya has bought stock in ABC Private Limited. So she has invested in this company and her investment could benefit from issuance of unmodified opinion in her audit report. So she is acting as auditor and she has invested in that company. It will create self-interest threat because this is related to financial aspect. So option A, self-interest threat. Next, Puneet, CEO, is requesting Ashi and Maya to modify the financial statement disclosures in a misleading manner. So actually the situation is one, but management is asking the auditors to report situation in a different manner. Which fundamental principle of professional ethics is being violated? Integrity is being violated, correct or not? If you get yourself associated with wrong information, knowing that it is wrong information, then you are lacking integrity, correct or not? That is the definition of integrity. So option A is the correct option. Next, MCQ number 3. Is the bank's decision not to apply NPA and income recognition norms to account of PV Limited valid under regulatory guidelines? Let's see what has happened actually. So PV Limited's account has seen no recovery for the past 18 months. However, bank has not applied NPA norms or income recognition norms to this account. Why? The management justifies this by stating that account is guaranteed by central government. Okay. And that NPA and income recognition norms are not applicable to central government guaranteed advances, and government has not invoked the guarantee. See, if central government has guaranteed the advance, then NPA classification is not applicable for provisioning purpose. Understanding? So, for provisioning purpose, NPA norms are not applicable, but for income recognition purpose NPA norms are applicable. So what they have done, for income recognition purpose also they have treated account as not NPA, which is wrong. Correct or not? So option A says bank is correct to the extent of not applying NPA norms for provisioning purpose. Yes. However, this exemption is not available in respect of income recognition norms. Yes. Option A is the correct option. Next, MCQ number 4. CWP traders offered its warehouse as security for the loan. CIC Bank created a charge on the warehouse. Which form of security has been created? So, if you are offering a warehouse as a security, then it will be created as a mortgage. Correct or not? So, the form of security that you are creating is mortgage. With respect to immovable assets, you will create mortgage. And whether bank is required to get stock audit done of cash credit account. See, if the cash credit taken is more than 5 crores, then stock audit is mandatory. Let's see how much is the cash credit limit. Cash credit limit is 4.5 crores only. Since it is less than 5 crore, stock audit is not mandatory. So you should say security created is pledge. Wrong. Security created is mortgage. Yes. And bank is required to get not required to get stock audit, because the cash credit is less than 5 crore. Security credit is pledge. Wrong. Security credit is mortgage. Yes. And bank is not mandatorily required to get stock audit done of cash credit account of CWP traders. Option D is the correct option. Now, case scenario 76. MCQ number 1. In the above case scenario of Nova Engineering Limited has clarified that assignment would be carried out in accordance with standards on auditing. So a particular assignment is there, that assignment will be carried out as per standards on auditing, it seems, which are applicable to audit of historical financial information. Okay. Based on engagement partner's statement, which of the following engagements would most appropriately fall within the scope of such standards in the present context? So they have given 4 different types of assignments. For which of this assignment auditing standards are applicable, you need to say. Okay. So option A says examination of financial projections. So for financial projections, SAE standards on assurance engagement are applicable, not auditing standards. Certification of future cost estimates, for this also auditing standards are not applicable, that is certification. Review of internal control procedure implemented for new revenue system, for this also auditing standards are not applicable. Audit of financial statements, yes, for audit of financial statements auditing standards are applicable. Option D is the correct option. Next, in the planning meeting described in the case scenario, engagement partner, basically in the case scenario a planning has happened, a meeting has been taken place for planning the audit. Now in that planning, engagement partner first established the overall audit strategy and then instructed audit team to develop detailed audit plan. Okay, that is correct only. First you will develop audit strategy, based on that you will develop audit plan after obtaining knowledge of company's business model and processes. Okay, in the context of situation, so if you observe what has happened in the case scenario is also explained here, making your task easy. So in the context of the situation described in the case scenario, primary reason for obtaining such knowledge before developing audit plan. So in order to develop audit plan, you need to obtain knowledge of business of the entity. Correct or not? What is the reason behind that? You need to select the appropriate option. First option says to enable the auditor to design appropriate audit procedures relevant to the entity's operations and risks. So the reason why you will understand the entity before developing audit plan is it will help you to develop audit procedures that are suitable for this business, correct or not? So yes, that is a correct option, option A. Next, MCQ 3. In the case scenario, audit team identified that new revenue recognition system could affect several items in the financial statements simultaneously. Basically, in the case scenario, what happened is company has changed the revenue recognition system. Because of a change in the revenue recognition system, it could affect several items in the financial statements. So overall financial statements, overall you can say overall financial statements, it will affect overall financial statements. Next, inventory valuation and revenue transactions involved specific risk relating to particular transaction balance. So with respect to inventory valuation and revenue transactions, specific risk is involved in particular transactions and balances. So at the assertion level, so here if you see, for the first point risk is at overall financial statements level, for the second point the risk is at assertion level, correct? So based on engagement partners explanation in the case scenario, which of the following correctly classifies these risks? Let us see. Option A says both risks relate to financial statements only. No, first one relates to financial statements, second one relates to assertion level. So first one relates to financial statements while second relates to assertion level. So option C is the correct option. Next, case scenario 77. Based on given facts in the case scenario, which of the following best explains implication of difference between class register? So in the case scenario, audit of a particular educational organization is taking place. Their auditor observed that in the class attendance register 620 students are there, whereas in the fee register 590 students only there. That means 30 students missing from the fee register. Because of this, what will happen? You need to select the appropriate option. Fee demands may not have been raised for 30 students appearing in the class register, right? So in the class register 30 students extra are there, but in the fee register only 590 students are there. So for that 30 students, for that extra 30 students which are not there in fee register, you might not have sent demand, fees demand, correct or not? So option A is the correct option. Next, MCQ 2. During the audit of Saraswati University, the auditor estimated hostel income based on 200 rooms, an 80% occupancy rate, a monthly fees of 6,000 rupees. So nothing but they have performed analytical procedure. The recorded hostel income was found to be materially high than auditor's estimation. So based on this estimation, auditor has arised. So what will be the, you need to perform 200 rooms multiplied by 6,000 per month multiplied by 12 multiplied by 80%. How much it comes? 200 multiplied by 6,000 multiplied by 12 months multiplied by 80%. So 1152,000. So 1 crore 15 lakh 20,000. So you have got 1 crore 15 lakh 20,000 as per your estimation. But if you see in the financial statements, room rent, hostel rent, yeah, it is 1.8 crore. So however, the hostel income recorded in the books is 1.8 crore, but as per our calculation we got 1.15 crore, 1.15 crore, correct or not? So there is a difference of roughly around 65 lakhs, correct? Now here auditor needs to investigate why that difference of 65 lakh has occurred. So option D, investigate the variance Variance means difference between amount recorded in books and your expectation. By examining supporting records, occupancy data and assumption used, and perform additional audit procedures as necessary. So you need to identify the reason for that variance, right? Yes, sir. Next, MCQ 3. Which of the following best describes analytical procedure applied by auditor to evaluate the reasonableness of hostel rent? So here you have performed analytical procedure. Which of the following four options best describes it? You have compared the relationship between non-financial and financial data, correct or not? Here, number of rooms, non-financial data; occupancy ratio, non-financial data; monthly fees is a financial data. So you have performed reasonableness test using non-financial data and estimate expected income, right? So option B is the correct option. That is the type of analytical procedure you have performed, not trend analysis. Okay. Next, fourth MCQ. With reference to the given facts, which aspect of examining expense is primarily affected when 75,000 spent on purchase of air conditioner is recorded under repairs and maintenance? Basically, in case scenario, what has happened is the organization has spent 75,000 on purchasing air conditioner, so it should be recognized as fixed asset, correct or not? But the management of the entity has shown it as repairs and maintenance. Is that correct? No. So here, which is affected? Whether expenditure pertain to current period, is that assertion being affected? No. Cut-off assertion is not affected. Classification is being affected, correct? Whether expenditure was supported by valid documents? No. Whether expenditure qualified as revenue and not capital expenditure? Checking this has been lacked in the given situation. So classification assertion has been made wrongly. So option C. Next, case scenario 78. MCQ 1. Considering the facts given in the case regarding the relationship between outstanding balance in cash credit account and drawing power determined by the branch, how should auditor evaluate status of account as on the reporting date? Let's see what has happened in the case scenario with respect to cash credit. So Ardent Precision Components Limited has been sanctioned a cash credit of 10 crore by a bank to finance its working capital requirements. As per the sanction terms, the borrower is required to submit monthly stock statements, on the basis of which bank computes the drawing power after applying margin on eligible current assets such as stock and receivables. So certain cash credit of 10 crores has been granted. During the branch audit as on 31st March, auditor observed that branch had computed the drawing power at 8.2 crore based on the stock statement dated 30th November submitted by the borrower. So borrower has submitted stock statement on 30th November. Based on that stock statement, the entity has calculated drawing power on 31st March. That means more than 3 months passed. The stock statement that has to be used for calculating drawing power should be maximum of 3 months period. It should not cross beyond 3 months, correct? So based on that, it has calculated 8.2 crore. First of all, you should not use this stock statement. Latest stock statement you should ask, right? However, outstanding balance in the CC account as on 31st March was 8.6 crore. And further examination of account revealed that outstanding balance had remained continuously above drawing power for more than 90 days. So since outstanding balance is more than drawing power for more than 90 days continuously, it should be treated as out of order, correct or not? So auditor needs to classify the account. So the account should be treated as out of order since the outstanding balance has remained continuously in excess of the drawing power. Option B is the correct option. Next, MCQ 2. While evaluating security position of CC account as on the reporting date, auditor noted that drawing power had been computed using stock information that was not contemporaneous. Not contemporaneous means not latest one. Latest stock statement you have not used, yes, with the reporting date, and that the borrowings in the account were already close to the level determined on the basis of primary security. Considering these facts together, Which of the following conclusion would be most appropriate? The borrowing position may not be reliable since it is being evaluated on the basis of outdated information regarding the primary security. Yes, so whatever the position that has been determined might not be proper because you have determined that position based on outdated information. So option A is the correct option. Next, MCQ 3. During the audit, auditor noted that a portion of inventory considered while determining the drawing power was stated to be lying at third party, third party warehouse, and also observed differences between stock reported to the bank and the stock appearing in the audited financial statement. So client told that some stock is available with the third party. See, this is basic one only. If the inventory is available with third party, what will you do? You will obtain confirmation from the third party, correct or not? So option C, obtain confirmation from third party warehouse operator regarding the inventory held on behalf of the borrower. That is the procedure that you will do, correct or not? The question is also asking same, what is the audit procedure that you will perform in the given situation to verify the inventory lying at the third party? You will send external confirmation. Next, fourth MCQ. The auditor accumulated the differences identified between stock reported to the bank and the stock appearing in the audited financial statements and noted that the aggregate misstatements was approaching materiality level determined for the audit. So, borrower will submit stock statement to the bank every month, correct? So in the stock statement, whatever the amount of inventory has been shown, that is not matching with the amount of inventory that is shown in the financial statements. Now this difference is there, na? It is nearing materiality level, it is crossing materiality level or approaching materiality level in the case scenario. Now management however decided not to make any adjustment in the financial statements. In light of these facts, what should the auditor primarily consider while evaluating implications for the audit? Here auditor needs to consider whether uncorrected misstatements together combined with detected misstatements, is it crossing materiality level? That needs to be seen by the auditor, correct or not? So if you see, auditor needs to evaluate whether uncorrected misstatements are material individually or in aggregate and consider the implication on the auditor's report. Yes, option B is the correct option. Next, MCQ number 5. During discussions on above matters, branch manager suggested that auditor should avoid reporting the irregularities so that borrower's banking relationship is not affected. Considering the situation described in the case, which of the following ethical principles should primarily guide the auditor's responses? So, even though there is something wrong in the financial statements, auditor, in order to maintain relationship with the banker, he is not reporting that misstatement. So here auditor is not exercising integrity, correct or not? And he is also not exercising objectivity. Whatever the facts are there, he is not considering it. So option A is the correct option. Auditor is compromising integrity and objectivity. Next, case scenario 79. RS and Co Chartered Accountants were appointed as auditors of X Limited, a telecom company regulated by the Telecom Regulatory Authority of India, and Y Bank Limited, a banking company regulated by Reserve Bank of India. Okay, why we are reading case scenario? We'll solve the MCQs directly. MCQ 1. In the planning stage described in case scenario, engagement partner emphasized understanding regulatory framework, identifying significant matters, determining materiality, and considering involvement of experts. Yes, all these are part of a planning stage only. In the context of this situation described above, primary rationale for such an approach is, see, same thing. The primary purpose for why auditor is considering these things is to ensure that planning includes understanding legal regulatory requirements, identifying significant matters, determining materiality, considering use of experts, and performing risk assessment procedure. Again, same point gets repeated. The reason behind it is the same thing, correct or not? Yes. Next, MCQ 2. In the case scenario, audit team identified that revenue recognition in X Limited and loan loss provisioning in Y Bank Limited involve significant judgment. Okay, so in these two areas, significant judgment is involved, it seems, and are susceptible to misstatement even before considering internal controls. Okay, so before, since there is lot of significant judgment is involved, there is a chance of misstatement occurring in that area before internal controls are established. This is nothing but inherent risk, correct or not? So option B. So based on facts described above, such risks are most appropriately classified as option B, inherent risk. So this is nothing but the definition of inherent risk, correct or not? The risk susceptibility of items to risk, provided there are no internal controls. That is the inherent risk definition, right? Next, MCQ 3. In the case scenario, the audit team identified misstatements but was unable to determine whether they arose due to fraud or error. Now, in light of engagement partner's explanation, which of the following best reflects the auditor's responsibility in such a situation? See, here they are asking auditor's responsibility. Auditor's responsibility is to identify and assess risk of material misstatement due to fraud or error, correct or not? To obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error. That is the responsibility of auditor. Auditor, as per SA 200, same responsibility you will write. So, auditor should obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error, and evaluate their impact in aggregate. So, that is the responsibility of auditor. Next, case scenario 80, MCQ number 1. Considering the absence of COTS means kitchen order tickets. So there is no kitchen order tickets. That means generally whenever customer comes to the hotel, the bearer will take the order, right? He will take the order in a particular device, a iPad or something will be there, and he will raise kitchen order ticket to the chef in the kitchen. So such kitchen order tickets are not there in the given case scenario in the hotel. And unexplained gross profit fluctuations and weak internal controls in restaurant operations. What is the most appropriate audit implication? See, kitchen order tickets are not there, and there is a fluctuation in gross profit ratio that is unexplained. Because of these things, what you will do, you will increase your substantive checking, correct or not? So increase substantive procedures and consider modification if discrepancies remain unexplained. So option A is the correct option. Next, MCQ 2. Given that discounted room rates lacked approval, so whenever on room rents discount is given to the customer, further the discount approval of higher authority should be taken, but in the given case scenario approval of higher authority is not taken, and occupancy records were not retained. So records related to occupancy is not present in the entity. What is the most critical audit concern? Here the concern is that, let's read options. Risk of overstatement of room revenue due to duplicate billing. Here what has happened, discount, unauthorized discounts has been given. If you give unauthorized discounts, there is a possibility that revenue might be understated, correct or not? Whatever the income is received, employees might take some of the income and show that discount has been given to the customer, so revenue might be understated, not overstated. Option B, risk of revenue leakage due to unauthorized discount. Yes, revenue leakage can happen. How? Employees might take over some of the money, right? And inability to verify completeness and accuracy of the situation, because complete occupancy records are not available. So option B is the concern of the auditor in the given situation. Next, MCQ 3. Where the auditor relied on internally generated reports and oral explanation due to missing primary records, how is the reliability of audit evidence best evaluated? Let's see. You need to identify the best option about reliability of audit evidence. Oral explanations are sufficient when supported by internal summaries. No, oral explanations are not sufficient. Internally generated reports are always reliable. No, only if internal controls are operating effectively, they will be reliable. Evidence is less reliable due to weak controls and reliance on oral representation. Yes, here auditor, because of relying just on oral explanation and internal controls are not proper, evidence is less reliable. Option C. Next, fourth MCQ. Considering facts of the case and that banquet invoices for pre-year end events were raised after year end. So for some of the events that has taken place before year end, For that events, invoice is raised after year end. Okay, but included in receivables. You have raised invoice after year end, but you have included in receivables. What is the most appropriate audit conclusion? So let us read what happened in the case scenario. If you see, in the banquet segment, it is observed that several events were conducted before the year end, but the related invoices were raised only after the year end due to delays in finalizing settlements. Okay, auditor noted inconsistency in accounting treatment, as in some cases revenue for such events was recognized in the current year without raising invoices, raising concerns regarding the existence of trade receivables. In other cases, invoices raised after year end were included in the receivables as at the reporting date without adequate supporting documentation. Further, proper cut-off procedures were not followed, as there were no reconciliation between event records and invoicing data. So what happened is, in some situations, for events that has taken before the year end and invoices raised after year end, company is recognizing income before year end. In some situations, it is recognizing after year end, even though event taken place before year end. So this situation highlights what? Receivables are understated due to delayed invoicing. No, you are including it in the receivables only. This is not the situation. There is a cut-off error affecting revenue recognition for period. Yes, this is happening. There is a cut-off error. There is a cut-off error leading to potential misstatement in trade receivables. Yes, this is also happening. So both, there is a cut-off error leading to potential misstatement of revenue and receivables. Once revenue affected, receivables also gets affected. Correct or not? Yes. So both are getting affected because of the situation that is given. Option D. Next case scenario 81. Considering the auditor's responsibility in relation to going concern as described in the facts, which of the following should be auditor's primary focus? Let's see. Objective of the auditor as per SA 570 going concern, they are asking. Directly you can answer without reading the case scenario. The objective of auditor is to obtain sufficient appropriate audit evidence regarding appropriateness of going concern basis and assess material uncertainty based on assumptions used. That is the objective of auditor related to going concern. Option A. Next, in the context of management suggestion that no disclosure is required unless insolvency is certain, which of the following approaches should the auditor adopt? So if you see in the case scenario, what has happened is, during discussions with the management regarding the financial statements, audit team raised concerns about adequacy of disclosures relating to company's ability to continue as a going concern, particularly in light of recurring losses, breach of loan covenants, and dependence on uncertain future cash flow. So because of these things, auditor is having doubt about the entity's ability to continue as a going concern. However, management is saying that, management strongly asserted that preparation of financial statements on a going concern basis was appropriate and that no additional disclosures were necessary. They argued that since the company had not initiated any formal insolvency proceedings, nor had any lender formally recalled loans or initiated recovery actions, there was no explicit requirement under the applicable financial reporting framework to disclose uncertainties relating to the going concern. So, here management is saying that because of these reasons, disclosure is required, like that nothing has been written in the financial reporting framework, like this management is saying. But here auditor should exercise his professional judgment, and based on the given situation, the that is recurring losses, breach of loan covenants, and dependence on uncertain future cash inflows, because of these situations going concern will get affected, right? Maybe as of now entity might be going concern only, but these situations needs to be properly disclosed in the financial statements. Correct or not? So here, even though as per rule disclosure not required, auditor need to apply his professional judgment. See, apply principle based approach and exercise professional judgment, considering substance over the form, and ask the management to disclose it. So option D is the correct option. Next, MCQ 3. Considering that this is the first year of audit and prior period auditors working papers are not available, along with the change in accounting policy, what should the auditor primarily ensured. So since this is the first year, with respect to opening balances, what is the responsibility of auditor? Responsibility of auditor is to ensure that opening balances has been correctly brought forward from the closing balances, and accounting policies have been properly consistently used, right? So option C, obtain sufficient appropriate audit evidence regarding opening balances and consistency of accounting policies. Option C is the correct option. Next, MCQ 4. Given the presence of optimistic management assumptions and high inherent risk, how should auditor approach the risk assessment? Let's see, base risk assessment only on quantifiable metrics or no? You should also consider qualitative aspects during risk assessment. Just relying on quantifiable measures is not correct. Apply professional judgment based on audit evidence and auditor's expertise. Yes, auditor here in this situation needs to apply professional judgment. Option B is the correct option. Considering the situations, you need to apply your professional judgment in doing risk assessment. Option D says rely solely on management representation. No, you have to apply your professional judgment. Option C says precise calculation of risk assessment you cannot do. You have to apply your PJ only. Next, MCQ 5. Based on depreciation issues identified in the case, which of the following is most appropriate audit conclusion? First of all, we'll see what are the depreciation issues that are identified. So further examination revealed that company owns aircraft used for leasing, which are depreciated as a single unit instead of separating significant components such as engines and airframe. So they have not followed component wise depreciation. Residual values have not been deducted while computing depreciation, which is wrong. Residual value should be considered. Additionally, method of depreciation was changed during the year without disclosure. See, you can change method of disclosure, but disclosure should be given. So they have done all wrong things. So if you see, option A says multiple issues exist, including non-component depreciation, ignoring residual value, and lack of disclosure of change in the method. Option A is the correct option, right? Yes. So by this, discussion of all the case scenario based MCQs are completed. In future, if ICAI gives any additional case scenario MCQs, new case scenario MCQs, that also I will be discussing, and I will be keeping it in the same playlist. So I told you already, in my YouTube channel you will find a playlist by name CA Inter Audit Marathon and Resources. Like this, you will find a playlist. In this playlist, you will get further case scenario based discussions if at all institute gives new case scenarios. Got it? And also, if you wanted to revise the concept, I have uploaded the marathon lectures of CA Inter Audit. Again, in the same playlist, you will find those marathons also. If you want to revise question and answers, all the past examination questions, all the past RTP, MTP, ICAI sources, everything, around 400 plus questions I have discussed and I have uploaded again in the same playlist. Okay, all that you can utilize, you can watch from this playlist. Got it? Yes, sir. So by this, I'll be winding up this video. We'll meet you in the next video. Until then, take care. Bye bye. See you.